Hello students, this is your Mr. GST who actually makes GST a good and simple tax for you, and I am with Marathon Part 2 for CA Inter. Before watching the marathon, 2 minutes please spend for watching the introduction. Sir, this video is useful for both who are preparing for September 25 exams as well as May 2025 exams, and this video is fully updated with May 25 amendments and September 25 amendments. Nothing to worry if you are watching amendments video which I will release in the month of July, something around that will be more than sufficient. So this is useful for both September as well as May 2025 exam students. Okay, sir, what is the material I have used in this? Sir, no matter whatever the material you are following already, no problem, go with that. Otherwise, I have my Oh My GST book. The purchase link is in the description, you can go with that. And in this marathon 2, I am covering all the chapters, balance chapters, exemptions, registration, tax invoice, Eway bill, payment of tax, TDS, TCS and returns. And next, any doubts with respect to this, you can contact me at my Instagram. CA Vishnuvardhan is the ID, or of course there is a Telegram channel, the link is given below. In that you will get my number, and through that also you can message me your doubts. Okay, so after watching the marathon, please understand from your end, this is purely revision of concepts, and here and there I have used some examples wherever required, but you should solve some good number of questions from ICA standard. So solve ICA model test papers, 8 papers are there, solve them as many as possible. Seriously, you'll get overall like a very good hands-on experience on the problem solving. Next, sir, for more updates for all these things, join my Telegram channel where the link is given in the description. And finally, marathon part 1 link, sorry, so marathon part 1 link is given here in the description, that you can check. And also Jan 25 May 25 amendments videos description is all, like link is also given in the description, go with that. And if any other videos you are expecting from me, please do mention in the comment box. Definitely I will try to bring those videos for you all. Okay, so happily enjoy watching this marathon. Thank you so much. First, understand exemptions. All the exemptions are whatever there in your chapter. For both inter and final, they are common, except some small extra points, all that stuff. So for inter students, when I'm uploading this, I will just delete all the exemptions for whatever related to final, and whatever is related only for you, that will be there in the video. And for final students, whatever, of course, everything will be there for you in the video, so nothing to worry. Now coming to the point, so first of all, exemptions, what I am doing is I am just splitting them into different categories. So first, let us assume the category is related to charitable and religious services, or the other category may be health related services, or next agriculture, and next education. Like this, the category wise I have segregated the exemptions, and of course the same thing has been done in ICA study material also. That is what I have followed. Nothing of my own sort, creativity, etc. Now coming to only thing, the presentation, all that stuff is my creativity, right? Now, first of all, in exemptions, you understand exemptions are RCM entries, whatever it is. Here, 3 things are very important. You should be careful with who is the supplier, who is the recipient, what is the nature of supply happening between them. If you are thorough with these 3 points, then only you can answer whether it is exempt or not, or whether it is taxable under RCM or not. So these 3 points very crucial, and we are splitting the entire entry in basis of these 3 things: who is the supplier, who is the recipient, what is the nature of supply. Now first, coming to the first category, charitable and religious activities. Sir, charitable and religious activities, if you see, if Section 12AA entity is what I call in our discussion. What do you mean by Section 12AA entity? The entity which is registered under Section 12AA of Income Tax or 12AB of Income Tax Act 1961. So if these Section 12AA entities are providing specified charitable activities, if they are providing specified charitable activities, then to any person who is the recipient, it doesn't matter. So generally, if they are providing specified charitable activities, again in the entry in detailings, recipient will change. Let us see that. So they should be providing specified charitable activities. Sir, what do you mean by specified charitable activities? Sir, number 1, it is related to public health. Related to public health, please understand charitable activity institutions, this Section 12A entities, if they are doing something without taking consideration, it is exempt under GST, there is no doubt. But if they are doing it by taking consideration related to public health, related to public health, what they are doing, they are taking care or counseling for terminally ill persons with suffering with severe physical and mental disability, or persons affected with HIV or AIDS, person addicted to dependence forming substance such as narcotic drugs, alcohol, Instagram, PUBG, all that stuff. So for these people, if they are taking care or counseling, that is a specified charitable activity. Or sir, we are not taking care or counseling, sir, we are creating public awareness regarding preventive health, family planning, prevention of HIV infection, all these things. Further, they are doing what? Public awareness programs, all that stuff. for which they are getting consideration, that is exempt under GST. No sir, they are providing an activity of advancement of religion, spirituality, yoga, like Isha Foundation or ISKCON temples, etc. Or they are providing advancement of educational or skill development programs related to abandoned, orphaned, homeless children. This is important here. Physically, mentally abused and traumatized persons or prisoners or persons over the age of 65 years. That means greater than 65 years and sorry, greater than 65 years residing in rural area. If they are residing in urban area, it will become taxable. So for these people, the third point, please be careful who are the recipients. The third point, sir, educational or skill development programs we are doing for the following people, that is abandoned, orphaned, homeless children, physically or mentally abused or traumatized persons or prisoners or even persons over the age of 65, that is greater than 65 years residing in rural area. For these people you are providing any educational or skill development programs for which you are charging a consideration. Next one, with respect to preservation of environment. With respect to preservation of environment, the watersheds, forests, wildlife, all these things that they are providing, then it is exempt under GST. But not all services provided by this section 12A entity are exempt. Only the specified charitable activities, whatever we have discussed, they are only exempt. Anything else is taxable. For example, in their trust or etc., they are allowing somebody to advertise, put up SBI credit card advertisement, LIC advertisement, all these things, sir, they will become taxable. I repeat, not all the activities are exempt. Only specified charitable activities are exempt. Now there is one small clarification also here, sir. There are some residential camps conducted by this people who are providing advancement of yoga, all that stuff. Sir, for yoga training, they are conducting some residential programs. Let us assume they are charging for 30 days winter yoga camp, some winter yoga residential program they are conducting. For that, they are charging 30,000. In that, they will provide you training in yoga and they will provide you food and accommodation, all these things. Sir, what is the taxability of this? Sir, providing yoga is the principal activity and accommodation and food are nothing but incidental for that. So, fully it will be exempt. No, sir, they are purely providing accommodation services separately, then it becomes taxable. So, if it is part and parcel of providing any advancement of yoga, spirituality, religion, then it is exempt. You know, composite supply. Otherwise, if they are providing it separately, then it is exclusively accommodation services, all that if they are providing, then it is taxable. Hope it is clear. Next, any person. Here, any person means we are talking about religious heads conducting any religious ceremony like marriage or any other housewarming ceremonies, or there will be naming ceremonies like that. Any religious rituals are conducted by religious rituals, further they are getting consideration, it is exempt under GST. Next, sir, not only that, sir, as I told, paying the professional fees to priest for conducting a marriage, 10 lakhs, all that, it is exempt under GST. So not only that, sir, here this people who are registered under section 12A or 12AB or 1023C, 1023BB, all these things, as a religious or charitable trust, what they are doing, they are providing the religious presence on rent. If they are providing religious presence on rent, please understand, if it is rooms per day less than 1000 rupees, it is exempt. Greater than or equal to 1000, it is taxable. So I have given here the table if you see properly. So for this, what if they are providing, what is the service? Renting the rooms. Renting the rooms means less than 1000 per day, exempt. Greater than or equal to 10,000, taxable. Sir, kalyana mandaps or community halls per day less than 10,000, exempt. Greater than or equal to 10,000, taxable. Sir, shops, sir, they are providing it on monthly basis rental, then less than 10,000 per month, exempt. Greater than or equal to 10,000, taxable. So that is another one. Next, sir, there are companies like Kuman Mandal Vikas Nigam Limited and Hajj committees and the state Hajj committees, sir. Sir, these people are conducting religious pilgrimage, which is facilitated by Government of India under bilateral agreement. Kuman Mandal Vikas Nigam Limited, they will conduct this pilgrimage to Kailash, Manas Sarovar, all that, and this, you know, Hajj committees will be providing this religious pilgrimage to Makkah, all that. Further, they are charging consideration that will be exempt under GST. Clear? That is what the concept. Next. Sir, the next category is regarding, sir, I am an individual, sir, I am providing training or coaching. This is important here. We are not talking about performance. We are not talking about performance. We are talking about training. So, I am a singer training you how to sing, and I am charging 1 lakh rupees fees per month. So, for each student per month, I am charging 1 lakh rupees. Is it taxable or exempt? Exempt under GST, provided it is provided by, supplied by individual. So, any individual providing training or coaching in recreational activities relating to arts or culture. Relating to arts or culture. Arts or culture means what? So, it can be dance, music, painting, sculpture making, literary activities, theater of any school, any tradition, any language. That is important. Okay. So, further they are providing training now. Whatever the fees they are taking is exempt under GST. I repeat, here we are talking about training or coaching. We are not talking about performance. If I go and sing in a concert and if I am getting 10 lakh rupees for that, that is taxable. We are not talking about that. We are talking about we are training or coaching people in this recreational activities. And one interesting thing is that it can be in any school, any tradition, any language. Okay. Coming to section 12A entities, sir, section 12A entities are also training, sir, coaching, sir, but they are training or coaching in sports to any person. That is also exempt. Here, the difference is, please understand, sir, first one, training or coaching in arts or culture should be provided by individual. Second one, training or coaching in sports should be provided by section 12A entity only, not by individuals. Okay. Next. The services provided by specified charitable activities, section 12A entities in the form of specified charitable activities, we have seen exemption. That means provided by the section 12A entity, we have seen exemption. There is no exemptions provided to religious trusts or charitable institutions. Nothing but simple, as we are discussing. Stay focused on who is the supplier, who is the recipient, and what is the nature of supply, and we are done with that. Okay, so category 1, specified charitable activities, over. Next one, we are going with category 2, agriculture related services. The agriculture related services, you can understand, any person to any person. So they are providing loading, unloading, packing and warehousing of rice, that is exempt under GST. Next, the loading, unloading, packing, warehousing of minor forest produce like agriculture, turmeric, honey, etc. to any person is also exempt under GST. Not only that, sir, storage or warehousing of cereals, pulses, fruits and vegetables, this is also exempt under GST. Now, the interesting point, you know already, sir, agricultural produce, sir, first of all, agriculture related activities means, sir, what is the meaning of agricultural produce? We should understand. Sir, the meaning of agricultural produce is, first of all, understand, sir, agri produce means something produced by cultivating the land, something which is produced by cultivating the land. So, by the cultivator, and there should not be any other process done on that. If that is done also, only the cultivator should do, nobody else should do. Even if cultivator is doing also, he should not make anything which makes it lose its essential or alter its essential characteristic, or making it marketable in the primary market only. He should make that process. Otherwise, it is not an agricultural produce. That means simple, sir. First of all, agricultural produce means should be cultivated out of land. No other person should touch it. That means nobody else should carry out any process on that. Till that, it is called as an agricultural produce. If anybody is touching or processing it also, that should be a cultivator. Cultivator also should process it in such a way to call it as still agricultural produce. First, it will not alter the essential characteristic. Number two, it is only, that process is only carried out to do that for primary market. Sell that product in primary market. That is what the concept. No, sir, for example, you are having paddy, you have cultivated paddy. Now you are taking it to the rice mill. In the rice mill, they are processing it. Who is processing? A person other than cultivator is processing. So rice cannot be called as an agriculture produce. Please understand that. That means that as long as nobody else other than cultivator is touching it, it is an agricultural produce. Even if cultivator touches and it loses the essential characteristic, for example, the farmer itself is doing tomato sauce in the farmland, then he has extracted tomatoes and he's making tomato sauce in the farmland. He's making potato chips in the farmland, or he's making some jaggery in the farmland. Can you call it as an agricultural produce, or in the farmland by the cultivator only? No, no, no. Even if the cultivator is doing, it should not lose its essential characteristic. That is the key point here. Okay. So if anything is done, that means something is produced from farmland. If somebody else does some process, it is not an agricultural produce anymore. For example, if you take vegetables, sir, vegetables are harvested. After harvesting the vegetables, some other persons other than cultivator will do some waxing or pre-ripening, pre-cooling, all these type of activities. Now I cannot call this anymore as an agricultural produce, because somebody else has carried out some process on that. Okay, so that is what the point. Fine, coming to the point, sir, coming to the point. Sir, agriculture related activities. So here, you know, cultivation of plants, rearing of all life forms of animals, rearing of all life forms of animals except horses. Horses will not be treated as agricultural activity. So except horses, anything you do, pisciculture, sericulture, floriculture, horticulture, forestry, rearing of pigs, cows, cattle, buffaloes, sheep, even fishes, silkworms, all that stuff, every life form except horse, okay, that will be treated as agricultural activity. And now all the agricultural operations which are directly related to production of any agricultural produce, example, cultivation, harvesting, threshing, plant protection, testing means soil testing, seed testing, all that stuff, supplying farm labor is also exempt under GST. Any process, as I already told you, carried at an agricultural farm which do not alter the essential characteristics of agricultural produce but makes it marketable only in the primary market, like tending, pruning, cutting, harvesting, drying, cleaning, trimming, sun drying, fumigating, curing, sorting, grading, cooling, bulk packing. All these things are agriculture related activities, and they are carried out at farmland, and they will not alter any essential characteristic of the agricultural produce. Please understand. So all these things are what exempt under GST, right? Coming to fumigation, here one small point, sir. Fumigation, earlier if you see, fumigation will be carried out at farmland also, at warehouse also. Earlier if it is carried out in warehouse, there was exemption, but now there is no exemption. So fumigation in farmland is exempt, and in warehouse it is taxable. Remember that. Next, not only that, sir, if you are renting or leasing any agriculture related machinery, like along with vacant land or whatever it is, that is also exempt under GST. Not only that, sir, loading, unloading, packing, storage, warehousing of agricultural produce. That is why, see here, already there is an exemption for loading, unloading, packing, storage or warehousing of agricultural produce. But rice is not an agricultural produce, so they have given separate exemption entry. Okay, cereals, pulses, fruits and vegetables also they have given separate entry. Why? Because that is the reason, sir. If somebody else is doing something on that, it will lose the, it will not fall within the definition of agricultural produce, sir. That is the reason. Okay, next, sir, as I was telling, agricultural extension services like scientific research, farmer education or training, all these things are exempt under GST. Or any process, see, it is taxable when, sir, if it is altering the essential characteristics or making it marketable in the retail market. For that purpose, if you are doing the process, then it is taxable, sir. Okay, so that is what we have discussed here. So agricultural extension services, like, see, where it will be focusing on farmer education or training courses with Kisan centers, farm visits on farm trails, Kisan melas, Kisan clubs, advisory bulletins. Like this, there will be providing various activities and services provided by the agricultural produce marketing board or committee. Services provided by agricultural produce marketing committee or board, whose main agenda, APMCs, are set up by state governments to make sure the farmers are getting various facilities for selling their agricultural produce and also getting the minimum support price whatever is needed. So for all these things, this board has been set up. Okay, so they are providing services. So these services like facilities, amenities like sheds, water, light, electricity, grading facilities provided to farmers, all these things, sir, this is exempt under GST. But understand, guys, if any other service they are providing which are not directly related to cultivation of plants, all that stuff, and rearing of animals, will be liable to GST. That means, see, for example, here they will be renting out some shops or other properties for commercial purpose. They might be having some properties, so that they will be renting out all that stuff, sir. That is taxable, sir. That is taxable. Next, if these bodies are providing something directly related to this agricultural produce, all that stuff, then it is fine. But anything else, any commercial properties for commercial purpose, if at all anything they are renting out, that will become taxable. Next, as we have seen, processed products like tea, that is black tea, white tea also. See, if you have drank that white tea, tell me please in the comment box. Coffee beans, coffee powder, pulses, jaggery, processed spices, processed dry fruits, processed cashew nuts, all these things will fall outside the ambit of agriculture produce definition. So all these things are taxable. But sir, there are certain things like whole pulse grains, whole gram, rajma, etc. These are covered in the definition of agricultural produce. So relating to that, it is exempt. Next, not only that, sir, if any person is providing intermediate production process as job work related to cultivation of plants or rearing of animals, that is also exempt under GST. And as we have already discussed, sir, there is a clarification here. There is clarification we have already discussed, sir. Milling of paddy into rice is not an intermediate production process related to agricultural produce or cultivation of plants, all that stuff. So milling of paddy is taxable. That is what the clarification given by the department. I repeat, milling of paddy into rice as an intermediate process cannot be taken as intermediate production process related to agricultural produce, because rice is not an agricultural produce. So milling of paddy into rice is taxable. Next, artificial insemination of livestock other than horses, that is also exempt under GST. I repeat, artificial insemination of livestock is also exempt under GST other than horses. Okay, so that is what the concept. So with this, we are done with agriculture related services. So the next one, if you see educational related services, before going to educational related services, we should understand the definition of educational institution. Educational institution definition has 3 points, guys. Number one is nothing but the preschool education up to higher secondary school or equivalent. So we can say play school, preschool, all the stuff. Up to 12th, we can say that way. So I am calling this as EI1. EI2 is nothing but who are providing education as a part of their curriculum for obtaining a qualification recognized by any law. That means Indian law. Okay. So for timing in force. UGPG colleges, engineering colleges, MBA colleges, all that stuff. So we can take that way. I am calling this as EI2. Next, education as a part of any approved vocational educational courses. So I am calling this as EI3. You know, there will be like ITA colleges, etc., which are providing vocational educational courses. Sir, these are three educational institutions: EI1, EI2, EI3. For our clarity, please remember that way. Educational institution definition has 3 points. So one is preschool up to higher secondary school. Next, any educational qualification for recognized by Indian law. Next, number 3, as a part of their curriculum. Okay, that means all these CA coaching institutions or these IIT exam coaching institutions, NEET exam coaching institutions, IAS coaching institutions, all these things cannot be called as educational institution. Please understand that. Okay, so that is what the concept. Okay, fine. Now, sir, here, not only that, one interesting point is, sir, they have also told generally central and state educational boards are also treated as education institution only for the limited. That means your CBSE, state boards, etc. will be there. No, those boards are treated as educational institution only for limited purpose of providing services by way of conducting examination to students. Apart from that, it cannot be treated as educational institution. That is why exam fees paid to the central or state boards are exempt under GST. Okay. Now coming to the point. So first we are done with education institution definition. Let us come to the exemption here. Sir, when you see the exemption, sir, what the exemption says? Sir, exemption says, sir, I can divide the exemption into here two things. One is sales by the education institution, the other is purchase by the educational institution. If you see, there are two cases where educational institution is a supplier. Sir, where education institution is a supplier, they are providing any service to their students, faculty, staff exempt under GST. I repeat, any service provided by educational institution to their students, to faculty and to staff is exempt under GST. Same way, these educational institutions are conducting entrance exams for the people who wants to become their students. They are not actually their students, they want to become their students. For such people, they are conducting the entrance exam, that is also exempt under GST. So these are the two cases where education institution is the supplier. Okay, if they are providing their services, then it is exempt under GST. So that is why I told you central and state educational boards are also treated as what? Education institutions for conducting, for the limited purpose of conducting examination to students. So they are charging fees, exam fees from the students, that is also exempt under GST. Okay. Now coming to next category where educational institution is the recipient. Education institution is the recipient. Sir, education institution is the recipient here. If you see, sir, when education institution is buying the services of transporting their students, faculty, staff from any person, is exempt under GST. But this exemption is only for education institution 1, EI1, who is providing education as a preschool or up to higher secondary school or equivalent. For them only this exemption, transportation of students, catering services, security, cleaning, housekeeping performed in such education institutions. Sir, these are what? These things, sir, these things are what? Exempt only for EI1, sir. If it is provided to EI2, that means UGPG colleges or any ITA colleges, vocational educational courses, for those people, if they are provided, it is very much taxable. Please understand that. So here, transportation of students, faculty, staff, important point, this please focus here. The transportation of students, faculty, staff, it is exempt under GST. And not only that, catering provided, including midday meal scheme program, all that stuff, that is also exempt. And if you remember, sir, school spelling, you just remember, sir, school spelling, S for security, C for cleaning, H for housekeeping. These should be provided in such educational institution. For example, there is any function, annual day program of school happening outside the college or school, sorry, outside the school, somewhere in the auditorium, there they are providing security, cleaning, housekeeping services. It is very much taxable. But please understand, these exemptions are available only for EI1, only for EI1. If at all they are provided to EI2, EI3, that is very much taxable. Please understand that. Fine. Next one, what is the next one? Sir, any service related to any service. This one is again important. Please be careful here. Sir, services relating to admission or conduct of examination. If education institutions, all EI1, EI2, EI3, if they are buying any service which is in relation to admission or conduct of examination. See here, for example, sir, for providing the admission or conduct of examinations, sir, there are input services like online test service or result publication or printing the exam notification, printing the admit cards, all that stuff, sir. Even the boards, educational boards or some institutions EI1, EI2, EI3, anybody are paying to professors for setting the question papers, are paying to professors for valuing the answer sheets, all that stuff. So any service which they have taken, they are taking the education institutions on rent, they are paying rent for the exam halls, all that. Sir, any service which we buy, for what purpose? For conducting the exam. Sir, I am an education institution, I am EI1, EI2, EI3. What is that I am doing? I am taking services. What are the services I am taking? Any service which is in relation to admission or conduct of examination, those services are exempt under GST. So please be careful there. Okay, so that is another point. Next, coming to the next one, sir, another purchase is, sir, online periodical journals, online educational journals, all these things, sir. That one is exempt only for EI2. For EI1, EI3, it is not relevant. So that is only for EI2. That is where you are providing education as a part of curriculum to obtain a recognized qualification. Engineering colleges, UG, PG colleges, they are buying online periodical journals, online educational journals, all that stuff. Then obviously it is exempt. But for schools and this ITA colleges, it is taxable. Next. So here I have mixed up all the clarifications, also given everything related to education sector. And now, sir, normally these educational boards we have discussed, no sir, these boards will provide accreditation to any institution or professional, sir. So for an accreditation fees or registration fees, what they are doing for providing that, that is not something provided to students, faculty, staff, all that stuff, so that is very much taxable under GST. That is another clarification. I repeat, boards are giving accreditation. You will be seeing on schools or any college buses and all affiliated to so and so university, accredited by so and so university or so and so board, like that. Such type of things, whatever provided, will be taxable under GST. And next, there was one more doubt here, sir, with respect to only government ITA colleges are exempt. That means providing vocational educational course approved, you told. No, that will be provided by government and that will be provided by private ITA colleges also. When it is exempt, sir, when it is provided by only government or also private. Sir, if you get this doubt, you should also get the doubt when only government schools fees is exempt, like private schools fees is taxable, like that. You should get the doubt, sir. It is not like that. Both government and private ITA colleges will enjoy the exemption. Okay, hope I am clear with this. Shall we continue? I repeat, we are done with the entry. We are going with the clarifications here and there. Next, sir, there are residential schools, sir. There we are providing lodging and boarding, sir. That means we are charging hostel fees, everything. As I told you, any service provided to students, faculty, staff is exempt. Sir, this hostel fees is also what part and parcel of their education service only. So, lodging and boarding provided is a composite supply. So, principal supply is education and hence it is exempt under GST. That is one clarification. Another clarification is, there is this one. Next, sir, the next clarification here, if you see, sir, it is with respect to, sir, some education institutions are providing bundled supplies, sir. That means they are providing two dual qualifications. When they are providing dual qualifications, what is the tax treatment, sir? Please understand, when they are providing dual qualification, it is nothing but, sir, for single fees they are charging. If dual qualification, dual fees, like separate invoices, separate receipts they are giving, then you will tax them accordingly. If it is exempt, it is exempt, recognized by law, all that stuff, exempt. If it is not recognized by law, it is taxable. So now, for example, if you see, sir, you are joining a degree college where they are providing BCom plus ACCA course or BCom plus CA coaching, or in schools you will be seeing nowadays school fees, and they will also providing from LKG itself they will train in IIT coaching or NEET coaching, correct? Do you remember that? So that way, sir, school fees is separate, IIT coaching, NEET coaching is separate, okay, but they are clubbing that. Then we have to go with composite supply or mixed supply concept, sir. If they are charging separately, it will be taxed accordingly, but if they are, as I told, if they are charged separately, then will be assessed separately. But if they are mixing them both, they are charging one fees for both school fees and IIT coaching both together, they are saying 10 lakhs per annum. Then, sir, this is bundle but not naturally bundled, correct? So this will be treated as mixed supply. So entire package will become taxable because school fees is generally exempt, but these coaching classes fees are taxable. So this becomes mixed supply, which attracts highest rate of tax. So it will be fully taxable. Next. Sir, in schools, they are providing any extracurricular activities, sir, like for well-being of the students, etc., etc. For example, some small music or dance classes within the school timings or college timings itself. They are nothing but treated as naturally bundled and will be treated as composite supply and hence exempt under GST. So that is another point. Next, sir, IIMs are providing some programs, sir, where they are giving certification, etc., etc., some short duration courses, all that stuff, whether we can enjoy the exemption. Then they have clarified here, if it is a long duration program, that means 1 year or more, greater than or equal to 1 year, if you are providing that, then that will be exempt. But if you are doing short duration programs where it is less than 1 year, then it will be taxable. Okay, that is another point. Next, the canteen or mess facility provided by education institution to students. Sir, if it is provided by education institution to students, faculty, staff, obviously we have seen any service by uh, educational institutions to student, faculty, staff is exempt under GST. So this is also exempt under GST. But sir, if they are outsourcing it to a different person and that fellow is running a canteen and that fellow is paying consideration to schools, then it is taxable. Or sorry, then we have to see catering services. We have seen no in purchases. If it is up to education institution one, then it is exempt. Otherwise, it is taxable. No, sir, that canteen fellow, whoever is taking the contract, he is providing catering services and he is charging full bill to the students only, then it is taxable. That means the catering service, school only providing to students, canteen, all that, exempt. School is outsourcing it to somebody, so they are directly selling to students, then it is taxable. Now, the school is providing food, further they are buying catering services from outside fellow. So when they are buying catering services from outside fellow, sir, we have seen catering services purchased by EI1 is exempt under GST. So if it is purchased by EI2, EI3, it is taxable. Am I clear? Next, sir, education institutions will be charging this for campus placements. This IITs, IIMs, what they will do? They will charge from the companies placement fees to come and do campus interview in their colleges, all that stuff. So for that, these companies will pay placement charges and enter into the campus for doing campus recruitment or drive, whatever it is. So such charges are taxable. They are not services provided to students, faculty, staff. Okay, companies are paying consideration for the education institution to do the campus recruitments. Next, sir, maritime training institutes and their training courses are approved by DG, Director General of Shipping. So all these things are exempt under GST. Okay, because they are also educational courses only. Fine. Next, a small point. I think I have this doubt somewhere. Fine. So listen, and one more thing, see, I have given for purchases by educational institutions. I have given a comprehensive example here. So once pause the video and just go through this example. A very good example where I have covered all the possible scenarios, all that. So mostly, so just check this. Pause the video and go with this. Next, see, there is one more point here regarding catering services, sir. For Anganwadi schools, if you remember, Anganwadi schools are also what, educational institutions? Sir, Anganwadi schools are also educational institutions. So please understand, Anganwadi schools are covered as education institution because they are providing preschool education, number one. And one more thing, remember, sir, these catering services taken by education institutions, EI1 is exempt under GST. No, sir, that is exempt under GST no matter that is funded by any private NGOs or it is given by government, all these things, it doesn't matter. That means who has paid the consideration, it doesn't matter. Okay, so here, please understand, number one. So yes, as I was telling, so Anganwadi schools are covered under education institution definition EI1 because they are providing preschool education. And next one, sir, for the catering services provided to Anganwadi schools, all that, sir, under midday meal scheme program, it is funded by government. Yes, it is exempt under GST. Or it is funded by NGOs, then also it is exempt under GST. So please understand, catering services provided to EI1 is exempt under GST, even including midday meal scheme programs, okay, where the funding is done by government. Not only that, sir, if any funding is done by NGOs, that is also covered, that is also exempt under GST, because the main thing is it is catering service. Okay, so with this we are done with services related to educational sector, and of course there are small amendments that will be added, so you can just finish it off. The next one is related to healthcare services. The next category is all about, sir, healthcare services. If you see first one, sir, veterinary clinic providing services to animals or birds is exempt under GST. I gave here the star mark, the important to all the healthcare services, not that veterinary clinic point. So don't misunderstand. Now coming to the healthcare services, sir, who should be providing healthcare services, sir? Sir, clinical establishments, authorized medical practitioner, paramedics. So clinical establishments like Apollo hospitals, doctors, nurse, like lab technicians or physiotherapists, all these people, sir, they are providing their uh, services. Which service they should be providing? Healthcare service, then it is exempt under GST. Sir, what do you mean by healthcare service? Please understand, healthcare service means Diagnosis, treatment, or care for any illness, injury, deformity, abnormality, or pregnancy in recognized system of medicine in India, then only it is exempt under GST. Please understand that. That means, sir, if you are providing anything else apart from that, then it cannot be. For example, like anything beyond this, if they are providing, it is taxable. So these are just healthcare services, and also it includes what? Services by way of transporting the patient transporting the patient to or from the clinical establishment. Okay, so that is what the point. And one interesting thing is, sir, it does not include hair transplantation, cosmetic and plastic surgery, except when undertaken to restore or reconstruct the anatomy or the functions of the body infected or affected due to congenital defects or development abnormalities, injury, or trauma. That means, sir, because of a CA student or a CA getting hair transplantation services will be taxable. But if any cosmetic plastic surgery done by actor or actresses, all that stuff, that is also taxable. But if any cosmetic surgery, hair transplantation, plastic surgery, all these things are done due to, sir, because of any developmental abnormalities, injury, trauma, all that stuff, so for restoring or reconstructing the anatomy of the body, if they are doing this, then it will be exempt under GST. Okay, so CA getting a hair transplantation, actor getting cosmetic surgery, all these things are taxable. But if you see in for example, Vikram in I movie, or let us assume Vikram, a person who suffered injuries in fire accident, because of that they are doing some cosmetic plastic surgery, then it is exempt under GST. Please understand that. Fine. Sir, you said that treatment should be done in recognized system of medicine. No, sir. What do you mean by recognized system of medicine, sir, in India? Sir, what are recognized system of medicine in India? Sir, in India, recognized system of medicine means N Ayush. That means naturopathy, allopathy, Ayurveda, yoga, Unani, Siddha, and homeopathy. So these are the recognized system of medicines. Apart from that, anything you provide, then it is taxable. Okay, and not only that, sir, what we are understanding here is regarding renting of rooms in the hospitals. Renting of rooms in the hospital, if you see the renting of rooms in the hospital, for that they have given a point there. The exemption, if at all, if the rent is paid, the room charges are paid for ICU, CCU, or ICCU, or NICU, intensive care unit, cardiac care unit, or intensive cardiac care unit, or neonatal intensive care unit, for all these things, no matter how much ever room charges you charge, it is exempt under GST. But sir, other charges, normal room charges charged to the patients, if it is less than or equal to 5,000 per day, it is exempt, sir. But if it is greater than 5,000 per day, fully it is taxable. That means you are charging 5,050 rupees also, it will become fully taxable. If it is 5,000 or less than 5,000, that means less than or equal to 5,000 per day, then only it is exempt under GST. Okay, so that is with respect to providing rooms in clinical establishments. And next, the senior doctors or consultants are coming and providing various services to the hospitals. That means they are not employees of the hospital, but they are coming as a senior doctor, as a consultant, etc., providing some VVIP cases, etc., etc., they are handling, or complicated cases they are handling. They are providing services to hospitals. That is also exempt under GST, because they are also providing healthcare services. Next, sir, food supplied to inpatients, that means who are admitted in the hospitals, for them whatever the food supplied, that is also forming part of healthcare service, exempt under GST. But who are not admitted, just going to the hospital to see the doctor, to see the nurse, and eat their idli sambar in the canteen and come, for them it is taxable. Okay, next, the food supplied in the canteens which are run by outsourced agencies to outsiders, all that stuff, that will be obviously taxable. Next, as I was telling, food supplied to patients not admitted or their attendants, visitors, that will be taxable. Next, sir, ambulance services are exempt. Next, transportation of patients in ambulance, as I told you already, it is exempt. Okay, no matter under what scheme, that is 108, 102, whatever it is, that ambulance service exempt, sir. Remember that, that's all. Who is providing, private or public person, government, all that stuff, it doesn't matter. Ambulance service is ambulance service, exemption is exemption. Am I clear? So that is with respect to that. And next, sir, rehabilitation professionals, sir. Rehabilitation professionals providing their services by way of rehabilitation, therapy, counseling, all that. But these things, they should be provided in medical establishments or educational institutions or rehabilitation centers set up by central government or state government or union territory or section 12 entity. It is not like I am a rehabilitation professional setting up some rehabilitation center separately in my own office or in my own street or town, whatever it is, and doing this rehabilitation counseling therapy, that will be taxable. But this rehabilitation center should be located, so this rehabilitation center should be located where? In educational institution or medical establishments or rehabilitation centers which are set up by this central government, state government or union territory or section 12A entities, then it is exempt under GST. Okay, so these are with respect to healthcare services. So the next category, if you see government services, in government services, what has happened, we have already discussed in RCM while discussing about RCM entries of government services. We have discussed this entry number 6, 7, 8, 9. Okay, you can just go through that RCM video and again go through that. So we have already discussed government services provided to general public, everything is exempt other than A, B, C, and they are always taxable under forward charge. And for business entities, everything is taxable including ABC. And if it is a small business entity, that means whose aggregate turnover is not exceeding the threshold limit, for them any service provided by government is exempt other than this ABC. For other business entities, sir, if the consideration is less than or equal to 5,000 rupees, then it is exempt. Otherwise, all other services are taxable, like that we have discussed. So all these 6, 7, 8, 9 we have already discussed there. Now coming to the next one, sir, here the functions related to article 243W and 243G, if they are provided by governmental authority to any person, that is exempt under GST. Now please understand, here before going into the discussion, government authority and government entity, I give the meaning here, where governmental authority is nothing but set up by act in parliament or assembly or established by any government, where 90% or more, greater than or equal to 90% of stake is with government. Okay, and their main agenda is to carry out the functions entrusted to municipalities and panchayat under 243 and 243W, 243W and 243G. If it is government entity, the only difference is everything is same, but this is started to make sure to carry out any function entrusted to central government, state government, union territory or local authority. That is what governmental authority and government entity. Okay, now coming to that point, see, first of all, regarding 243G and 243W, we have already seen in schedule 3, if you remember. So I'm just putting all the things related to this article 243W and 243G here. See, central government, state government, union territory, local authority undertaking the activities given, services given in 243W and 243G, it is neither SOG nor SOS. So these people are the supplier and general public are the recipient. It is neither SOG nor SOS. We have already seen in schedule 3 the notification. Next, if governmental authority is providing this to general public, so we are talking about this. That is what we are seeing exemption now. Am I clear? So governmental authority providing services which are entrusted under article 243W or 243G directly to general public, for which they are getting some minimum nominal consideration, is exempt under GST. This is one side of the story. To provide this to general public, these people are taking the help of private service providers. So these private service providers may be directly providing services to government or may be directly providing services to governmental authority. Okay, in that case also, sir, this is exempt under GST. Their services are exempt under GST. Entry 3 and 3A, sir, whether it is 100% supply of service, it is exempt. One second. So sorry, listen here again. Sir, as I was telling, sir, government is providing services directly to general public or governmental authority is providing services to general public with respect to functions entrusted in article 243W or G. This concept we have already seen in schedule 3. Okay, this concept already we have seen in schedule 3. Sir, government directly to general public is neither SOG nor SOS. Okay, through notification, not schedule 3, sorry. Next, sir, governmental authority directly to general public. Governmental authority directly to general public. That is what we are seeing the entry now. Entry 4 and 5. For some nominal consideration, exempt under GST. Next, sir, any private service providers. Sir, let us assume we will be seeing some government will be outsourcing the activity of cleaning and maintaining the roads to some private entities, all that. Sir, they are providing services directly to government or governmental authority. Then also it is exempt under GST. Here, there can be a possibility where they will be providing purely services. 100% supply of services. That is also exempt. No, sir. 25% worth of goods is also involved. That is also exempt. That means the composite supply of 75% service and 25% goods. That is also exempt under GST. So 100% service is exempt and 75-25 mix is also there. That is also exempt. So you should be careful with this limit. Important. Please remember. Okay. So this is with respect to 243W and 243G fully. Okay. Next. Sir, government entity providing any services, sir, government entity providing any services where they are receiving consideration in the form of grants, as we have already discussed just now. Government entity is set up for mainly what purpose? To carry out something which is entrusted to central government, state government, union territory, or local authority. So they are doing that functions, whatever this government is telling, they are doing this. For that, government is giving them the consideration in the form of grant. That is also exempt under GST. Next, old age homes. Old age homes, if they are operated by central government, state government, or section 12A entity, for the people who are aged over 60 years or equal to 60 years, 60 or more, where consideration is 25,000 or less than or equal to 25,000 per month per member, that will be exempt under GST. Otherwise, if it is greater than 25,000, fully taxable. I repeat, old age homes run by central government, state government, section 12A entity, not any private person. Less than or equal to 25,000 per month should be the consideration. If it is greater than 25,000, it is fully taxable. Next, government giving guarantee to the banks or financial institutions for the loans taken by their public sector undertakings, all that is exempt. Next, this one is normal, providing registration or testing, calibration, safety check, exempt under GST. Issuing passport, visa, driving license, birth or death certificates to business entities is exempt under GST. Next, sir, assigning natural resources to individual farmers, that is exempt under GST. Next, sir, appointing the officers after the working hours and collecting merchant overtime charges for loading and unloading after office hours or during even holidays charged by the government, that is exempt under GST. So these are related to government services. Sir, with respect to government services, all that, there is an example also here which I have given. So just you can pause the video and go through this example. So one is postal department services, and then the government of India, other side it is providing services to Vivad Private Limited, TCS Limited, Reliance, like this. Different combinations I have given, taxable or exempt, forward charge, reverse charge, all this stuff. This one also we have discussed all these things in RCM. Okay, so with this we are done with this government services. So if you see the next one, construction related services. Construction related services, there are 3 points actually. First, let us finish this fellow, the odd man out here. Electricity distribution utilities like Tamil Nadu Electricity Board or SPDCL, Southern Power Distribution Corporation Limited, something that way. Sir, what they are doing, they are constructing the electricity infrastructure, up to the tube well of the farmer in his farmland. So that services they are providing to that farmer or agriculturist, it is exempt under GST. Okay, this is something different here. Coming to construction services, actually the construction what we know, please understand here that in construction services there are two things. First entry is related to, first the exemption is only for pure labor contract, not for works contract. You know, pure labor contract means only labor, works contract means both material and labor they will be providing to you. Sir, pure labor contract they are providing with respect to construction, that can be original works or non-original works. That means repairs also covered here. To any beneficiary of Pradhan Mantri Awas Yojana scheme. Sir, there is a person beneficiary under Pradhan Mantri Awas Yojana scheme. For his house, we are doing brand new construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, renovation, alteration, all these things. Sir, that is exempt under GST. Here, both actual construction is also there, repairs and renovation, that is also there. So please understand. So beneficiary of Pradhan Mantri Awas Yojana, both original works, non-original works, both are covered. I repeat, that means brand new construction is also there, repairs and maintenance is also there. Okay, so that is what the point. Next, sir, here another one is, sir, it is not, so that point is related to focusing on the person beneficiary Pradhan Mantri Awas Yojana, both original works, non-original works, only pure labor contract. Works contract is taxable. So coming to next one is focusing on single residential unit. Any person getting his single residential unit which is meant for his single family getting constructed, here only original works, that means brand new constructions, we are not talking about repairs, renovation, alteration, all that stuff. Then if they are providing pure labor contract services to any person to any person, contractor can be any person, recipient can be any person. You are constructing my villa for 10 crores, exempt under GST, only pure labor contract, because villa is my single residential unit. Okay, that is exempt. Suppose it is in residential complex apartments, taxable, sir. If it is works contract, taxable, sir. If it is alteration, repairs or renovation, taxable, sir. Only original works, that is brand new construction, only pure labor contract, only related to single residential unit, then only exemption is there. Okay, so that is what the concept. So that is with respect to construction services. Here there is a small example, you can just pause the video and go through this. So with this we are done with this particular category. Next category is if you see passenger transportation services. Sir, what are passenger transportation services? If you see here, sir, passenger transportation service, first we are going through, sir, if you are transporting the passengers through air in economy class, that is important. Business class is taxable, but this journey should be either starting or ending from the airports located in these states. So here just remember the standing ma'am at Bagdogra. Standing ma'am at Bagdogra is nothing but just our standing ma'am code itself, what we have used in composition scheme. There in the place of Uttarakhand, here we are bringing Assam into picture. If your journey is starting either in Sikkim, Tripura, Assam, Nagaland, Manipur, Arunachal Pradesh, Mizoram, Meghalaya, and of course Bagdogra. Bagdogra is a place located in West Bengal. In these states or in these places, if your journey is your journey is either starting or ending through airways, that too in economy class, that is exempt under GST. So Chennai to Delhi is taxable. Chennai to Delhi via Assam is also taxable. Only Chennai to Assam is exempt, or Assam to Delhi is exempt. So either starting point or ending point should be located there, and that too only economy class. Business class is taxable. Okay, now coming to here, stage carriage, contract carriage, all that stuff. So here the transportation of goods, contract carriage means you are taking entire contract on a entire carriage on a contract, sorry, entire carriage you are booking. Stage carriage means simple, you are traveling, your ticket you are buying, how much ever distance you are traveling, that much you are, for that distance you are paying the consideration. Because of revision video I am not going into details. Okay, now coming to contract carriage, for example, your friend wedding is there, that fellow is booking a full bus to transport all the passengers. Sir, if it is AC, contract carriage or stage carriage, AC means taxable, simple. If it is non-AC, we should see the purpose. Why you are transporting? Why you are transporting the passengers? For any conducted tour, or for I am taking that contract carriage to give it on rent, charter or hire, or tourism purpose it is being operated, then it is taxable. Any other purpose, as we have discussed about the wedding. So for the wedding we are booking the bus through e-commerce operator under 9 subsection 5 means again it is taxable. No sir, directly we are going to the bus owner and we are booking the bus, sir, then it is exempt under GST. Am I clear? Contract carriage, non-AC, non-AC, what we should see, we should see the purpose. Conducted tour, charter or hire, tourism, taxable. Other purpose, sir, if it is through e-commerce operator under section 9 subsection 5, taxable. Other cases, exempt. Okay, so that is what the concept. Next, radio taxi always taxable. Remember that radio taxi means where the taxi is connected with the central office through GPS or GPRS system. So stage carriage, sir, coming to stage carriage, AC taxable as I already told you. So non-AC through e-commerce operator under 9 subsection 5, it is taxable. Or directly, sir, we are going to the bus operator and booking the ticket, then it is exempt. So you are traveling from Chennai to Hyderabad, non-AC bus, but you are booking that through GoAvivo, then it is taxable. No sir, directly we are going to Orange Travels, buying a ticket directly in the bus stand and traveling, non-AC, then it is exempt. That is what the concept. Okay, next, sir, same way transportation of passengers by metered cabs or auto rickshaws through e-commerce. Generally metered cabs, auto rickshaws exempt, sir, but if it is through e-commerce operator under 9 subsection 5, it is taxable. That is with respect to stage carriage, contract carriage. Next, airline operators, they are operating their aircraft from a regional connectivity scheme airport where the consideration is paid by the central government in the form of viability gap funding, that is exempt under GST. Next, sir, as we were discussing, transportation of passenger any person to any person, if it is through railways, only first class and AC is taxable, remaining everything is exempt, like general class, sleeper class, monorail, metro, tramway, all these things are what? Exempt. But sir, if it is waterways, inland waterways is exempt, sir, and places between India, let us assume Chennai to Andaman, for any purpose other than tourism is exempt, sir. If it is for tourism purpose, then it is taxable, sir. So imagine from one place in India to another place in India through a vessel, but if it is tourism purpose, it is taxable. If it is not for tourism, it is exempt. Hope it is clear for you. Next, sir, if it is through roadways, as I was discussing, the roadways, metered cabs, auto rickshaws are exempt, sir, including e-rickshaws, but they are done through e-commerce operator 9 subsection 5, then it is taxable. Next, Sir, if you see in government services, we have seen transportation of goods and passengers exempt under GST, that was taxable if it is provided by government. But in this entry now what happens, even though whether government is providing or private entities are providing the stage carriage, contract carriage, all these things, sir, it is, this exemption is applicable for everybody. That means whether the supplier is government or non-government, it does not matter. I repeat, we have seen transportation of goods and passengers taxable in government related services. Here in this entry specifically we are giving exemption for everybody, whether you are a government or a private person. These conditions, if you are satisfying, it is exempt for you. Next. And why are you traveling in that vessel, for tourism purpose or not, that doesn't matter. Why that is being operated is what important, guys. So normal public ships or vessels sail between places located in India, that is exempt, even if some passengers are going for tourism purpose, because predominantly the service is not for tourism purpose. However, services provided by some leisure charter vessels or cruise ships, predominantly the purpose is tourism, that is taxable. Okay, so that is what the point. Next, contract carriage, stage carriage, metered cab, all the definitions I have given, that's all. So that is what the concept of transportation of passengers. So the next one is with respect to goods transportation services. See, for goods transportation services, if you see here, goods transportation services, two things. One, how you are transporting based on that exemption is given, and next, what you are transporting based on that exemption is given. Sir, how you are transporting, sir? Sir, I am transporting through roadways. Sir, if you are transporting through roadways, it is exempt under GST, except it is provided by GTA and courier agency. That means GTA and courier agency is taxable. Individual truck drivers, all that stuff, it is exempt. Majority cases, GTA courier agency only will do so. That is why it is taxable. Okay, other cases it is exempt. Sir, no, sir, I am transporting through inland waterways, sir. Then also it is exempt. So this is how the exemption is there. That means you are transporting through airways, they have not spoken anything. That means it is taxable. You are transporting the goods through railways, nothing given here. So it is taxable. Okay. Now, sir, the point is, even though you are transporting through rail, vessel or goods, okay, sir, if you are transporting agricultural produce, milk, salt, food grains, flours, pulses, rice, organic manure, relief materials for natural or man-made disasters, or defense or military equipments, newspapers and magazines, these things if you are carrying, then it is exempt. So generally, if you are transporting goods through railways, vessels or GTA, goods carriages or courier agency, it is taxable. But these goods, if you are transporting, sir, these goods, it is exempt under GST. That is what the point I told you, how you are transporting and what you are transporting. Okay, fine. So here, what do you mean by GTA? Sir, GTA means, here they have given a definition, we have discussed in RCM also. Services in relation to transporting the goods, any person providing by road and issuing consignment note. Here the word they have used is services in relation to transporting the goods. That means not only just transporting the goods, sir, but also various intermediary services, and auxiliary services which are provided, like what, if you see here, here there should be given somewhere, loading, unloading, packing, unpacking, transshipment, temporary warehousing, all these things are forming part of in relation to services. So these services are also provided by GTA, still it is called as GTA because these are provided in connection with transporting the goods. Okay, next 21A, 21B regarding GTA, we have already discussed in RCM. GTA is having three types of customers. One is who are specified recipients, who are other than specified recipients, and section 51 entities. If you remember, there, sir, these two people who are not specified in RCM, exempt under GST, for them GTA is providing services. No, sir, GTA is providing services to people who are registered under GST just to comply with the section 51 provisions. Okay, then also it is exempt under GST. The same discussion we have already done in RCM entry also. Right, the next one is banking and financial services. With excitement, I forgot to give entry only here in the book. So please understand what is the entry all about now here. The services by way of extending loans or advances or deposits where consideration is charged in the form of interest or discount other than credit card interest. First of all, if you remember, we have already discussed about interest. Sir, interest is given in charged in two circumstances. One is I give you loan and charge interest, and the other is I give you time for making late payment and I charge interest. Sir, if I give you loan and charge interest, that is exempt under GST, sir. But if I give you time, that means there is, I am allowing you to make late payment, and for that I am charging interest, that is taxable, sir. That is what the concept, correct? Now, sir, we are talking about I gave you loan and I am charging interest. I gave you advance or deposit and I am charging interest. That is what we are discussing under this entry. So here, every interest, whatever is charged, whether it is home loan, gold loan, car loan, personal loan, house loan, anything, it is exempt under GST except credit card interest. That means if credit card interest is charged, that is taxable. And understand, here we are talking about only interest is being exempt, not the loan processing fees or documentation charges. All this becomes taxable. Sir, here it is not like home loan, car loan, all that I told you, deposits, advance, everything, whatever it is, you are allowing them to use your money. And this is not only just restricted to banks, etc., but mostly they are involved in this business. We are talking about them, that's all. Sir, anybody extending loans or extending advances, extending deposits, for which they are getting, you are getting savings bank account, fixed deposit account interest, correct? You are also allowing banks to use your money. You are providing services to banks. The interest you are charging is exempt under GST. So that is the concept here. Fine. Now coming to the point, the minimum balance charges. If you see, minimum balance charges, service charges, documentation charges, as I told you already, they are taxable. Next, anything, sir, they are charging interest on delayed payment charges, settlement obligations, margin trade facility, all these things, sir, these are exempt. So simple, the point is they are charging interest for allowing you to use the money, that's all. That is exempt under GST. Okay, so with that knowledge, you just go through the points there. So for final students, if you see, sir, there are actually the points like collateralized borrowing, lending obligation transactions for which they are charging interest or something like that, exempt under GST. Repo rates, reverse repo rates, all these are exempt under GST. Transactions in commercial paper or certificate of deposits, they are also treated as money, and they are not chargeable to GST itself. If you are dealing with commercial paper, all that stuff we have discussed in supply chapter also, that point. Next, income from commercial papers and CDs, that is nothing but, sir, commercial paper and the certificate of deposits, when they are treated as money, then obviously the income generated from them is nothing but interest or discount, correct, for allowing them to use that. So that is exempt under GST. But sir, service charges or service fees or documentation fees, brokerage charges, I told you already, they are liable for GST. Sale or transfer or assignment of debts are nothing but actionable claims and would not be subject to GST. Schedule 3 will come into picture. Next, any charges collected in the course of such transfer or assignment, then it is chargeable to GST. Debt instruments like debentures and bonds are in the nature of loans and interest only, that is exempt under GST. Financial lease is a method of borrowing the assets. Sir, what about the interest which is representing in the financial lease? Sir, financial lease is where the ownership of the asset is with the bank, in essence, purchase of the asset and lend it further. Okay, therefore, neither the services are purely in the nature of extending loans, nor the consideration is financial lease is purely in the nature of interest. Thus, interest on the financial loan transactions would be taxable. Mark it important, sir. Financial lease, simple financial lease, the interest is taxable. Remember that much. Enough. Next, loan of one bank is taken over by another bank, then GST will be liable on the processing fees, all that stuff. Next, interchange fees on card settlements, all that stuff, sir. Whatever is paid, that is liable to GST. Mark it important. Next is our securitization transactions by banks, where securitized assets are in the nature of securities, not subjected to GST. But for that, they will be collecting some service charges or service fees or documentation charges, that is chargeable to GST. Next, this point I told you, interest will come in two cases. One is for extending loan and the other is for giving you time for making the payment. Okay, so if I'm allowing you to make payment late, that is added to value of supply and taxable. If at all it is for allowing you to use my money and charging interest, then it is exempt under GST. Next, sale or purchase of foreign currency between banks and forex dealers, that is also exempt under GST. But if the same people are doing to general public, then it is taxable. Okay, so between banks and forex dealers, that is exempt, sale or purchase of foreign currency. But it is provided to general public, it is taxable. Next, banking companies providing services to the account holders of Pradhan Mantri Jan Dhan Yojana, exempt under GST. Next, one last point here is, sir, related to acquiring bank. Please understand, sir, acquiring banks, sir, when you're going and swiping the cards, the amount will be settled by a bank and they will charge some commission from the seller. That means you are coming to my shop and swiping the card for 100 rupees. I will not get 100 rupees, I will get only 98 rupees. So 2 rupees, let us assume the acquiring bank is charging commission. So here what they are talking is, commission will be there. On that commission, GST also should be there. But if the transaction amount, the settlement amount is greater than 2000 only, the commission is taxable. If it is less than or equal to 2000, commission is exempt. So I repeat, commission will be there anytime. But if the settlement amount is greater than 2000, commission will be taxable. If it is less than or equal to 2000, the commission is exempt. And if you see here, some cases like, sir, RuPay cards and BIM UPI cases, commission will be there, but that commission is not deducted from supplier account. That means the vendor account, they will not charge. The banks will not charge from the vendor account. For the banks, government will make payment. So that is nothing but treated as subsidy. Simple. RuPay cards, BIM UPIs you are using. Sir, in such cases, what will happen? Sir, in such cases, when you are swiping the card, amount will not be deducted by the bank from the supplier's account. That means if you swipe for 100 rupees, customer, the seller, the vendor will get 100 rupees only. The 2 rupees commission, whatever the acquiring bank needs, that will be paid by the government, central government. So BIM UPIs and RuPay cards, if you are using that commission is paid by the government. So that is in the nature of what? Subsidy given by the government. Subsidy given by the government, not added to the value of supply, not taxable, correct? No, sir, that commission we are charging from the vendor only directly, sir, 2 rupees. Then settlement amount greater than 2000, it is taxable. Less than or equal to 2000, it is exempt. Everywhere commission is there. One case commission is provided by government, so it is not taxable. Other cases commission is charged from the vendor. So on that commission, sir, if the settlement amount is less than or equal to 2000, it is exempt. Sir, if the settlement amount is greater than 2000, commission is there, taxable. Everywhere commission is there. Please remember that. Don't misunderstand. That's also, with this we are done with financial services as well. This life insurance services, you can just take it as homework. You can just go through that once. That's all. You do that. This category 11 also, specified bodies, ESI, CEPFOs, all these things, and general insurance services also. You just remember this here, these points. Okay. Next, pension services, all that. So not that greatly relevant. Now coming to the next one. 1 second, guys. Okay. Let us move on to the next one. Sir, business facilitator and business correspondent. Sir, business facilitator and business correspondent, if you see, sir, if these people are providing services to any banking company located in rural area, it is exempt, sir. I repeat, banking company located in rural area. If it is located in urban area, it is taxable. Sir, for these people, if anybody is providing services as an intermediary, okay, then that is also exempt. Next, again, business facilitator and correspondent providing any services to insurance company in rural area, then it is exempt. So look at this. Sir, agent providing service to business facilitator or correspondent who is providing his services to banks. Everything is exempt here. Here, sir, this is only exempt, sir, but this is taxable. That means agent to business facilitator or business correspondent is taxable. Business facilitator to business of insurance company in rural area. My insurance company in rural area itself is rare. They are having business facilitator correspondent is rarest, and they are having agent, of course not possible. Just for your clarity, I have written there, so you should not get confused in the exam. So this is the exemption entry with respect to business facilitator and business correspondent, and I hope you remember we have discussed about the same fellow even in RCM. Next category, services provided to government. Sir, we have already discussed this entry number 3 and 3A. If you remember that pure 100% services or 75-25 ratio also we have discussed. Next, sir, any person providing his services as a ration shop dealer and for which he is getting commission, that is exempt under GST. Any insurer who is providing services of insurance where premium is fully charged to central government, state government, union territory, that is exempt under GST. Next, any person who is providing some training programs conducted on which 75% of the cost, the expenditure is borne by central government, state government and union territory. So let us assume 10,000 I am charging for providing you some certification course on GST training, all that stuff, for which consideration 75% or more is contributed by central government, state government, union territory, then it is exempt. If it is less than 75% they are contributing, then it will be taxable. Okay, so this is important, please remember it. The limits 75-25, greater than or equal to 75 should be contributed by government. So those are with respect to government services provided to government. Next one, leasing services, sir. State Industrial Development Corporation, sir, we call it SIDCO. State government industrial development corporations or undertakings where the entity, in that entity 50% or more ownership, greater than or equal to 50% ownership is with the central government or state government or union territory, and they are providing this industrial estates, industrial plots on rent to obviously industrial units or developers in that industrial area, where they are charging the consideration upfront amount for long-term lease. Long-term lease means, you know, sir, it is 30 years or more, greater than or equal to 30 years. Further, they are charging upfront lease payment, that is exempt under GST. If they are charging monthly rentals, then it is taxable, sir. They are charging monthly rentals, then it is taxable. For example, 100 crores lease upfront payment, 100 crores they are paying, it is exempt. To pay that 100 crores, I am giving you 10 installments. That is also exempt. So upfront amount is the way the consideration is charged, then it is exempt, sir. That upfront amount can be paid even in installments also, not a problem. But monthly rental comes, then it is taxable. 30 years or more long term lease, that is important here. Okay, so that is what the point. And here one more thing is like preferential location charges charged here. For example, in that industrial estate, sir, for me I need that particular area of 10 acres. For that they are charging something extra, preferential location charges. Same long term lease amount, but because the area is different, I'm charging more lease amount, that's all. So it is also exempt under GST. Okay, so that is with respect to this leasing services category. So the next one is legal services. If you see, sir, arbitral tribunal or senior advocate or individual advocate or firm of advocates providing their legal services to any person other than a business entity, like individuals, all that exempt under GST, or to a business entity whose aggregate turnover is not exceeding the threshold limit for registration. That means small business entities, as we are discussing, small bet, sir, they are not even liable for registration, sir. That much less turnover they are doing, not exceeding 10, 20, 40 lakhs. Next, sir, if they are providing their services to central government, state government, union territory, local authority, governmental entity or government entity, sorry, governmental authority or government entity. So there should be here governmental authority. Okay, yes, so then that is exempt under GST. For that purpose, I have given a comprehensive example here. And one more thing here, sir, individual advocates or firm of advocates providing legal services to another advocate or firm of advocates, that is exempt under GST. I will show you the example here. So look at this. So here, first of all, let us see this. You just focus on this first. Pause the video and just understand here. Sir, Jolly LLB, an individual advocate providing legal services to Imran Hashmi and same Sonu Sudan Co. Charitable Organization registered under GST. Aggregate turnover in preceding financial year is exceeding the threshold limit. Pushparaj Exports and Imports sole proprietor not liable for registration. Aggregate turnover in preceding financial year not exceeding the threshold limit. To central government, to another form of advocates, or see here the only thing what I want to highlight is senior advocate providing services to another advocate or firm of advocates, they cannot enjoy the exemption. But the only thing is we can see, sir, whether this other individual advocate or firm of advocates, what is their aggregate turnover? Their aggregate turnover is exceeding the threshold limit. Now automatically it is taxable and coming under RCM. Okay, hope you understand that. I repeat, advocate to advocate is generally exempt, but that exemption is not available if senior advocate is providing those services. Okay, for senior advocate, even advocates and firm of advocates are nothing but another business entity only. So if their aggregate turnover is exceeding the threshold limit, that will be taxable, otherwise it will be exempt under GST. Okay, so this is important for you, right? Hope it is clear. So this is what all about legal services. Next, sponsorship of sporting events. The sponsorship of sporting events, if you see, sir, if it is for specified sports bodies, as we have given here, National Sports Federation and affiliations, All India Sports Council for Deaf, Paralympic Committee of India, Special Olympics Bharat, Association of Indian University, Inter University Sports Board, Central Civil Services, Cultural and Sports Board, Indian Olympic Association. So Pradhan Mantri, sorry, Panchayat Yuva Kreda or Khel Abhiyan scheme. Sir, under these schemes, if you are conducting any sporting event, for that, if the sponsorship services are provided, that is exempt under GST. Next, so that is with respect to sponsorship services. Next, skill development programs. Please remember this important. Okay, you can just go through that National Skill Development Corporation, all these people, the training agencies or assessment agencies, all this, these people are providing services of conducting the training programs, all that, it is exempt under GST. Next, anybody assessing the training programs conducted who are enrolled with the Director General of Training under Ministry of Skill Development and Entrepreneurship. So under this, anybody are doing the services of assessing the competencies of the people trained under those programs, especially the skill development initiative scheme. And training providers, if you are training the students, or if you are providing training services on skill and vocational training and education under Deen Dayal Upadhyaya Gramina Kaushalya Yojana, that is exempt under GST. So these are related to skill development services. Please go through this once and just finish it off. Next one, a very important entry is performance by an artist. Sir, any artist in folk or classical, of music, dance, theater, that means here western, all this stuff are not covered, sir. Here only see western music or dance or modern theaters performances or actors in films and television serials, all these things are not involved. Only in folk or classical form of music, dance and theater. Okay, so painting, sculpture making, all these things again will become taxable. Exemption is only for what? Exemption is only for music, dance and theater, that too only in the form of folk or classical, not anything else. So here you should be an artist. For example, you are a Bharatanatyam dancer, classical dancer, you are going and performing on stage. For that you are charging a consideration, we are talking about that. So that consideration, if it is less than or equal to 1,50,000 per performance, it is exempt under GST. Hope it is clear for you. Sir, if it is greater than 1,50,000, it is fully taxable, simple. Okay, next, sir, if you are acting as a brand ambassador, sir, you are a Bharatanatyam dancer coming and advertising him like Fortune Sunflower Oil or Freedom Sunflower Oil, all that stuff, that will be taxable. Brand ambassador services are taxable no matter whatever is the consideration. But if you are performing for that, you are taking consideration less than or equal to 1,50,000, then it is exempt under GST. So a very, very important entry, please remember. Next category is about entry tickets. Sir, entry ticket when you are going to museum or national park or wildlife sanctuary, tiger reserve or zoo, for that, no matter whatever is the ticket, whatever is the cost, sir, that will be exempt under GST. Even admission to protected monuments, all these things, sir, it is exempt under GST. I repeat, without any monetary limit, whatever the ticket you are paying, that is exempt. Because in the next one, if you see next point, sir, you are going to any circus or a dance or theatrical performance, including drama, ballets, award functions, concerts, pageants, and musical performances, sporting events, recognized or unrecognized, and planetarium. But these places, if you are going and you are paying the entry ticket, please understand, then it is less than or equal to 500, then only it is exempt. If it is greater than 500, it is fully taxable. Okay, so that is what the concept. Now next, sir, recognized sporting event, all that they have given just for your general knowledge, you can go through that. So that is with respect to that category, admission to any events. The next one, services provided by an unincorporated body. Please understand, this is all about whether you are an unincorporated body or an incorporated body, you are providing some services to your members. Sir, I repeat, whether you are incorporated or unincorporated, it does not matter. You are providing services to your member. What services? Sir, as a trade union, you are providing any service to your members, exempt under GST, sir. As a body, I am providing to my members a service which is already exempt under GST. For example, I am a Rotary Club. I am providing to my members some healthcare services, arranging some doctors, doing their blood checkup, etc., blood pressure or sugar, diabetics, etc., eye checkup, etc. So these services I am providing to my members, getting 100 rupees consideration from them. So I am providing healthcare services to them, which is already exempt under GST. So even if I provide also, it is exempt under GST. Next, sir, resident welfare associations you see in apartments and all, the flat maintenance fees you pay, no, that flat maintenance, if it is less than or equal to 7,500 per month, okay, then it is exempt. If it is greater than 7,500, it will be taxable. Okay, now, sir, this 7,500 whatever is it does not include any statutory dues, sir. Any property tax, electricity charges, all that stuff that is paid, that will not be added in that 7,500. Okay, next. We understand these associations are charging some sinking fund, repairs and maintenance fund, car parking charges, non-occupancy charges, simple interest, all that stuff, late payment, etc., etc. So all these things are services provided by them, and it will be taxable in that 7,500. We have to consider them. But sir, if at all they are charging anything like property tax, water tax, all the stuff, if that is collected by Resident Welfare Association on behalf of the members, then the GST is not leviable. Okay. Next, GST is also not leviable on non-agriculture tax, electricity charges, which are collected under the statutes from individual flat owners, all the stuff. Next, if these charges are collected by society for generation of electricity by society's generator or to provide drinking water facility or any other services, then it will be liable to GST. That means government is government is providing electricity, water, all that stuff. For that, the government is collecting charges. Now that is collected by Resident Welfare Association from the members. It is not liable to GST because they are statutory dues. But sir, if they are providing the electricity from their own generators, or they are providing their own drinking water facility, all that stuff, then for that they are collecting consideration from their members, then it is liable to GST. So statutory due, not liable for GST, but this association itself is generating electricity or supplying water, collecting consideration, then it is taxable. Now there is a small like clarification kind of thing here with respect to Resident Welfare Association, whether their services are exempt. As we have already discussed, sir, 7,500 per month per member is exempt, we have discussed. Sir, what if Resident Welfare Association is aggregate turnover is not exceeding the threshold limit? Then it will be like a non-taxable person, even though the maintenance charges are greater than 7,500 per person, automatically it will be what? Not liable for GST. Even though it is greater than 7,500 per month, no GST is there because Resident Welfare Association is not liable for registration. Okay, next, sir, whether they are entitled for ITC? Yes, obviously, any capital goods or input services, whatever they procure, they can take ITC if they are registered and they are liable to pay GST. Now they can take happily ITC, no issues. Sir, where a person is owning 2 flats or more than that, sir, then what is the limit, sir? No? Sir, if he is holding 2 flats, each flat is a member in the association. So each flat wise, we have to see 7,500 limit, not put together. Okay. So the ceiling of 7,500 per month is applied separately for each residential apartment, not for entire how much he is paying. So these are related to that unincorporated body. Next, in continuation to that, again, unincorporated body or any non-profit entities which are registered, sir, if they are providing any activities relating to their welfare of the industrial or agricultural labor or farmers, or they are doing anything which is related to promotion of trade, commerce, industry, agriculture, arts, science, literature, culture, sports, education, social welfare, charitable activities, protection of environment. Just like we'll be seeing, no, there is Tamil Nadu Society of Auditors, Hindustan Chamber of Commerce. Like that, there are so many organizations and entities where they are providing their services to their own members, either in sharing the knowledge or protecting the environment or for social welfare or literature, etc., whatever it is, there will be charging like membership fees. Sir, if that membership fees is less than or equal to 1000 per member per annum, then it is exempt. That means like very small organizations, small bodies or unions, associations they are talking about, where the consideration is less than or equal to 1000 per member per annum, then only exempt. If it is greater than 1000, fully taxable. That is what we are discussing here. Now if you see other services like tour operator services, the tour operator services where any person is providing services to a foreign tourist for the tour wholly conducted outside India, then it is exempt under GST. Sir, here the same way, if you see, sir, he is providing, the tour operator is providing services to a foreign tourist for the tour partly conducted in India, partly outside India, then proportionately we will give exemption. So what is the concept here, sir? For example, sir, 10 lakhs we are charging, sir, 6 days and 12 hours in India, Sri Lanka 3 days and 8 hours. Anywhere you are staying, if you understand, sir, anywhere you are staying greater than or equal to 12 hours, it will be treated as one full day. Greater than or equal to 12 hours. Otherwise, it will be treated as half day. So now, as a tour operator, I am charging 10 lakh rupees for in India 6 days and 12 hours. That means can I take 6.5 days? Sri Lanka 3 days and 8 hours they are staying. So 3.5 days. So total how many days? 10 days. For 10 days tour it is, sorry, 7 yes, it is 6 days and 12 hours. That means it is 7 days. This is 3.5 days. So total it is 10.5 days. Okay. So for 10.5 days you are charging 10 lakhs means, sir, what we should do? How much is the stay in Sri Lanka? That much you take exemption. 10 lakhs into 3.5 divided by 10.5. 3,33,333 rupees, or 50% of the total consideration, whichever is less, that will be the exemption amount. So I repeat, sir, if the tour operator is providing services to foreign tourists for a tour wholly conducted outside India, then for wholly conducted outside India, it is exempt. Partly in India, partly in outside India means proportionately to outside India stay, we have to take the exemption and compare it with 50% of the total consideration. Whichever is less, that will be exempt under GST. Okay. So the next one, you see small entries, all that. Here I'll just focus on important points. Taking national permit for the vehicles is exempt under GST. Next, transportation of goods by air from a place outside India to within India, first place of India, first customs airport of India, that is exempt under GST. Next, postal department services of postcard, inland letter, book post, ordinary post where the weight is less than 10 grams is exempt under GST. But speed post, express parcel post, all these things are taxable. Next, services by way of transferring the business as a going concern as a whole is exempt under GST. Next, any person renting the residential dwellings, we have already discussed it under RCM, is exempt under GST. There is one thing related to hostels also, we'll discuss in the next amendments point. Next, ISRO and Anthrax Corporation Limited and New Space India Limited providing satellite launch services are exempt under GST. Next, any person renting the vehicles to one second ma. Renting the vehicles which are meant to carry more than 12 passengers to state road transport undertaking. That means renting a bus to SCTC or APSRTC, like that, any state road transport undertaking, for them you're renting a bus, it is exempt under GST. Or you're renting any electrically operated vehicles which is meant to carry more than 12 passengers to local authorities, it is exempt under GST. Anything for transportation of goods, if you're renting it to GTA, that means renting a lorry to GTA is exempt under GST. Next, you're renting the vehicle to a person who is transporting the students, faculty, staff of a EI1, that is also exempt under GST. Okay, see here, for that we have an example for this point D, example 76. You can just look at this. This we have seen actually in RCM, renting residential property, all that stuff. So, and renting the residential property for commercial purpose is taxable, and renting the residential property for residential purpose is exempt. So here you can just pause the video and go through this example. Renting residential property to JK Shah classes to use it as a guest house or faculty, that is like a business purpose, taxable under RCM. But renting the residential property to CA Kapadia registered under GST to be used for his family residence, exempt. The renting residential property to JK Shah classes registered under GST to be used as an admin office, that is also taxable under RCM. Okay, so that way. Next, coming to renting the vehicles. So renting the vehicles, as I told you, sir, we are talking about renting the bus. Renting the bus, to whom you are renting? Sir, I'm renting the bus to a person who is transporting the students of EI1. Okay, then it is exempt under GST. That means imagine Rohit is transporting the students of EI1, Mumbai Indians English Medium High School. You know, this school is EI1 is purchasing transportation services, catering services. Do you remember security, cleaning, housekeeping services? All are exempt for EI1. So this is actually exempt under entry 66, which we have already discussed under educational services category. Now we are talking about, for that fellow, whoever is transporting the students of EI1, for that fellow, if you are renting the bus, it is also exempt. Sir, no, sir. To any other person, we are renting bus. For example, see, Dhoni is transporting the students of CSK, UG, and PG college. Dhoni is not a person who is transporting the students of EI1. So, Dhoni cannot enjoy exemption here as per entry 66. To Dhoni, Mr. Pandya is providing bus on rent. Then also exemption is not there. It is taxable. So, just I am connecting the exemption here because this is exempt. They gave exemption here because this is taxable. They are saying this is also taxable. Okay, hope you are clear with this. 1 second, just I'll make the example clear for you. You can just pause the video and go through that for a second. So just go through this example. Hope it is clear for you. Now coming back. The toll charges are exempt under GST, sir. Not only toll charges, without FASTag you are traveling, they are collecting extra amount, that is also exempt under GST. Overloaded vehicles, we are charging some extra amount, that is also exempt under GST. Transmission of electricity or distribution of electricity, that is exempt under GST. Here there is a small amendment actually. So these services are now exempt under entry 25A. These are also exempt now. So not only transmission or distribution of electricity, but also the application fees or releasing connection of electricity, rental charges or metering equipment, testing equipment, labor charges for shifting the meter, service lines, are giving duplicate bills. For all these things, they are collecting consideration, that is now exempt under GST with the new entry 25A. Okay. Next, incubators providing their services. Incubators who are located in entrepreneurs located in the premises of a technology business incubator and science and technology entrepreneurship parks set up by National Science and Technology Entrepreneurship Development Board or the Department of Science and Technology, Government of India. There the incubators who are doing their business there from that particular centers and providing services, that their services are exempt up to the turnover of any service whatever they provide. Up to the turnover of 50 lakhs is exempt, but there are two conditions. What are the two conditions, sir? The two conditions are, the total turnover should not be exceeding 50 lakhs in the previous financial year, and 3 years should have not been lapsed. That means you can get this exemption only up to turnover of 50 lakhs and maximum that too for 3 years. After that you cannot claim that exemption. That means till your business picks up, they'll give you exemption. After that you are supposed to pay GST on your outward supplies. Next, you can go through this are bio incubators recognized by BRAC technology business incubators providing any service to any person, all that stuff exempt under GST. Independent journalist or press trust of India, United News of India providing and collecting news to any person is exempt under GST. Public libraries providing services of lending books and publications are exempt under GST. Event organizer for the business exhibition held fully outside India. If it is in inside India, taxable. So business exhibition fully held outside India, for that event organizer is providing services, that is exempt under GST. Next, the services of preconditioning, pre-cooling, ripening, waxing and retail packing and labeling of fruits and vegetables is also exempt under GST. Next, National Center for Cold Chain Development. So cold chain knowledge dissemination. So NCCD is providing services, that is exempt under GST. Foreign diplomatic mission in India providing services in their capacity. Example, US Embassy, exempt under GST. Next, providing information under RTA Act is exempt under GST. Next, individuals, the sports persons, they are providing their services as player, coach, referee, coach, umpire, team manager, all that stuff. So remember, retweet the cup is the code. Retweet the cup. So RT Cup is the code. R for referee, team manager, coach, umpire, and player. In those capacities, if you are providing services to your recognized sporting body, then it is exempt. No, sir, I'm providing services as a selector or a pitch curator, commentator, cheerleader, all these things. Then they are taxable. Then they are very much taxable. Hope it is clear for you. Sir, and one more thing is one recognized sporting body to another recognized sporting body, like Tamil Nadu Cricket Association to Hyderabad Cricket Association, Hyderabad Cricket Association to BCCI. All these things are taxable. Next, services by way of like providing these facilities of bathrooms, washrooms, lavatories, urinals, toilets. Also, we will be seeing no in bus stands or railway stations, etc. They are exempt under GST. And next, any person providing services to a governmental authority by way of water supply, public health, sanitation, conservancy, solid waste management, some improvement and upgradation, all these things are exempt under GST. So the new exemptions added and whatever there, the clarifications will be discussing. Right, continuing with the next chapter, exemptions. See, the amendments, see, there are some exemptions which are newly added, some exemptions which are clarified or modified, all the stuff. So we'll see first new entries under CGST Act, whatever the entries have been added. First of all, certain small things are there, not that greatly what difficult, etc., etc. Of course, you know, even if it is difficult, I will make it easy for you. The Ministry of Railways, that is Indian Railways, they are providing services by way of selling the platform tickets, facility of providing retiring rooms or waiting rooms in the stations, clock room services, or battery operated car services to travel in the platform. All that stuff you will be seeing. Sir, all these things. Further, they are charging some consideration, nominal consideration from the passengers, that is exempt under GST. So this is the first entry. Next, one zone or division of Indian Railways to another zone or division of Indian Railways. See, for example, there is South Central Railway. This is a zone. They are providing services to Southern Railways. This is another zone, exempt under GST. And again, in railways, there will be in this zone, within the zone, again, there will be divisions. For example, there is a division called Guntakal Division in Andhra Pradesh. They are providing services to Nanded Division in Maharashtra somewhere, I guess. So there is another division in railways. So one division to another division, one zone to another zone. For that, if they are providing any services, Indian Railways, it is exempt under GST. There is another one. Next, special purpose vehicles. Now please understand, here I will just tell you, I will simplify this for you. For special purpose vehicles, certain people, certain entities will get a contract from Indian Railways where they construct the infrastructure for Indian Railways. So for constructing the infrastructure, they will not get any consideration. They will maintain the infrastructure. From that, they will just generate a revenue, all the stuff by way of selling the platform tickets, etc., etc., whatever it is. So they will construct the railway stations or any infrastructure for that matter. During the concessionary period, that means maybe 15 years, 17 years kind of thing. So during that period, that infrastructure will be owned by that special purpose vehicle itself. Now, during that period, please understand, special purpose vehicle is the owner of that infrastructure. Indian Railways is using that infrastructure, right? So, for using the infrastructure, Indian Railways should pay consideration to special purpose vehicles. That means, I repeat, sir, special purpose vehicles are constructing infrastructure for railways. But during the concessionary period, that means for 15 to 17 years, the property will be in the name of special purpose vehicle only. So, special purpose vehicles are allowing Indian Railways to use that infrastructure. In return, as consideration, what they are paying some monetary consideration, as well as they are paying consideration in the form of maintenance of that particular railway station, as an example, or that infrastructure, whatever has been constructed by that SPV. So now please understand, special purpose vehicles are constructing infrastructure, allowing Indian Railways to use that infrastructure. But that in return, Indian Railways is paying some consideration, as well as taking care of the maintenance of that infrastructure, cleaning, etc., etc., whatever the maintenance they are taking care. Indian Railways. So Indian Railways is paying consideration in the form of consideration of like maybe monetary consideration, as well as maintenance of that infrastructure. This service is exempt under GST. Okay. So simple. What is that service here? Allowing Indian Railways to use the infrastructure built and owned by special purpose vehicles during the concession period, against the consideration of what? Against the consideration and services of maintenance supplied by Indian Railways to special purpose vehicles in relation to the said infrastructure, which is built and owned by SPVs during the concession period. Okay, so that is what the concept, that is exempt under GST. Now another interesting one, this is for you people, for students mainly. Okay, Sir, any person providing accommodation services to any person, but here the point is the value of supply should be less than or equal to 20,000 per person, and very important thing is that the stay period should be minimum 90 days. That means it should be greater than or equal to 90 days stay, continuous stay of 90 days. For that, if you are paying the rent, then it is exempt under GST. That means we are talking about mainly here hostels or any PGs, whatever you call paying guest houses, etc. etc. So, to just bring a clarity in law with respect to this entry, in entry number 12, regarding renting of residential property for residential purpose is exempt under GST. In that, they have added a point saying that renting of residential properties exemption is not available to students in student residences or hostels, camps, paying guests, and the like areas. So you should come to 12A only, this entry only. Okay, hence exemption under 12A comes into play. So renting of residential premises for residential purpose is exempt, but that is not applicable for any places where students or working professionals, etc., etc., staying. So for you people, come to entry 12A, where I am giving exemption where you are paying your hostel fees, etc., etc., PG fees less than or equal to 20,000 per month na exempt under GST, but only condition is you should be staying there for minimum 90 days. That means your stay should be greater than or equal to 90 days and rent should be less than or equal to 20,000 per person per month. Then you can enjoy the exemption. So this is a good news for students and the benefit for students. That is what the next point. But the interesting part here is hostels, what they did, even though GST is exempted, they have compensated with by increasing the hostel rent so that students are not getting benefit. If you are not getting that benefit, you can just complain to GST department also by March 31st, taking anti-profiteering clause into picture. Okay, so fine, coming to the next one, sir. 25A. So if you see 25A, this is nothing but electricity transmission and distribution utilities. The electricity transmission and distribution utilities, they are providing services by way of transmitting or distribution of electricity. If you see, there is an exemption for that. And earlier, if they are providing any metering equipments on rent, or if they are coming and testing the meters, transformers, capacitors, releasing electricity connection, if that has been kept on hold because you have not made the payment, all that stuff, and later on you made the payment and they are releasing the connection, labor charges for shifting the meters, service lines, or issuing the duplicate bills. Point number 5, issuing the duplicate bills, etc. All these things were earlier taxable. Now they made a new entry giving exemption to these things. So these are also exempt now. So please remember it. So electricity distribution, transmission and distribution utilities providing these services are now exempt under GST. Okay. So that is next entry. Coming to another entry. See, the next entry is generally any person, generally this will be seeing in PG colleges or PhD colleges where students are doing research, etc., etc. Sir, for the research and development, what they are doing, they will get consideration in the form of grants. Government entities or research association in the university, college, or other notified institutions, they will be providing grants to people for carrying out research and development services. Those grants are exempt under GST. Am I clear? That is what the point. So you are doing research and development for what? For the purpose of research and development, yes, the government entity or any universities or colleges are providing you grants which are notified under section 35 subsection 1 clause 2 and 3 of Income Tax Act. Sir, the consideration is paid in the form of grants. That is exempt under GST because you are doing research and development. So that is what the case. Here recipient is technically speaking not applicable. That situation will not come. Next, entry 66A, a new one. If you see in educational services, they have added central and state educational boards or councils or any other similar bodies providing services by way of affiliation. Understand here, this is only for the schools, not for colleges. So services of providing any affiliation for any schools which are established or owned or controlled by central government, state government, union territory, local authority, or governmental authority or government entity, not even for private people. For government, simple words, for government schools, if we are providing any affiliation services, who are providing this CBSE or state boards, if they are providing any affiliation services, then it is exempt under GST, for which they are charging a consideration. It is exempt under GST. And there are various clarifications also added in this educational sector where I am discussing them here itself. Okay, see, PGCA is approving flying training organizations and flying training courses, and after course is completed, the certificates are successfully granted to the students in accordance with the Aircraft Act 1934. Of course, now they are replacing this act with a new act, that's a different story, let us not worry about that. So this flying training courses whatever are provided, if you understand, by FTOs, that is flying training organizations, are nothing but the educational services which are provided as part of curriculum, which is to obtain a recognized qualification by Indian law. So they have clarified that the services provided by these people are exempt under GST. Okay, so if they are provided by the education institution, yes, because as they are provided by the education institution for obtaining a qualification recognized by the law. So as we have discussed this, next, it is clarified by CBIC that affiliation services by central government, state government educational boards are not covered within the ambit of exemptions provided to educational institutions, hence they are taxable. Same services to government schools are exempt. Just now we have discussed, sir, affiliation services provided by CBSE, state boards, etc., to schools are not covered within the ambit of exemption provided to educational institutions, hence taxable. Same service. See, that means I can say this affiliation services provided to government schools, they are exempt, but if they are provided to others, obviously taxable. That's all simple. Okay, so that is what the concept. Next, again, the affiliation services provided by universities to their constituent colleges are also not covered within the ambit of these exemptions, hence that is also taxable. Sometimes like you will be seeing on college buses, etc., affiliated to so and so university, like that. So for that, affiliation provided by universities, here it is not CBSE or state boards, and it is not government schools. Affiliation services provided by central or state boards or the related things to government schools only exempt, not any other things. Government schools in the sense, as I told you, that the school should be owned or established or controlled by central government, state government, union territory, local authority, governmental authority, or government entity. Hope it is clear for you. So, sir, you are talking about affiliation here. See, now the point is, the affiliation activity monitors institutions' infrastructure, technical prowess, financial liquidity, faculty strength to ensure it can conduct courses for students enrolled in a university degree or title. However, these services are not related to student admission or examination conducted by the institution, hence they are not enjoying the exemption. Simple. They give just what through affiliation universities or these boards will do. They will monitor the infrastructure or the faculty strength, etc., how the college is, whether they are able to deliver the they are able to deliver the courses or not. All that stuff they will be monitoring. Okay, fine. So we have understood affiliation exempt only if it is by central board or state board or other similar boards to government schools. That's all. Any all other cases it is taxable. Okay, so that is what with respect to new entries under TGST Act. Now the changes in existing entries, if you see earlier in this entry number 69, sir, there was NSDC and Sector Skill Council SSC, but here now they have just brought in place of Sector Skill Council, they have brought in this National Council for Vocational Education and Training. So apart from that, everything the entry is same. So if the services of any service in relation to national skill development programs or any vocational skill development programs which are implemented by NSDC, or here which are under National Skill Certification and Monetary Reward Scheme. So just government scheme names, just remember that. So that's all, those schemes. Next, National Skill Qualification Framework aligned with qualification or skill in respect of NCVET has approved the qualification program, all these things. So here the new thing is NCVET has been added. And next one, sir, any awarding body recognized by NCVET, the assessment agency services which are recognized by NCVET, training bodies accredited with an awarding body that is recognized by NCVET. So all these things are nothing but related to some skill development or training programs where National Skill Development Corporation or National Council Vocational Educational Training is coming into picture, or the awarding bodies which are granting the awards are assessing the performance of the people who got trained, or the training bodies which are approved. These people providing services are nothing but exempt under GST. So that is the change here. In place of Sector Skill Council, they have added this NCVET, they brought into picture. Okay. Next, what is the next one? The another small change is nothing but, there is an entry where the training providers, if at all I am providing training to any students, for that I am getting consideration. Okay, under Deen Dayal Upadhyaya Gramina Kaushalya Yojana under Ministry of Rural Development. So for this scheme earlier there was a skill or occasional courses, like that it was there. Now they have just added the word education and training programs. So skill or occasional educational training programs are exempt under GST but provided under that particular scheme, Deen Dayal Upadhyaya Gramina Kaushalya Yojana. Okay, so that is exempt. So these are the changes in existing entries. So now if you see, there are important clarifications, sir. If you look at the important clarifications here, sir, important clarifications regarding Anganwadi schools we have already discussed. So we have seen this Anganwadi service already. Anganwadi is a preschool and catering services provided to them is also exempt under GST. No matter the grants are given by corporates or NGOs, all that we have discussed. Next, sir, is there any GST applicable on the eligibility certificate or migration certificates charged by education institutions to their students? These certificates are provided by education institutions to their students. You know, any student, any service provided to student is exempt under GST by the education institutions. Next, transporting the minerals within a mining area. So from mining area to this one not relevant, that we just you go through once, not worth enough discussing. GST honorarium paid to guest tankers, we have discussed, it is taxable only. Next, sir, IVF treatment, sir. Yes, in healthcare services we see IVF treatment is taxable or exempt, was a doubt. IVF treatment is also treatment related to pregnancy, which is covered within the definition of healthcare service, so that is exempt under GST. Next, selling the land after leveling the land, that also we have already discussed in supply chapter. After leveling the land, also land is a land, immovable property, it is neither SOG nor SOS, but services like leveling the land or laying the drainage lines, all that stuff, that will attract GST. Next, this non-AC contract carriages by firms for transportation of their employees to and fro from the work, is it exempt under GST is the doubt. Sir, there they have clarified, it is like, suppose if it is transportation done in predetermined route and predetermined schedule, then it is transportation service, it is exempt under GST. No sir, the vehicle is completely will be at the disposal of the company, they can use whenever they want all the stuff. That means you are renting the vehicle there, exemption is not available. Exemption is available only when you transport the passengers, but transporting the passengers means it will be done at predetermined route and predetermined schedule, correct? So if that is the case, it is exempt, otherwise is taxable. Next, sir, we have seen between places located in India through waterways, vessel, all that stuff. So it is exempt under GST. There they have used the word public transport. So public transport between places located in India in a vessel, excluding tourism purpose, we discussed no Chennai to Andaman, all that example. So there the doubt was, public transport means is it operated by government? Private ferry operators, can we take exemption or not? A public transport means something which is predominantly for the purpose of general public, which is open to general public. It doesn't mean that public transport means operated by government, so it is not that way, so it is exempt, no matter it is operated by private people, all that. Next, accommodation services provided by Air Force mess to their personnel. Sir, Air Force mess, Navy mess, paramilitary mess, all these people are providing services to their personnel. Sir, they are not any business entities, so they can enjoy exemption. Only services provided by government to business entities we have seen taxable, correct? So these are the clarifications. Some other clarifications through amendments, all that stuff happened, that we will finish off in this video. Next one is with respect to clarification of statutory dues collected by RERA. Please understand, actually in entry number 4, any governmental authority providing services which are in relation to Article 243 W and G entrusted to Panchayat and Municipality, all that, so that is exempt under GST as per entry 4. Now the doubt was whether this RERA is a governmental authority, because they are also collecting some statutory dues and further they are getting some consideration. Is that exempt under GST? Then the department has clarified, RERA is very much within the meaning of governmental authority, and hence the services provided by them by way of collecting the statutory dues is exempt under GST, as it is falling within the entry number 4. So the next one is related to the clarification. The loan granted by related person or overseas affiliates to an Indian entity. See, generally, when banks or financial institutions or NBFCs are giving loans to any lenders, the borrowers, okay, to the borrowers. To borrowers, sorry, right? So when they are granting the loan, just to understand the credit capacity, the repayment capacity of the borrower, what they'll do, they will just process the application, all that stuff, etc., etc. So they will charge, after issuing the loan, they will charge loan processing fees, documentation charges, etc., etc., and generally they are taxable. You know, interest on loan is exempt except credit card interest, but the loan processing fees, documentation charges, all these things are taxable. So here the doubt is, sir, when related person or overseas affiliate is providing loan to the Indian entities, sir, because they know each other, they are related person, or my own foreign affiliate is there or foreign entity is there in abroad, and they are granting loan to me, and I will be repaying to them. We understand whether there will be a situation where they will assess my repayment capacity or my credit analysis, all that stuff they will do. So all these documentation charges, loan processing, etc., will not come into picture here, so they will not charge it. Now the doubt is, sir, should it be considered as supply without consideration? Loan processing fees is not charged. That means it is free. So supply without consideration. So schedule 1, para 2 and 4, can I trigger and can I charge GST on this? Like that the doubt was there. So please understand, these related persons will not charge processing fees from the other fellow because they know about them everything. So there won't be such processing activity or administration things which makes them to charge consideration. So you cannot treat both the transactions as same. They are not standing on equal footing, and the department has clarified. So this is not something same like other financial institution lending loans to the borrowers, all the stuff. So processing fees will not be charged, and it need not be charged also. Here you cannot bring schedule 1 into picture. You cannot call it as supply. It cannot be treated as supply. So not treated as a supply. So this is not a supply. So hence no GST. That is what the concept, right? So this is the next clarification. So the notes is clearly given here. You can just go through this. The next one is regarding a small one, reinsurance. See, actually, reinsurance services provided with respect to life and health insurance services, which are, sorry, not life and health insurance, life and general insurance services with specified schemes in entry number 35, 36 and 40. If you see, there is an entry where entry 36A, reinsurance is also covered. So reinsurance, if you provide also, that is exempt with respect to the specified life insurance and other general insurances. So here reinsurance word includes retrocession. So that is what the one clarification, nothing that greatly relevant. Yes, you can just remember that word, reinsurance includes retrocession, that is more than sufficient. Now if you see there is a department, government department called Central Public Works Department, which will be developing and maintaining the public parks in government residential colonies, government offices and other public areas. And they are also regarding maintaining their duties also, like regarding this community assets, urban forestry and protection of environment, promotion of ecological aspects, all these things. These are generally functions entrusted under Article 243G and 243W. So regarding this activity, see, this is nothing but an activity which is covered under Article 243G or W. So for this, government is providing various services. Sir, not only government providing services here, for government to government. That means, for example, sir, maintenance of parks, etc., etc., or see the horticulture works, etc. These things are outsourced by this CPWD, the department, to outsiders, the private people. So they are providing either pure service or composite supply, where you know that 75-25 ratio, 75% service and 25% worth goods can be supplied, all that. So in such way, if anybody is providing services by way of even horticulture and horticulture works to CPWD, sir, these are also nothing but covered under very much entry number 3 and 3A. So it is exempt under GST. So in short, any private person, sir, what they are doing, they are providing services to CPWD. What is the service? Services with respect to horticulture and the other works, horticulture and related works. So there, because it is covered under 243W and 243G, such activities, if you are providing to government departments, all that stuff, so government is exempt under GST. So this is exempt. So simple. If you remember, we have discussed in exemptions also maintenance of street lights, all that, such type of services we are providing to government, all that. So here the clarification is regarding, sir, Central Public Works Department is outsourcing a work where people are providing services by way of doing this horticulture or horticulture related works to CPWD, is exempt under GST. Okay, right. So that is what next clarification. The another clarification is with respect to DMFT. So DMFT is nothing but District Mineral Foundation Trust. So this trust generally is for the purpose of, sir, this is set up normally because of the mining, etc., etc., the people who are living in the surrounding areas, for their welfare. So for the benefit of persons and the areas affected due to mining related operations, so DMFT has been set up. Their main responsibility is to take care of providing drinking water, and environment protection, healthcare facilities, education, welfare of women and children over there, and supply of medical equipment. Sir, this has been set up by state governments. These are being set up by state governments, hence they are called as governmental authorities. Okay. So whatever the exemptions available for every governmental authority, the same things are also available to these people also. The same eligible for same exemptions which are available to any other governmental authority. Okay. So any services or supplies made normally through this DMF fund, see, they are providing this without consideration. They have the funds. The funds may be provided by the government, all that stuff. So they have the funds and they are providing services from those funds, or they are providing some supplies out of those funds. For that, they are not charging any consideration from the beneficiaries. So they are not at all supply. Okay, so that is another point. So whatever the supplies they are providing is not for any consideration from the beneficiaries. So whatever they are supplying is not a supply. Second thing, sir, they should be treated as governmental authority for the purpose of this GST. Whatever exemptions available, wherever the exemptions available for governmental authority, the same exemptions are also available for this particular people. Okay, so that is what the next clarification all about. See, being registration chapter, ditto same for CA inter and final students. So you can both use this video. So I'm recording this using final material, but still it is equally applicable for inter students also. But inter students, some small points, whatever not applicable for you, that I have removed while posting video exclusively for you. So in the marathon, nothing will be like related to inter people. So in final video, fully will be there for final students. Okay, so nothing to worry. Now coming to the point, sir, registration chapter. Section 22 to section 30 we are going to see here. First of all, section 22, you know, who are liable for registrations? Persons who are liable for registration. So persons liable for registration, we have seen 10, 20, 40 lakh threshold limit and all. So for that purpose, you know, we will divide entire India into three parts. One is special category states. Sir, Manipur, Mizoram, Tripura, Nagaland. The code to remember this is make my trip to Nagaland without mega. That means M for Manipur, Mizoram, not Meghalaya. So the point is, the code to remember is make my trip to Nagaland without mega. That is a code. Sir, in this first part of India, in all this, see, generally special category states for the purpose of section 10, 8 states, stunning ma'am code we have seen. But here it is only make my trip to Nagaland without mega. So only 4 states. 4 states will come in next part. Now, part 1, when we are talking about this, sir, please understand in part 1, sir, whatever you are doing in this particular part 1, exclusively may be dealing with goods, exclusively may be services, both goods and services. For whatever you do here, the threshold limit will be 10 lakhs. The threshold limit will be 10 lakhs. That is part 1. Okay, now coming to part 2, I repeat, India we are dividing fully into 3 parts. One is make my trip to Nagaland without mega. 4 states, whatever you do there, 10 lakhs only, exclusively goods, exclusively services, both goods and services, it is same. Next, part 2, the code to remember this is, we know, we watch cricket and we see in cricket there will be how many stumps? 3. This side 3, that side 3, correct? So total 6 stumps. So the code for remembering this here is 6 a stump. Okay, that means 6 states. 6 denotes for 6 states here. So 6 a stump. Sir, stunning ma'am, whatever the 4 states are missing, sir, Sikkim is missing, Uttarakhand is missing, next Meghalaya is missing, and next one Arunachal Pradesh was missing in part 1, correct? So here if you see, whatever we have not taken here, 4 states, Sikkim, Uttarakhand, Arunachal Pradesh, Meghalaya will come here, and Telangana, Puducherry will be added. Okay, so these 6 states. Okay, fine. We know the code 6 system. In this code, sir, in this part, in Arunachal Pradesh, Sikkim, Telangana, Uttarakhand, Meghalaya, and Puducherry. Okay, whatever you do, exclusively goods, exclusively services, both goods and services, it is absolutely, the threshold limit is just 20 lakhs. Okay, that is what the concept. Now coming to other part, remaining all other states and union territories are part 3. Sir, here if you are exclusively dealing with goods, then only it is 40 lakhs. No sir, I am dealing exclusively with services also, as well as both goods and services also, sir, then it is just 20 lakhs. But even though you are exclusively dealing with goods, sir, if you are dealing with these special products, pan masala, tobacco, ice cream, bricks, fossil meals, earthen or roofing tiles, fly ash bricks, all that stuff, sir, for this 40 lakhs limit is not applicable. That means only 20 lakh threshold limit is applicable for these people. If you see, the same goods we have seen even in composition scheme, but the only difference is, sir, in composition scheme aerated waters was there, here it is not there. That is the only difference, if you have understood. So this is the flow chart. Okay, so 1 second, if you want you can take screenshot of this. So that's all. With this, threshold limits are over. See, so simple, just like easy peasy to see, we have finished this. The threshold limits of registration. Now you will never forget threshold limits 10, 20, 40 always. Okay, you can divide entire country into 3 parts. Make my trip to Nagaland without mega, next 6 system and others. That's all. 10, 20, 40 and 20. Okay sir, fine. Now here, sir, what if the threshold limit is in one branch? What is the threshold limit? If one branch is in special category state, another branch is in non-special category state, it will fall down to 10 lakhs. Sir, in the special category state, if they are wholly dealing with exempt or non-taxable supplies, then what should I do? Then every state will have their own limits. Okay, let me see for example. Sir, here Andhra and Manipur, we are making supplies 32 lakhs and 6 lakhs. Aggregate turnover is 38 lakhs. But for both the states, it will become 10 lakhs only. So in both the states, you are supposed to take registration. Okay, next. Sir, here I am making a taxable, I am making supplies, taxable supplies from Andhra Pradesh and exempt supplies from Manipur. If you see, sir, aggregate turnover is 38 lakhs. But sir, threshold limit, what is the threshold limit? Because in special category state, you are exclusively dealing with exempt supplies. You are exclusively dealing with exempt supplies. Sir, you can happily what? The other state, whatever there, the other state in that branch, that will happily enjoy the threshold limit. It will not be disturbed by the presence of special category state. Are you understanding the point? So I repeat, sir, if there is one branch is in special category state, one branch outside the special category state, in special category state, if you are dealing with exclusively exempt supplies, then your presence in special category state will not have any impact on the non-special category state branch. It will enjoy its own threshold limit. Hope it is clear for you. Now, sir, what is the definition of aggregate turnover? We have seen already aggregate turnover definition in composition scheme, correct? Sir, aggregate turnover, very important point. As I told you before also, aggregate turnover, the very important definition. Sir, aggregate turnover means it includes taxable supplies, exempt supplies, exports, interstate supplies between distinct persons. That means distinct person, one distinct person to another distinct person, interstate supply will be added in aggregate turnover, but it will not exclude CGST, SGST, UTGST, IGST, GST compensation cess and value of inward supplies on which tax has been paid under reverse charge mechanism. Okay, so that is what the concept. Next, sir, what are the important points regarding aggregate turnover? Aggregate turnover includes turnover of all the branches. We know that is pan India turnover, value of exported goods and services, exempted goods or services, interstate supplies between distinct persons. All these things will be added. Next, all supplies made by the taxable person, whether on his own account or made on behalf of all the principals. So that also will be added in this aggregate turnover. So that is what the concept. So all the supplies made by the taxable person. If you are a taxable person, whatever the supplies you are making on your own account and also on behalf of some other principals, that also will be added in your aggregate turnover. Okay, next. That is the aggregate turnover definition. Now coming to the next one. Sir, as I already discussed, sir, some goods are not eligible for 40 lakh threshold limit. They will enjoy only 20 lakh or 10 lakhs if they are in special category state. That point we have already discussed. Next. That 10 lakhs overall limit will follow all the stuff we have discussed. Next, interest income. Point G, here something I have missed out. So interest income, if you are using our compact book, just or my GST book, just make sure here interest income. Sir, interest income, see, as we have already discussed, interest income shall be ignored for the purpose of calculating aggregate turnover, but this is only for the purpose of section 10. If you remember, sir, for section 10 we will ignore interest income. For section 10 we will ignore interest income, but this is not section 10. We are calculating aggregate turnover for section 22, correct? So here interest income cannot be ignored. Okay, so now if you see, Mr. Hanuman of Andhra Pradesh provides following supplies of goods. He made some supplies to Mr. Ram, 12 lakhs, to Mr. Lakshman, 7 lakhs, to Sita, 10 lakhs, and he earned interest on fixed deposit from Ayodhya Bank, 2 lakhs, and supplies made on behalf of his principal, Mr. Sugriv, 2 lakhs. What is his aggregate turnover, and is he eligible for registration? Is he liable for registration, not eligible for registration? Sir, aggregate turnover, if you see, this 12 lakhs, this 7 lakhs, this 10 lakhs, this 2 lakhs also we should add, and this 2 lakhs also we should add. Total how much? Sir, aggregate turnover is 12, 19, 27, 27 plus 4. 1 second. 12 plus 7, 19, 19, 29, sorry, 29, 29 plus 4, 33 lakhs. Sir, aggregate turnover 33 lakhs, but still he enjoys the threshold limit of 40 lakhs. Sir, what is this I am trying to tell here? Sir, first of all, understand, his aggregate turnover we have understood, whether he is liable for registration or not. Sir, here my only point is, he is receiving an interest income, correct? He is receiving an interest income. Because he is receiving interest income, it is supply of service. So his threshold limit we should fall down to 20 lakhs? No, the answer is absolutely no. So here there is an explanation saying that, sir, the explanation says, even though you are providing, normally if you are providing services, your threshold limit is 10 lakh, 20 lakh, correct? in part 3 also, sir, if you are providing in all the states, part 1, part 2, part 3 are there, no, 3 parts. Sir, here if you see, if you are providing services 10 lakh, 20 lakh, and here it is 20 lakh. If you are dealing with exclusively services or both goods and services, here we are in Andhra Pradesh, even though this fellow is earning service income, he is lending money which is nothing but service, and for which he is getting interest. So automatically threshold limit should fall down to what? Threshold limit should fall down to 20 lakhs. But the law says, sir, if any person is receiving only interest income or discount income and no other income from any other services, then he will be still. So sorry, there was an audio issue. So as the law says, if any person is receiving the interest income or discount income alone, and if he is just dealing with only goods, he is dealing with goods, but he is only having one service income, that is interest, then still he will be treated as he is exclusively dealing with goods, and hence he is eligible for threshold limit of 40 lakhs. That is what the concept. Okay, fine. Next, so the next one is simple one. If there is any transfer of business, sir, if there is any transfer of business, obviously what, the transferor is registered now, the transferee also should definitely go for registration. And if it is a corporate style of amalgamation, merger, all these things, demerger, etc., then in such case also, if the transferor entity is already registered, the resultant entity should also go for GST registration. So that is what the concept all about. So here there are some examples also, you can just go through this. So the next section is section 24, compulsory registration. If you see compulsory registration here, see who has to take compulsory registration. Sir, if you are dealing with interstate supply of goods, then definitely you should take for compulsory registration. For that we have a notes here. See, first of all, understand, you are making interstate supplies. Sir, interstate supplies I am doing, sir, but I am doing interstate supply of services, sir. Interstate supply of services. If you are dealing with interstate supply of services, you happily enjoy the threshold limit. Enjoy the threshold limit, that is 10 lakh, 20 lakh, whatever is applicable for you based upon the state. Sir, enjoy the threshold limit. No, sir, I am dealing with goods. If you are dealing with goods, and if you are dealing with notified handicraft goods or any other notified goods, then in such case you also can make interstate supply with respect to those goods, but you should obtain a PAN card and generate Eway bill wherever you are transporting the goods. But the important thing here is, sir, for them the threshold limit of 10 lakh, 20 lakh is applicable, 40 lakh threshold is not applicable. Okay, that is what the concept. Okay, sir, what if it is other goods? Any other goods you are dealing and you are making interstate supplies, definitely you should take registration. Compulsory registration is required. That is what the concept. Right. So that is with respect to first point. Now the next one. Sir, casual taxable person. Casual taxable person also same story. With respect to notified handicraft goods, yes, he can enjoy the relaxation, but otherwise he has to definitely take registration. Okay, if he is dealing with notified handicraft goods means which are like predominantly made by hand, 51% at least by hand and 49% machinery is fine. Next, the person is liable to pay tax under RCM. That means the recipient who is liable to pay GST, he should definitely take registration. Next, But please understand here one important thing: when you are going with RCM, in RCM cases, certain cases they will say only if the recipient is registered, RCM will come into picture. In that case, if he is already registered, then he will pay GST under RCM. Or if he is not registered, RCM is only not applicable, because RCM is applicable only when he is registered. So if he is unregistered, automatically RCM will not come into picture. He need not take registration. But sir, in certain cases like body sponsorship services, if you see, recipient should be body corporate or a partnership firm. So in that case, they did not focus on whether the recipient should be registered or unregistered. So if the recipient is already registered there, he will go and pay GST directly. No sir, he is unregistered, then he will come and take registration under section 24, because compulsory liable for registration, because he is liable to pay GST under RCM, and he will pay. So simple. Law says registered, then only RCM. So registered only RCM, unregistered FCM. If law says just if this fellow is coming into picture, RCM will come into picture. Whether he is registered or unregistered, it is not specified in law. In that case, registered also RCM, unregistered also RCM. So if he is registered already, let him proceed, pay tax. If he is unregistered, first take registration and then pay tax. Okay, that is what the point. Okay, fine. Coming back to the one, sir, persons liable to pay tax under RCM. Yes, we have seen. Next, persons required to pay tax under section 9 subsection 5. E-commerce operator, Ola, Swiggy, all that. Next, the non-resident taxable person. Next, person supplying online money gaming from a place outside India to a person in India. Example, best example, Bet365 or PUBG, etc. Any other OIDR services where without information technology they cannot supply the service. Next, every e-commerce operator who is required to collect tax at source. Amazon example. Next, regarding that we will see the example. Just wait for some time. Next, persons who are required to deduct tax at source under section 51. Any local authority, Greater Chennai Corporation or Bruhat Bengaluru Mahanagarapalike, like that, or Greater Hyderabad Municipal Corporation, GHMC, that way. Next, persons who supplies on behalf of other taxable person. That means if the principal is registered or liable for registration, then automatically agent is also supposed to take registration. Next, input service distributors. Definitely to distribute the credit, he has to take registration. That is CA final concept. Okay, so in CA final, you would have seen input service distributor. That fellow to distribute the credit automatically has to take registration, without which he cannot distribute the credit. Next, the next one is the person who makes supply other than section 9 subsection 5 through e-commerce operator who are required to collect tax at source under section 52. So persons who make supply through e-commerce operator. First we have seen e-commerce operator to whom section 52 is applicable. I have told you is that here example Amazon. Sir, through Amazon whoever is supplying, that fellow has to take registration, but relaxation is there in section 23. We will see the notes here actually. Next. Okay. Sorry. Here when I'm discussing, I discussed about the supply of okay. OIDR services is here. Yes, example PUBG gaming company, all that, or Netflix also you can take. Next, here person supplying online money gaming. Okay. Online money gaming from place outside India to a person in India. Okay. Online money gaming, Bet365, Rummy Circle kind of games from outside India. Online money gaming is different. Online gaming is different. Online money gaming involves betting. So online gaming you can take PUBG, online money gaming you can take Rummy Circle, Bet365, Dream11 kind of thing. Okay, so if anybody from outside India providing these services to a person in India, then definitely they should take registration. Very important, market important. Now coming to e-commerce operators, we have certain discussion to make. Some small flowchart we have. Sir, here understand e-commerce operators. Now let us take two types of e-commerce operator covered under 9 subsection 5 and others. Sir, e-commerce operator covered under 9 subsection 5 means that they are liable to pay GST under 9 subsection 5. In that case, sir, because e-commerce operator is liable to pay GST, TCS provisions are not applicable. TCS provisions are not applicable. So who is liable to pay GST here? E-commerce operator. So who will take registration? E-commerce operator will take registration. Okay. So registration will be taken by e-commerce operator. So supplier through e-commerce operator, that fellow need not take registration because e-commerce operator is liable to pay GST. No, why should I take registration? No, sir. No, sir. Other e-commerce operators, sir. For here example, we can take Ola, Uber, all that. Here, if you come Amazon, Flipkart, all that. Sir, here supplier is only liable to pay GST. E-commerce operator doesn't have any responsibility to pay GST here. So TCS provisions are applicable in this case. So because TCS provisions are applicable, e-commerce operator is definitely liable to take registration because he has to collect tax at source and give it to government. Number one. Next, sir, supplier also should take registration. But section 23 says that your supplier, you are supplying goods or services through e-commerce operator, you enjoy the threshold limit, but the threshold limit is only 10 or 20 lakh, whatever it is, as the case may be. You just enjoy the threshold limit. That is what they are saying. So hope it is clear for you. So you can just go with the flow chart here. So e-commerce operators which are covered under 9 subsection 5, e-commerce operator is liable to pay GST, TCS will not come into picture, and e-commerce operator will take GST if he is liable to pay GST. Okay. So supplier need not take GST registration. In other cases, supplier is liable to pay GST. So TCS provisions are applicable, and e-commerce operator is liable to pay take registration, and supplier of goods and services, they can enjoy the threshold limits. Next. So I think we are done with section 24 now. So with this we are done with section 24. So coming to next one, section 23, persons not required to take registration. So mostly we would have done them in section 24 itself. Persons who are exclusively making non-taxable supplies and exempt supplies. For example, I am running a liquor shop, Amrut liquor shop, no need to take GST registration. Or Dr. Vishnuvardhan MBBS FRCS, London return, no need to take GST registration. Any agriculturist who is an individual or HEF to the extent of produce of cultivating the land is not liable for registration. That means here we are not talking about producer companies or any agri based companies, sir. They are liable to take registration. Okay. Next, persons who are engaged exclusively in making RCM supplies other than this metal scrap dealer. Okay, that means for example Jolly LLB advocate is there, sir. They are liable, they are not required to take any registration because all their supplies are covered under RCM. But if it is a metal scrap dealer, please understand, if it is for metal scrap dealer, so metal scrap dealer, what they will do, as long as they are unregistered, RCM will come into picture. Once their threshold limits are exceeding, then they should take registration. Simple. They cannot say because metal scrap is covered under RCM, we will not take registration. It is not like that. I repeat, metal scrap dealers. So if you see, I am a metal scrap dealer, sir. So when my sales are zero until it touches the threshold limit, then all my sales are subjected to RCM, so the recipient will pay GST. And once it is exceeding the threshold limit, then what will happen? I will become liable for registration and I will take registration. And now reverse charge mechanism is not applicable, only forward charge. So I repeat here, sir, simple. If you are a metal scrap dealer, please understand, as long as your aggregate turnover is not touching the threshold limit, you enjoy the relaxation and GST shall be paid under RCM. But once your aggregate turnover exceeds the threshold limit, then you are supposed to take registration and then FCM will be coming into picture. So as long as you are liable for registration and you have not taken registration, so RCM will come into picture. Once you become liable for registration, then you have to take registration and automatically FCM will continue. Okay, you cannot escape from taking registration. That is what we are trying to tell here. Next, persons making interstate supply of services can enjoy threshold limit of 10-20 lakhs. That is what we have discussed here actually. So if you are making interstate supply of services, straight away you can enjoy threshold limit. But if you are dealing with goods, you should definitely go for compulsory registration. Otherwise, in case of notified handicraft goods, all that stuff. So this point also already discussed, that is regarding that notified handicraft goods. And any person making supply of goods or services through e-commerce operator, that is what we have just now discussed. No, sir, through e-commerce operator, this point, sir, this is what we have understood. Okay, this is from section 23, the relaxation. So we have already discussed section 23 while discussing section 24 itself. Okay, so the person making supply of goods, if you see through e-commerce operator, as we have discussed, that they can enjoy the threshold limit, the relaxation, correct, but they have to follow a procedure. Please understand, earlier we were not allowing the people dealing with goods selling through e-commerce operator. The sales through e-commerce operator were not allowed to them unless they got the registration, because if they are making supplies through e-commerce operator, they can make interstate supplies also. And we have a provision in section 24, if you are making interstate supply of goods, you should definitely take registration, correct. So if I allow you to make sales through e-commerce operator, you may make interstate supplies even without registration. Like that, government had a fear. Now they brought in a procedure where, sir, if you are a person dealing with goods also, you can enjoy happily go through e-commerce operator, you can make a sales and you can enjoy the threshold limit for registration. But the condition is you should not make any interstate supplies and you should not make supplies in more than one state. You should have a PAN and declare that PAN in the GST common portal and obtain a, give your address, the place of business, all that stuff, and the state whatever is there, you select that and you will get one enrollment number. That enrollment number will not be granted more than one. That means for every state you cannot get one enrollment number. What you should do, you take that enrollment number and give to the e-commerce operator. So e-commerce operator should make sure that you are not making any interstate supplies. So I repeat, if you want to sell goods through e-commerce operators, or what you should do, sir, you should first go to GST portal, give your PAN, business details, I mean the address, place of business, the state, everything. You'll get enrollment number, and for one PAN only one enrollment number will be granted. It cannot be like for each and every state you will get one enrollment number. Okay, so that is one. And next you have to submit that enrollment number to the e-commerce operator, and e-commerce operator should make sure that you are not making interstate supplies. So tomorrow if I become liable for registration, and then if I want to take registration, then you take registration, but enrollment number whatever is there, that ceases to be valid. That is what the concept. Next, commission agent who is making sale or purchase of agricultural produce through APMC. Sorry, commission agent who making sale or purchase of agricultural produce. That's all. Is he required to take registration, sir? He is dealing something which is exclusively exempt, sir. Then for him, what is the need of taking GST registration? So that is what all about. Section 23. Persons not liable for registration. So the next one, if you see section 25, 26, 27 is a time limit for taking registration. See, normally for casual taxable persons and non-resident taxable persons, they should apply for registration at least 5 days prior to the commencement of the business. But for others, sir, first start business, become liable for registration under section 22 or 24, and after becoming liable within 30 days, you apply for registration. That is what the concept. Sir, if you are doing supplies from territorial waters, then take the registration from the state or union territory which is nearest to the appropriate baseline. Simple. And while taking registration, you know PAN is the basic document which is mandatory. And if you are applying for registration to comply with section 51 provisions, the PAN is the document which is necessary for you. With that, you can proceed. Okay, so that is what the point. Next, sir, suppose if I am a person from outside India providing online gaming, money gaming services to person in India, sir, then should I declare my PAN and address or the state service? Not required, because you will not be having any PAN and you will not be residing in any of the states of India, correct? So these people are excluded from declaring their PAN and the state in which they are residing. But understand, these people, when they are taking registration, they should have an authorized representative in India. So they should appoint a person who is authorized person, and that fellow's PAN will be used. That is a different story. Okay, fine. Now coming to the next one, state-wise registration. This we have already discussed in supply chapter. Nothing but, sir, wherever you are having branches in multiple states, so in those states from where you are making the supply, you have to take registration, provided the threshold limits, etc., etc. Sir, if I am having multiple branches within the same state, should I go for multiple registration, sir? Not required. Single registration is sufficient. It is not required to have single registration or mandatory. Only you should have one registration. You can have multiple registrations. It is up to you. So one place he can declare multiple branches, one place he can declare as principal place of business, other places, other branches he can declare it as additional place of businesses. Okay. Next, as I told you, sir, taxpayer having multiple places of business in one state, separate registration is optional. Okay, but if they want to take registration, they can take registration, and later on if they take registration, what will happen? The supplies happening between the same branches within that particular state also will become supply. They should raise a tax invoice and they should pay tax on that, and recipient can take ITC. All that nonsense is there, just like normally the points we have already discussed in supply chapter. Next, registration under composition levy. So if one registered person in composition scheme also we have discussed that if one fellow wants to go for normal scheme and all other places become, all other registrations will become ineligible for composition scheme. Do you remember that in composition scheme we have multiple branches, sir? Some branches wants to go for normal scheme, some branches we want to go for composition scheme. Is it possible? Not possible, right? Everybody go with composition scheme or everybody go with normal scheme. That is what we have already discussed. Same way, sir, if one fellow becomes ineligible for composition scheme, automatically other persons also will become ineligible for composition scheme. That is another point. Next, this is something important here, sir. What is that? Sir, normally in one state you said there are like single registration is sufficient, multiple registrations not required, not mandatory, correct? Now, sir, what if in the same state I have one unit in special economic zone, one unit in domestic tariff area, that is outside special economic zone? Then what should I do, sir? Then definitely you should take multiple registration, separate registration. So in same state, I repeat, one unit is in domestic tariff area and one unit is in inside special economic zone. Then definitely you should take two registrations. That is what the concept. Okay, one registration is not sufficient. Here regarding that, there are examples, you can just go through this. And for all the registrations within the SCZ, sir, within the same state, yes, one registration is sufficient. So hope it is clear for you. Next, voluntary registration. Yes, you can go for voluntary registration even though you are not liable for registrations. And distinct persons, 25 subsection 4 and subsection 5, we have already discussed. Next, another important one, sir, what is unique identity number? Okay, what is unique identity number? Okay, so here before going to that, I will just show one small point. So here, how many registrations required now? For all SCZs within the same state, one registration is sufficient, and one for outside DTA. Another registration for a branch outside SC. Okay, so there is what the answer for this question. Check that properly. Next, so as we were discussing unique identification number. Sir, what is unique identity number? Please understand, unique identity number, simple, nothing but, sir, this is granted to specialized agencies of UNO or any multilateral or financial institutions, consulates or embassies. Why this is granted? Now, purely for granting them refund on the notified supplies they have purchased. Sir, these foreign embassies, consulates, they are purchasing something on the notified purchases, whatever the GST they have paid, they can ask for refund. That refund to ask, they should have some communication with the GST department. That communication itself is nothing but unique identity number. So these foreign consulates, embassies or specialized agencies of UNO, they will make an application to the GST department, sir, like this we want a unique identity number, then that will be granted. Or MIA, that is Ministry of External Affairs, MEA, sir, they also can recommend to the GST department, then they will be granted unique identity number. So either they can apply, or on the recommendations of MIA, so they will get unique identity number within 3 working days. And this is a centralized UIN. So state wise you need not take any UIN, centralized UIN. So that is what the point. So the purpose is only for what? Claiming the refund of taxes paid on notified inward supplies. Okay, that is with respect to unique identity number. So if you look at the next one, that is Suo Moto registration by proper officer. The Suo Moto registration by proper officer. Suo Moto registration by proper officer. See, generally you are liable to register, but you have not taken registration and you are caught by the proper officer during that inquiry, search or inspection, any other proceedings. Now what the proper officer will do? Proper officer will grant you the temporary registration and will ask you to submit all the relevant documents and then take the final registration. So what is that you have to do now? You have one option. Yes sir, now I am caught red-handedly, so let me apply for registration, like that, submit all the documents whatever are required and take the registration. This is number one. Within 90 days you can do this. Number two, you may feel like proper officer doesn't know anything, so let me go for an appeal. You can file an appeal inside the department, within the department itself, and ask, sir, whatever the order passed by your officer is not correct. If they agree with you, no problem. But they are saying, no, 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 our proper officer is correct. Then what you will do? Then nothing to do, sir. Within 30 days, what we have to do? Within 30 days from the grant of order, passing the order by the adjudicating authority, sir, what you should do? You should apply for registration within 30 days. Okay, that is what the concept of Suo Moto registration. So the next one, procedure for registration. Before going for procedure for registration, let me just finish this off. Deemed registration. Sir, there is a single registration for all the taxes, sir. Separate tax, you need not take separate registration. So one single registration is sufficient. And any registration granted under any SGST or UTGST Act, it is deemed to be that registration or UN is granted under CGST Act also. Okay, that is the another point. Next, effective date of registration. Very important point, effective date of registration. So what is this effective date of registration? Now, if you are applying for registration within 30 days from the date of becoming liable for registration, effective date of registration is when you became liable. No, sir, after 30 days, if you are applying, then it is date of grant of registration certificate. So, for example, sir, you became liable on 1st November. You are applying for registration on So you're applying for registration. You're applying for registration on 18th November. Within 30 days only you're applying and you're getting registration certificate. Second. Sir, 1st November you became liable. 18th November you are making an application. 4th December you are getting registration certificate. So what is the effective date of registration? Effective date of registration will be 1st November. Effective date of registration will be 1st November. Okay, that will be 1st November. Am I clear? No, sir, I became liable for registration on 1st November, but I'm applying for registration on 4th December, sir. I got registration certificate on 10th December. What is the effective date of registration? 10th December will be the effective date of registration. Okay, hope I am clear. Simple. If you are applying for registration within 30 days, date of becoming liable itself will be the effective date. And one more advantage, if you apply within 30 days is you can take ITC under section 18 subsection 1 clause A, if you remember. Okay, otherwise you cannot take that. Sir, I am applying for registration after 30 days, then the effective date of registration is date of grant of registration certificate, not the date of becoming liable. So that is what the concept. Next, so there are small points which you can just go through. Next, so let us move on to registration procedure. Right, so if you go through procedure for registration, there are two parts, part 1 and part 2. Part 1 is generally like what we should do from the applicant side, and part 2 is all about processing done from tax officer, proper officer side. Okay, so that is what the concept. Now coming to the point, sir, part 1 what it says. First of all, sir, in part 1 again there are two parts, are part A and part B. First thing, when we are applying for registration, we should give our PAN number, mobile number and email ID and state. Whatever the PAN you have given, that will be cross verified with the database of CBDT, Central Board of Direct Taxes, and your mobile number and mail ID will be verified through OTPs which are sent to the PAN number, linked mobile number and mail ID. So the point is, sir, mobile number and mail ID will be verified through sending OTPs to the PAN linked mobile and email addresses. Okay, that is another interesting thing, recent change. Next, once it is done, all these things, that is your PAN, mobile number, mail IDs are verified, you will get one thing called temporary reference number. By using temporary reference number, you can go inside and finish the part B of the application. So in part B of the application, nothing but all your personal details, that means the first name, middle name, last name, all the stuff, what is the type of business, regarding business details, then the place of business, principal place of business, additional place of business, what is the business you are going to do, top 5 goods and top 5 services what you are going to deal with, like that, complete details. If it is a partnership firm, all the details of the partners, company, directors details, all these things will be given and will be submitted. The part B of the application will be submitted. Okay, now so as I was telling, sir, taxpayer details we will be giving, business details will be giving, authorized signatory, authorized representative, principal place of business, additional place of business, goods and services, bank account, like this, all details you will be giving in the application. Okay, so now after giving all those details, you will submit the application. While submitting the application, please understand there will be something called Aadhaar authentication. So whether you are selecting or not, that becomes very crucial. So imagine you have selected that Aadhaar authentication option. Now what will happen, sir, if you have selected Aadhaar authentication option? Sir, how do Aadhaar authentication happen? How does this Aadhaar authentication happens? Now please understand, sir, when we have selected Aadhaar authentication option, what will happen? Sir, we will get a mail to our mail ID regarding the Aadhaar authentication link, and that link, if you click, that will be taken you to a browser. In that, you enter your Aadhaar number and the mobile number to which the Aadhaar is linked. To that mobile number, OTP will be sent, and that OTP, if you enter, that means your Aadhaar authentication is successful. Okay, so if Aadhaar authentication is successful, that's all. This is how Aadhaar authentication happens. If Aadhaar authentication happens, what is the advantage? Now, sir, the advantage is the processing of your application will be done by the proper officer in 7 working days. That means within 7 working days from the submission of application, sir, either your application will be accepted or they will be sending a show cause notice to you. Registration certificate they will grant, or they will send a show cause notice to you asking for some more details or clarifications. And now you should reply for those clarifications within 7 working days. And once you reply for the clarification, sir, if the proper officer is happy with your reply, then he will accept that reply and he will grant you registration certificate. If he is not happy with that reply, then automatically he will reject the application. So this is what happens if Aadhaar authentication is successful. So please understand, if Aadhaar authentication is successful, one biggest advantage is the processing time limit, of the application. The processing time limit of the application, sir, it will be processed within 7 working days. So within 7 working days, either you will get registration certificate or you will get a show cause notice. Once you get a show cause notice, reply to the proper officer within 7 working days. So if you are not replying, the application is deemed to be rejected. Please understand that. Sir, you are giving the reply and he is happy with that reply, then You are giving reply, he is happy with your reply, then he will grant you registration certificate. No sir, he is not happy, then he will reject your application. He will reject your application. So he will also again process within 7 working days. Now the problem is, please understand, sir, what if the Aadhaar authentication has failed? Maybe because the name mismatch or the mobile number is not available, some reasons, some technical reasons, Aadhaar authentication failed. Or you have not opted for Aadhaar authentication itself when you are applying for registration. Or proper officer wants to carry out site verification. Or the system has selected your application for site verification and biometric based Aadhaar authentication. That means there is no OTP verification and all. They will take your thumb impression and will do biometric based Aadhaar authentication. For those cases, what they will do, they will take 30 days time for processing your application. 30 days from the date of submission of application, they will process your application. So within 30 days from the date of submission of application, that they will either grant registration certificate to you, or they will ask you some clarifications by sending show cause notice. Now what you should do, again same story, you should reply to the show cause notice within 7 working days. And if you are replying within 7 working days, proper officer may feel happy with that reply and he may grant you registration certificate. Or if he is not okay with that, then he will reject your application. That means, please understand, if Aadhaar authentication has failed, or Aadhaar authentication not opted, or proper officer has selected your file for site verification, or system has selected your file for site verification and biometric based Aadhaar authentication, then the starting point, the processing of the application, the starting point will differ. So generally here what will happen, sir, here it is 7 working days, 7 working days, 7 working days, correct? But here what will happen, this is 30 days, 7 working days, 7 working days. That is how it will change. And here the 30 days also, if you see, the 30 days calculation will be different. The 30 days is from the date of submission of application. What do you mean by that, sir? What do you mean by that? Na, sir, 30 days from the date of submission of application means, the date of submission of application means the date of Aadhaar authentication, or 15 days from the submission of application in part B of form GST REG 01. What does it mean, sir? That means, sir, you submitted the application part B from that date of Aadhaar authentication, or 15 days, whichever is earlier. That means if you have selected Aadhaar authentication and if you are not doing, the system will wait for 15 days for you to do Aadhaar authentication. That means here 15 days waiting period plus their 30 days, total 45 days you have to wait if you are not doing Aadhaar authentication. So Aadhaar authentication is really very important for the registration, so that the time delay can be reduced. Okay, that is the concept. Next. So we are done with this. What if Aadhaar authentication happens and what if Aadhaar authentication is not happening? That the time limit of processing all these things will differ, that we have understood. Now coming to the point. Next. Sir, here we are discussing time limit, no, 7 days, 7 working days, 30 days, all that stuff and all. Sir, in those cases, please understand, proper officer also has a time limit, you are also having time limit. If proper officer is not doing his duty within the time limit, then the application is deemed to be accepted. You are not doing your duty within the time limit, that means you are not replying within the time limits, then the application is deemed to be rejected. That is what important thing. Okay, sir, fine. Now, sir, so long you have been worrying about doing Aadhaar authentication, sir. For whom we should do Aadhaar authentication, sir? How I have already explained. You will get the mail, all this stuff, entering the OTP. Everything I have explained. How I have explained. So the only thing is, sir, who should do the Aadhaar authentication, sir? How we will do that, we have discussed. Who should get it done? Sir, obviously, if it is a sole proprietor business individual, he himself should get Aadhaar authentication done. In other cases, for HUF Karta, for company managing director or whole-time director, for a partnership firm partner, for AOPI, BOI society, their members, for trust, board of trustees. For them, we should get the Aadhaar authentication done. Now, sir, when physical verification of the principal place of business will be done? As I already told you, Aadhaar authentication failed, or you have not opted, or proper officer wants to carry out site verification, or the common portal has selected your application based on the data analysis and risk parameters for biometric based Aadhaar authentication, then physical verification will be done. And physical verification, for doing physical verification, the interesting thing is, sir, the physical presence of the applicant or the registered person is not required, sir. Physical presence of the applicant or the registered person is not required for carrying out the physical verification of the premises. Okay, that is what the point. Next. So now when they are carrying out the physical verification, what will happen? Sir, after the grant of registration, they may be doing physical verification, or before the grant of registration also they may be doing the physical verification. Sir, if they are doing the physical verification after grant of registration, you may be feeling, sir, after granting registration, why physical verification will come into picture, sir? Because Aadhaar authentication has been like a recent topic, not from the beginning of GST. So earlier, who got registered under GST law, they did not do Aadhaar authentication. So now, sir, if they are getting their Aadhaar authentication done, sir, the verification report will be uploaded within period of 15 working days after that verification. Okay. Now, sir, before the grant of registration, that means your application has to be verified, correct? So other physical verification is being done, sir. Somebody will come and do the physical verification, and they will upload a report to the other officer. That officer will process the application fully and grant you registration certificate. So whoever is coming for the physical verification, when he should complete the physical verification, na, at least 5 working days prior to the completion of the time limit. We have discussed 30 days, all that stuff for processing the application. So here, before completion of this 30 days, at least 5 days prior to completion of this time limit, somebody should go do site verification and give me the report. Then I will process the application and see whether okay, everything is fine, I should grant registration certificate, or I should ask him any clarifications like that. Then I will decide. So first one officer will go and do site verification, they will give a report to the higher officer, and that fellow will do the processing of the application. Okay, so when that other officer should go and do site verification, at least 5 days prior to the 5 days prior to the completion of this time limit, the other officer should go and do this. Okay, that is what the concept. Next, as I told, while doing this site verification, that particular registered person or the applicant need not be present physically, right? So as I already told you, sir, what is the time period for processing the application? Aadhaar authentication is successful now, 7 working days from the date of submission of application. From the date of submission of application. Other cases, sir, 30 days from the date of submission of application. Okay, so what is the date of submission of application? Meaning whenever the Aadhaar authentication is done, that date, or 15 days from the date of submission of part B, whichever is earlier. That will be the time limit. Okay, that will be taken as date of submission of application. So this is how the registration procedure will take care. And now Aadhaar authentication also, if you see, if a registered person, if you are going for Aadhaar authentication, as I told you already, sir, if you are already registered but your Aadhaar authentication is not done, for you there are certain drawbacks. What are the drawbacks now? You cannot file the application for revocation of your cancellation, and you cannot file any refund application under Rule 89, and you can also not apply any refund application under Rule 96. Okay, so these are the disadvantages if you are already registered under GST before the Aadhaar authentication concept came, and now you are not getting Aadhaar authentication done. These are the 3 drawbacks for you. Okay, so you will not be eligible for this. So if you want these things to be done, you should do your Aadhaar authentication. That is what Rule 10 is saying. Sir, now, okay, sir, fine. For me, Aadhaar number itself is not assigned, sir. What should I do, sir, immediately? Sir, don't worry. First, apply for Aadhaar card, get that enrollment ID, and along with that, your bank passbook with the photograph or voter ID or passport and driving license. You please submit these things. Aadhaar enrollment ID slip, along with that, these things. You just submit, and then later on, whenever you get the Aadhaar number, then you finish the Aadhaar authentication. That is what the concept. Within the period of 30 days from getting the Aadhaar number, you do the balance Aadhaar authentication concept, everything, finish it off. Right. So that is with respect to Aadhaar authentication and everything. And yes, here, sir, for certain people, Aadhaar authentication is not required, sir. Who are those people for whom Aadhaar authentication is not required? A person who is not a citizen of India, and state or central government establishments or departments, local authorities, statutory bodies, public sector undertakings, a person who is applying for unique identity number. For these people, Aadhaar authentication is not required. Okay, so that is what the concept. Now, sir, here there is something, a small rule called Rule 10A here. What is that Rule 10A? Nothing but, sir, they are asking you to update your bank account details at the time of applying for registration, or even after getting registration also you can update your bank account details, but you should do that within 30 days from the date of grant of registration, or before furnishing the GSTR1 or IFF, whichever is earlier. Am I clear? So you should update your bank account details in GST portal within 30 days from the grant of registration, or before furnishing your GSTR1 or IFF, whichever is earlier. But the crazy thing is, now recently they have updated the concept here. amended the concept here in rule 10a. If you are not doing that, if you are not doing that, if you are not updating your bank account details, your registration shall be suspended, and later on you update the bank details, automatically suspension will be revoked. But sir, registration is suspended and registration is also cancelled. Now you cannot go and do the other, like update the bank account details, and automatically it will not get revoked. So simple, your registration will be suspended. Immediately you respond and give the bank account details, suspension will be revoked. But this you should do before cancellation. Okay, that is what the concept. In case of sole proprietor, sir, we have also to link the PAN with the Aadhaar. For the proprietor PAN, we should be linking it to the Aadhaar, right? So those things we have discussed, and Aadhaar authentication, everything. So with this we are done with registration procedure. So the next one, if you see the special procedure for registration for NRTPs and CTPs. We already know the meaning of NRTP and CTPs. A non-resident taxable person means who doesn't have any fixed place of business or fixed place of residence anywhere in India. But coming to CTPs, CTP is a person who doesn't have any fixed place of business in the state from which he is making the supply. So CTP and NRTP, already we have the idea. Now coming to the point, sir, registration procedure here, as we have already seen, in registration procedure they should apply for registration at least 5 days prior to the commencement of the business. That is a different point for them. And GST registration is a PAN based, but NRTP will not have the PAN in India. You will get the registration based on other prescribed documents. What are the other prescribed documents? As I told you already, self attested copy of valid passport along with the application signed by Indian authorized signatory who is having a valid PAN. So no sir, the NRTP is a business entity incorporated outside India na. With that registration certificate what they got outside India, that unique number they should use here, or if they have any PAN in India, that also they can use. Okay, so that is what the point. Fine. Now the normal form GST REG 01 can be used by normal taxpayers, that also can be used by casual taxable person. There is no other separate form for applying registration for CTPs, but for NRTPs there is a separate form. Okay, fine. So that is okay. Here the important thing is this, the advance tax and the validity. These are the two very important points. So generally when we are taking registration for normal people, we will not have any concept of advanced tax in GST. But for CTP and NRTPs, what they have to do, sir, they are asking for registration. Sir, whatever the period, normally the registration certificate validity will be lifelong. But here for CTPs and NRTPs, sir, the validity will be 90 days maximum. They can ask for 10 days, but they will get 90 days. The number of days for which registration is sought for, or 90 days, whichever is earlier. So they can ask for 10 days, they will get 10 days. They can ask for 40 days, they will get 40 days. They can ask for 120 days, but they will get only 90 days. So please understand how much days they have asked, and 90 days, whichever is less, that much only they can have the validity. And they also have the option to extend that validity before the expiry of that validity, registration validity. They can also ask for extension of the validity. So now what they can do, extension also they can ask for maximum 90 days. That means I can say, sir, initially they can ask for 90 days and plus again another 90 days extension. That is possible. Another 90 days extension, that is possible. Now please understand. So here the concept is, sir, when they are applying for registration, when they want registration certificate for, first let us assume 20 days, they are going for any exhibition, participating in that and selling the sarees, all that stuff. Sir, in such cases, sir, for the 20 days they want registration. No, for the 20 days what will be the GST liability that they have to calculate before, and then that liability they have to first deposit, and then only their application for registration will be processed. Okay, hope it is clear for you. And again later on, if they are asking for extension also, when they are asking, sir, for example 5 days extension, they are asking for 5 days, whatever is the tax liability going to be there, that they should calculate and they should deposit. That is what the concept of advance tax. That means CTPs and NRTPs, sir, while applying for GST registration, they should also assess their tax liability, how much that can be for the period what they are asking for registration. That amount they should deposit in advance, and then only the registration application will be taken up for processing. Okay, this is one different point. Once the registration is granted, sir, once the registration is granted, sir, whatever they have deposited, that amount will reflect in e-cash ledger. Of course, after registration is over, or whatever it is the expiry, there can be some shortfall or excess amount. If they have paid, then they can again deposit the cash. If there is any excess amount, they can claim it as refund. Okay, that is another point. Right, so that is the concept. Now coming to validity again, stressing on that validity point. So here if you see, So the registration validity itself will be, as we were discussing, 90 days and 90 days. See, first that means you can say maximum 90 days, but it doesn't mean that, sir, first I have asked only for 20 days, sir. Now I can go for 120 days, sir. Can I ask that way? No, you cannot do that. Sir, first you have asked for 20 days. Later again, when you are going to ask, you can ask maximum for 90 days. That's all. You cannot ask more than that. So each time you can ask only maximum 90 days. Okay, that is what the concept. So that is why maximum 90 plus 90. Sir, first I have asked for 10 days, sir. Now I'll ask for 120 days. Not possible. Sorry. And there is one more clarification here, sir. In case of long run exhibition for a period more than 180 days, what should I do, sir? You don't do anything. Take registration as a normal taxpayer. Don't call yourself as a casual taxable person. There itself obtain registration as a normal taxable person. Once the exhibition everything is over, cancel your registration and go back to your place. That is what the point. And the allotment letter granting the permission to use the premises of the exhibition, that itself will be treated as proper document for granting you the registration certificate, treating it as place of business. That is with respect to CTPs and NRTPs. So the next topic is with respect to amendment of registration certificate. Sir, you might have given various details when you're applying for registration, but those details might be like changed now. Maybe like principal place of business is a change, like there is a change, or mail ID, mobile number, there is a change. In partnership from one partner might have died. So there may be change in number of partners or directors, all that stuff. So there might be changes, correct? So when there are changes happening, those changes should be updated with the website. So amendment for registration should be applied. Now before applying for amendment, sir, when we should apply for amendment? Now within 15 days of the change, whatever has happened with that within 15 days of the change, you should apply for the amendment in the registration certificate. Now here going for the amendments, sir, there are two things actually. Amendment may be in core field area, amendment may be in non-core field area. Core field area means, sir, it can be legal name of the business, address of the principal place of business or additional place of business, change in partners or directors or any other key managerial personnel. Or non-core field example, I told you email address, mobile number, all that stuff. Sir, the point is, sir, if it's a core field amendment, then, sir, within 15 days of change you will apply, correct? There is a change. From that, within 15 days you will apply. And after you applying, sir, proper officer, what he will do? He will process. He will process in 15 working days. Sir, if he is processing, what he will do again? He will give you the amended registration certificate, or he will give you show cause notice. If he is giving show cause notice, you know you should reply within 7 working days. Then your reply may be satisfactory or may not be satisfactory. Sir, he should process your reply within 7 working days, sir. Okay, he should process your reply within 7 working days. So it is 15 days, 15 working days, 7 working days, and 7 working days. So the point is that just like we have seen, no, registration, application processing, all this stuff, there is a change, there is an amendment, then what you have to do? Update that within 15 days. Once you update, proper officer should process that within 15 working days. After processing that within 15 working days, he may be happy, he may grant you the amended registration certificate, he is okay with the details, or he is having some doubts, he will ask for clarification. So if he is asking for clarification within 7 working days, you should reply to the clarifications. So within 7 working days, you are replying to the clarification. Then that clarification he should process within 7 working days. He may feel like all are okay, grant registration certificate. He may feel no, all are not okay, then he will reject the application. So now please understand, as I told earlier, sir, if there is mistake from proper officer end with processing the application within the time limit, then it is deemed to be accepted. If there is any mistake from the applicant from our end, we are not doing the things in time limit, then it is deemed to be rejected. Okay, that is what the point. And non-core field, any amendments, that stands automatically updated. Okay, next. So there is change in constitution of the business, sir. Because of that, there is change in PAN itself. Then you should apply for a fresh registration. Change in PAN is not a amendment in registration. Okay, so that is what the point. Okay, fine. Remaining things just leave it, not a big one. So that is what with respect to amendment of registration. The next one is cancellation of registration. Cancellation of registration, see, understand, either you can ask for cancellation, that is voluntary cancellation by the taxpayer, or suo moto cancellation by the proper officer. Proper officer also can cancel your registration. Now, sir, what can be the reasons for cancellation? See, these are the common reasons. Actually, these are the, this set is, they are common reasons for both voluntary cancellation as well as suo moto cancellation. For both, these are the common reasons. What can be the reason, sir, why we will be cancelling your registration? Why you can ask, or why we can cancel? In case of discontinuation of business, transfer of business, death of proprietor, amalgamation, demerger, change in the constitution of the business. Change in constitution of the business means sole proprietor converted into firm converted into a company. Okay, in those cases. Okay, next, taxable person who has taken voluntary other than voluntary registration, who is no longer liable for registration under section 22 or 24. 22 or 24 said me, sir, earlier to take registration and I have taken. Now those sections got amended where I am not liable for registration anymore, then also that registration can be cancelled. Okay, that is fine, simple one. This is very, very, very important point. So this is very, very important point. What is that? Suo moto cancellation by proper officer, section 29 subsection 2. So suo moto cancellation by proper officer. Why proper officer will cancel your registration on suo moto? Guys, these are like not common reasons. This is only for suo moto cancellation. Sir, if you have registered and you are not doing business from the declared place of business, sir, or you are issuing invoice or bill without supplying the goods or services, sir. That means, can I say fake invoices? You're issuing fake invoices, sir, or you are violating the provisions of anti-profiteering measures, sir, or you are violating the provisions of rule 10a. 10a, just now we have seen that bank account details updating. Next, you are availing ITC in contravention with section 16. Next, your outward supplies in GSTR 1 or 1a are more than 3b. That means your sales what you are disclosing in 1 are greater than whatever you are disclosing in 3b, because in 1 you have to give information, you have given full information. In 3b you have to pay tax, you don't have money, so you are showing less amount. Sir, you are violating the provisions of rule 86b, sir. Next, you are violating the 86b, 1% of tax payment in cash, so that you are not doing. You are violating the third or fourth provision of rule 23 sub rule 1, sir. That is nothing but, see, here your registration cancellation has been revoked. Revocation of cancellation of registration, sir. In that case, what is happening? You should file all the pending returns within 30 days after the revocation order. That you are not doing. That is the case here. Okay, so I repeat, sir, when your registration is cancelled, you are going and asking for revocation. When you are asking for revocation, they are asking you to file all the pending returns after revocation, which you are not able to file right now. So revocation order is granted and you are supposed to file the pending returns. You are not filing that within 30 days, then again they can cancel your registration. Next, registered person who is required to file GSTR 3B mass section 39 is nothing but what? 3B. Sir, 3B continuously for 6 months. So GSTR 3B for continuously for 6 months you did not file. Or 3B when you are supposed to file on quarterly basis. That means here, can I say, in this case, sir, you are a monthly filer, and in this case you are a quarterly filer, that is QRMP scheme fellow. You are a QRMP filer. You have not filed GSTR 3B continuously for 2 quarters. Continuously for 2 quarters. Then your registration can be cancelled. Or you have opted for composition scheme and not filed the return of the financial year even after 3 months from the due date of filing. Sir, due date of filing GSTR 4. They are talking about GSTR 4. GSTR 4. The due date is 30th June to file it. Earlier it was 30th April, now it is 30th June. Sir, that 30th June is over, sir. That 30th June is over by 3 months, sir, already. Still you did not file. Then your registration can be cancelled. You have taken voluntary registration but you have not commenced the business within 6 months. Or your registration is obtained by fraud, willful misstatement, or suppression of facts. Then also your registration is liable for cancellation. Suo moto cancellation comes into picture there. Okay. Now, sir, application and procedure for cancellation here. If you see, sir, you will apply for cancellation, all that stuff, then there will be cancellation proceedings going on, all that. So basic the procedural aspect here, this you can just go through once, not that greatly relevant. If you don't have time, you can just ignore also, not an issue. Now coming to the next one, just go through that once. Suspension of registration. See, understand, suspension of registration, sir, when your registration is being cancelled, first they'll give you show cause notice, all that stuff, and till the registration cancellation proceedings are pending, your registration will be first suspended. So registration is suspended means that during that period you cannot file tax returns, you cannot issue tax invoice, and you cannot make any taxable supplies. Okay, so till the cancellation proceedings are concluded, your registration shall be your registration shall be suspended. Am I clear? No more taxable supplies, no more tax invoice, and no more filing the returns. That is what you will do in suspension period. Now, sir, when this suspension will be revoked, sir, when this will be settled, sir, once cancellation proceedings are over, either your cancellation is proper, so they will finish cancellation, so suspension itself will not be there anymore, or sir, this the cancellation proceedings they have decided no, your registration is not liable for cancellation, then what will happen? Your suspension will be revoked. So at any point of time, once cancellation proceedings are over, no matter the result is positive or negative, your suspension will be revoked. That is there. But one interesting point is, sir, proper officer has the power to revoke your suspension, power to revoke your suspension even during the pendency of cancellation proceedings. Even during the pendency of the cancellation proceedings, he has the power to revoke the suspension. Okay, so that is one interesting thing. That is with respect to cancellation here. Suppose if your suspension is or cancellation is initiated because of not filing the returns, once you file all the pending returns, automatically suspension will be revoked. That is another point. Next, so I think I have discussed all the points here. Okay, so that is with respect to suspension, and there are other small points, you can just go through that. Now the very important point is the revocation of cancellation. Sir, your registration is cancelled, sir. That registration cancellation, what we are doing, we are asking for revocation. Sir, when we are asking for revocation, we should go and apply for revocation within 90 days. Within 90 days. But if you remember, if you have not done other authentication, revocation you cannot apply. Okay, that is what rule 10b. If you are not complied with rule 10b provisions, sir, you cannot apply for revocation. Okay, sir, 90 days over, sir, but I did not apply, sir. There was some family problems or health related issues, etc. So we did not apply, sir. What should I do? You can go to the additional commissioner or joint commissioner. They can condone the delay. AC or JC, additional commissioner or joint commissioner, they can condone the delay for a further period of 180 days. That means it is not 90 including that 180 days. 90 days is there? No, it is not like that. It is 90 plus 180 days. So it is 90 plus 180 days. So please understand that 90 days is given in law, 180 days extra additional commissioner and joint commissioner has the power to give you. So that is what the point. Now the interesting thing is, sir, when your registration is cancelled because of not filing the returns, sir, what is the effective date of cancellation, sir? You know, see, understand the interesting thing in section 29, when the registration is being cancelled by the proper officer, the proper officer can cancel the registration from any date which he deems fit. That means he can cancel even with retrospective effect also. He can cancel the registration with retrospective effect also. So in such cases, sir, imagine, look at this question. Sir, I did not file the returns from Jan to June continuously for 6 months, sir. So my registration is being cancelled. My registration is cancelled on, imagine, July 5th, and the revocation is applied on July 20th. Now, what is the responsibility of, imagine, Mr. Aravind while applying for revocation under section 30? We understand now the problem is from when it is cancelled. Sir, Jan to June I did not file the returns, but from prospect effect, immediate effect only, they cancel my registration July 5th. So what should I do first? Jan to June, whatever the returns are pending, that I should file, and then I can go and ask for revocation. Okay. So revocation order is passed on August 31st, imagine. Sir, Jan to June I have filed all the pending returns, correct? Sir, Jan to June all the pending returns I have filed and I got the revocation. But July, August are still pending. Whatever the pending returns are there at the time of revocation, sir, what we should do? They should be filed within 30 days. They should be filed within 30 days. Just like I discussed just now. Otherwise, your registration is liable for cancellation again. Okay, that is the point. Sir, no, sir. Actually, the point is, what if they have cancelled my registration with retrospective effect of Jan 1st? That means now even one single return I cannot file, sir. What should I do now? Now you first go and ask for revocation. Sir, once they give the revocation within 30 days, so they have given revocation August 31st. So within 30 days, now you file all the returns from Jan to August, whatever the pending returns are there, all those returns you have to file. Okay. So first apply for revocation and then within 30 days, file all the pending returns. That is what the concept. So simple, sir, when your registration is cancelled, because of not filing the returns, whatever the returns you are able to file, just pause the video and go through this. Sir, whatever the returns you have filed, please understand, you can file, that you file, and then balance returns after revocation within 30 days you file. Okay. So no sir, I am not able to file any returns, sir, then first go for revocation, ask for revocation, and then whatever the pending returns are there, that you file within 30 days. That is what the concept. So that is how we have finished all the important topics, or mostly the entire registration chapter has been revised. So the next amendment, if you see, there is a mistake here in the heading. You can just ignore this heading, whatever has been given there. Clarification on ITC demo vehicles, all that. So here, this particular concept is all about, sir, we have added newly situations where your registration can be cancelled on Suo Moto. So for Suo Moto cancellation of registration, sir, new reasons are added here. What are these reasons? Nothing but, see, when you apply for revocation of cancellation of registration, they will revoke your cancellation, asking you to file all pending returns, correct? So all the pending returns should be filed within 30 days from the date of order of revocation. Okay, so whatever the pending returns are there, once revocation order is given, sir, the revocation order is given means within 30 days you should file all the pending returns. If you have not filed the pending returns, then your registration is liable for cancellation. Proper officer has the right to cancel the registration. He gave you revocation believing you that you will file all the pending returns and now you will be a good boy. Still you are continuing the same thing. So they will not entertain this. Now the proper officer got again the power to cancel your registration. Okay, so that is what this amendment all about. New proviso, third proviso and fourth proviso are added below rule 23 sub rule 1. In this chapter, see, there is nothing like any concepts etc involved. It is all about only, sir, different types of documents we are going to use at different occasions. So which document when we will be using and what are the contents of the document, all the stuff related to that we are going to discuss in this video. Now coming to that first topic, sir, we already saw section 31 in time of supply chapter. What is the due date to raise tax invoice is dealt in section 31. So time limit to raise invoice, we have already seen that goods and services separately. If you remember, when the goods movement is involved, not involved, continuous supply of goods, and we have seen goods and for sale on approval, services, general rule, continuous supply of services, and service ceases before completion. All these things we have seen. Now, first of all, see, the basic thing is whenever we think about tax invoice, we always feel like tax invoice will be raised by the supplier. But understand, tax invoice is not only raised by suppliers, sir, there is also a situation where the tax invoice is raised by the recipient. Sir, if you are supplying taxable goods or services, you can raise a tax invoice, or you are receiving taxable goods or services from unregistered supplier, then you can raise tax invoice on yourself. So that way tax invoice can be raised even by the supplier or the recipient. So there is one clarity we have to get. Now, sir, regarding section 31, the time limit to raise tax invoice, we have already discussed in chapter time of supply, that as I already told you. So in this we are going to see now particulars of tax invoice. What are the particulars? What are the contents of tax invoice? The rule 46 talks about the contents of tax invoice, mostly general points. Here and there are some technical things. Let us see that. So first one, sir, the contents are like GST of the supplier should be there, the description of the goods and services should be there, what is the amount of tax you are charging, and importantly the serial number of the invoice, which can be maximum of 16 characters. It can be any combination of alpha, numeric, even the special characters. Okay, the only thing is it should be a maximum 16 characters serial number, and every year you should start the fresh series, fresh series. And sir, you can also have multiple series in the same financial year. For different clients also you can maintain different series, that is also allowed. Okay, so that is what the point. Next, date of issue of the invoice. Yes, of course, serial number cannot be duplicate. Okay, and date of issue of invoice should be there, and total value of the supply should be there, and GST of the recipient if he is registered, place of supply, quantity in case of goods, what is the quantity you are selling, address of delivery where there is like any delivery address other than place of supply, that you should mention. And this is another interesting point, name and address of the recipient. If he is registered, definitely you should give that, but if he is unregistered, if it is exceeding 50,000 value, the value of supply exceeding greater than or equal to 50,000, then you should give the address of the supplier. With respect to this, I have a small point actually, sir. The value and address, name and address of the recipient, if you see, they have already understood, sir. If it is greater than or equal to 50,000, it is mandatory, you should give name and address of the recipient even if he is unregistered. But if it is less than 50,000, sir, it is optional, you can give if you want, otherwise you need not give. But please understand that if it is supply of Online money gaming, supply of online money gaming, or supply of taxable services by or through e-commerce operator, or supply of OIDR services. For example, Rummy Circle, or for example Ola, or for example G Drive you are upgrading. For all these things, even though the recipient is unregistered, even though the value of supply is not exceeding 50,000, sir, if it is less than 50,000 also, still you have to give name and address of the recipient. So I repeat, sir, normally name and address of the recipient, if not registered, required only if it is greater than or equal to 50,000 value of supply. But even though it is less than 50,000, if it is, the supply is what? The supply is online money gaming, and the next, by or through e-commerce operator any supply is made, or OIDR services. For that, definitely the name and address of the recipient should be there in the invoice. Okay, that is with respect to name and address. And of course, taxable value of the value of the supply, whether tax is payable on reverse charge, that should be mentioned. HSN code, tax rates, signature of the supplier or his authorized person, whoever it is. Digital signature is also fine, but if it is a e-invoice, no need of any signature. Next, QR code, which is having IRN number, and this will come into picture only if it is an e-invoice concept. Okay, and remember always, invoice is not valid without invoice reference number IRN. E-invoice is not valid without IRN. So in some problems you will be getting some invoice without IRN, all that stuff. So on that you cannot take ITC because it is not a valid invoice. It is not a proper document to give you ITC. That please remember. These are the particulars of tax invoice. Now, as we have seen already in the particulars of tax invoice, they are talking about giving HSN code. If you see, sir, HSN code, what they are trying to tell is, sir, with respect to HSN code, they are giving a relaxation to us. If your aggregate turnover is less than or equal to 5 crores in the preceding financial year, in the invoice, sir, your HSN code, B2B supplies, now 4 digits sufficient, sir, mandatory, sir. 8 digits is the HSN code, but 4 digits, first 4 digits if you give, that is more than sufficient. B2C, 4 digits optional. It is you, up to you, your will and wish. If you want to give it, otherwise not required. So I repeat, HSN code in the invoice, sir, if your aggregate turnover in the preceding financial year is not exceeding 5 crores, 4 digits is sufficient. If it is exceeding 5 crores, 6 digits for both B2B and B2C mandatory. Okay, that is what the point. Okay, sir. Now, sir, how many copies of invoice I should give, sir? Manner of issuing the invoices, sir, nothing but, sir, you should give, if at all it is goods, you should give 3 copies, triplicate. One is for the recipient, the other is for transporter, the other is for the supplier. Sir, if it is services, 2 copies enough, because you will not transport the services, correct? Saloon services transported from Chennai to Bengaluru, can I say that way? No, so duplicate is sufficient. Okay, original for recipient, duplicate is for supplier. So goods means 3 copies of invoices you maintain, services means you maintain 2 copies. That is the reason when you go to any small shops where they are maintaining the manual books, you see the copy of invoice book, 3 colors, pink, white, yellow kind of thing and all, or blue, all that stuff. So because of this reason. Okay, sir. Now coming to export invoices, sir, Sir, if the invoice is related to export, sir, what you should do on the invoice, you should mention, sir, what is that you have to mention? See, you know, exports, sir, are 0 rated supplies, and you have 2 options: either export the goods or services with payment of tax, or export them without payment of tax. So on the invoice, you should mention whether it is supply with payment of tax or supply without payment of tax. Like that you should mention on the invoice. Okay, fine. Next, sir, it is also important to note that particulars of export invoices are same as tax invoice, and with respect to recipient is unregistered and value of supply is that greater than or equal to 5,000. Instead, name of the state and its code. In export invoice, name of the country and destination is to be determined. Okay, so the point is, sir, if at all it is an export invoice, yes, export invoice only, sir, it will have same particulars like tax invoice. And here in this case, recipient is unregistered. Now you should give the details, name and address of the recipient. If the value is exceeding 50,000, if I am exporting with less than 50,000, I will export. So greater than or equal to 50,000, you are exporting. So name and address you should give, no. So there, if you are giving, sir, instead of that state name, all the stuff, that country name and the destination, whatever is there, if it is mentioned, then it is sufficient. You cannot mention exporting the invoice to Arunachal Pradesh or Gujarat, like that, correct? So the name of the country has to be given. Okay, next. Sir, here, is there any particular specific format for tax invoice? Nothing like that. You are free to use your creativity. However you want to design, you design your own tax invoice format. The only thing the law requires is the particulars of tax invoice we have discussed. No, they are the mandatory fields. Sir, that if those invoices are there, that is more than sufficient. So if those mandatory particulars are there, then it is sufficient. Next one, what is next one, sir? Any invoice or debit note issued in pursuance of tax payable in accordance with the provisions of section 74, 129, 130 shall prominently contain the words input tax credit not admissible. So obviously section 74 will come into picture when there is willful evasion of taxes, all that, and 129, 130 detention of vehicles, all that stuff. So there, whenever you are giving the invoice, there you should use the word input tax credit not admissible. Okay, fine, that is not that great point, don't worry about that. Next, if you remember section 17 subsection 5 blocked credit, there we have seen this point. You remember, ITC is not allowed if you have paid taxes under section 74, 129 and 130. Next. So that is with respect to tax invoice. So okay sir, we are done with the tax invoice thing. Now sir, we have to move on to revised tax invoice. Sir, what is the meaning of revised tax invoice? Revised tax invoice, simple concept. If you remember our effective date of registration concept, sir, when a person is becoming liable for registration and he is applying for registration within 30 days from the date of becoming liable, the effective date of registration is date of becoming liable. I repeat, when any person who is liable for registration applies for registration within 30 days of becoming liable, then the effective date of registration is date of becoming liable for registration, correct? But sir, I became liable on 1st November. I got registration certificate on 10th December, sir. From 1st November to 10th December, even though I'm effectively registered from 1st November, I don't know my registration certificate number, no sir. So I don't know my GSTIN. So what should I do? Sir, whatever the invoices you have raised from 1st November to 10th December are normal invoices, not tax invoices. Now you can convert them into revised tax invoices, okay? So that you can continue passing on the credit, all that stuff, and you can also raise a tax invoice on your customer. So I repeat, earlier we have raised normal invoice to the customer. Now we are revising them and converting them into revised tax invoice. This concept is complementing that effective date of registration, where you become liable for registration, within 30 days apply for registration, and after getting registration certificate, the effective date of registration will be still the date when you became liable. So between this time gap, whatever the invoices you have raised, that invoices will be converted into tax invoice. That is what we are calling as revised tax invoice. Okay, super. Now coming to the next one, another variety, sir, consolidated revised tax invoice. Sir, what is this consolidated revised tax invoice? Consolidated revised tax invoice, please understand there is an amendment here. Here it is not 2,50,000, it is 1 lakh. Okay, now if you remember GST return filing, GSTR1, please understand. First, let us go with the logic of that provision. Sir, one second. First, let me tell you concept related to GSTR1. In GSTR1 or 1A, sir, what we will do, we will give all B2B details as well as B2C details, correct, if you remember? Sir, the point is, if at all B2B details, we should give invoice wise details. B2C, what we are doing, B2C we are dividing them into B2C large and B2C others. If you remember in returns chapter, this flow chart will be there, B2C others. Sir, B2B invoices, we will give invoice wise details in the GSTR1 or 1A. B2C large means what, sir? First of all, B2C large means, sir, first of all, it is an interstate supply invoice. Interstate supply invoice with value greater than 1 lakh. With value greater than 1 lakh. Earlier it was 2,50,000. Now it is 1 lakh. B2C large invoices means interstate supply to an unregistered person where value is exceeding 1 lakh. That is B2C large invoices. Those invoices also, what we should do in the GST return, invoice wise we should give. But all other invoices, B2C others, all other invoices, consolidated, rate wise, state wise, if you provide, more than sufficient. I repeat, rate wise, state wise, if you provide, that is more than sufficient. So please understand, sir, what are the details we should report in GSTR1? When we are reporting the details in GSTR1, the tax invoice details, sir, B2B, B2C, there are two categories. Again, what we are doing there, B2B we are segregating, and B2C again we are segregating it as B2C large and B2C others. That means B2B invoices you should give invoice wise, B2C large you should give invoice wise. B2C large means what? Interstate greater than 1 lakh. Okay, interstate greater than 1 lakh. B2C others, consolidated, sir, within Tamil Nadu I made 12% sales this much, 5% sales this much, 18% sales this much. Same way to Telangana, 5% sales this much, 12% sales this much, 18% sales this much. Like that, I will give consolidated details, state wise, rate wise. Okay, so that is what B2C others. So now you tell me, when I have to give details B2B and B2C large invoice wise, I can never play with them. I cannot give any relaxation there. So what we are doing here, B2C others, we are giving a relaxation. What is that relaxation? They revised the tax invoice there. Vishnu became liable for registration, and from the date of becoming liable for registration till the date of grant of registration certificate, during this time gap, Vishnu made 10 supplies. Vishnu made 10 supplies to one customer. I should give 10 revised tax invoices. Instead of giving the 10 revised tax invoices, we are saying you can consolidate the 10 and give 10 consolidated revised, one consolidated revised tax invoice for the 10 revised tax invoice. Instead of giving 10 revised tax invoice, you give one consolidated revised tax invoice. What is the condition there? Sir, first of all, supplier should be unregistered person, and it should be, simple, in simple words, what I can say this is B2C others. I can say all B2C others. If you see, for example, look at this example. Vishnu became liable for registration on 2nd September and is applying for registration on 4th September. He is getting registration certificate on 29th September. Okay, in such cases, sir, his effective date of registration is 2nd September, even though he got the certificate on 29th September. The supply is made during this time gap. What he can do, sir, he can give the revised tax invoices, correct? Now, he can do that only with respect to unregistered person, whether intrastate or interstate. If it is interstate, sir, value should not be exceeding 1 lakh. All such supplies he can consolidate and give one single consolidated revised tax invoice. Now, if you see, during the time gap, 2nd September to 29th September, Vishnu made supplies to Rohit, my customer in Maharashtra. 4 supplies I made. He is registered B2B. I cannot play with him. So, I should give 4 revised tax invoices. 4 revised tax invoices. Yes or no? That is what has to be done. Next, coming to Jadeja. Sir, another customer who is unregistered but from Gujarat. Sir, for him, I can give revised tax invoices. 1 second. Sorry, there are change in numbers. Actually, the amount has changed. No? So, the limit was earlier 2,50,000. Now, it is 1 lakh, right? So, now, sir, Jadeja is there, my customer who is unregistered from Gujarat. Now, for him, there are 4 supplies I made during that time gap. So, one supply is 1,20,000, 60,000, 90,000 and 1 lakh. Now, you tell me, sir, here, this is exceeding 1 lakh. Right? So, when it is exceeding 1 lakh, I cannot consolidate it. Sir, I should give a separate revised tax invoice for that. And balance, the 60,000, 90,000, 1 lakh is also fine. It should not be more than 1 lakh. All these remaining 3 things, what I can do, I can consolidate and I can give a consolidated revised tax invoice. See, for Rohit, I give revised tax invoice for all the supplies. Separately, I give revised tax invoice. For Jaddu, what I did, one revised tax invoice for supply 5 because it is greater than 1 lakh, because it is B2C, large. Okay, next other B2C, yes sir, we can give 6, 7 and 8 for all that invoices. I can consolidate and give him the consolidated revised tax invoice. That is the next one. And coming to Raina, the Raina is my customer from Tamil Nadu, unregistered. I am also from Tamil Nadu, unregistered. Tamil Nadu. I am also Tamil Nadu, but I am registered. Raina is unregistered, so it is B2C within the state. No matter what is the value of supply. Please understand, no matter what is the value, you can happily consolidate everything. Am I clear? So here I will give to Raina one consolidated revised tax invoice for 9, 10, 11, 12, all the supplies. Hope it is clear. So if you want to just so you can just go through that if you want. Pause the video for 2 seconds. First go through the question here and then think about the answer. Right, hope it is clear for you. So this is the answer. So with this we are done with consolidated revised tax invoice. Now let us move on to consolidated tax invoice. Sir, what is this consolidated tax invoice? Sir, any registered person, sir, when he is making supplies in the day, whatever the supplies he has made during the day, for all the supplies he can raise a consolidated tax invoice at the end of the day. But there are some conditions here. One is, first, the customer should be unregistered for sure. Value of supply less than 200, not less than or equal to, less than 200. And next one is, the customer should not ask for tax invoice. If he's asking for tax invoice, you should not say no, law has given me the permission to go for consolidated tax invoice. If you want invoice, you come at night. Like that you cannot say. Customer should not be needing tax invoice. Okay, so that is the case. So number one, sir, first of all, unregistered person, next, value of supply less than 200, and finally, he doesn't require tax invoice. For all such supplies, what you can do at the end of the day, at the night, you can raise the tax invoice. That is what we call as consolidated tax invoice. And the interesting part here is, sir, here, this option to raise consolidated tax invoice is not available to people who are exhibiting the cinematograph films in multiplex screens. Okay, like PVR, all that. Now coming to the next one, That is with respect to consolidated tax invoice. And of course there is one more thing here, sir. Whatever the tickets they are issuing in multiplex screens, that itself will be treated as tax invoice. Okay. So whatever the electronic ticket they are giving, that itself will be treated as tax invoice. So nothing but you don't give ticket separately, invoice separately again. So don't take so much of workload. Whatever the ticket you are giving, let it have all the details regarding the rule 46 what we have asked for, and whatever the ticket you are issuing, that itself will be treated as tax invoice. That is what they are trying to tell here. Next. So not only the multiplex screen people and others also are allowed to do this. The ticket itself will be taken as tax invoice provided it is containing all the details. So that is what with respect to this. Yes, consolidated tax invoice and other details. Let us move on to bill of supply. The next one, bill of supply is nothing but simple, sir. You are a registered person. If you are unregistered person, we will not worry about you. We will not talk about you at all. Sir, you are a registered person, and what you are doing, you are supplying exempted goods or services. When you are supplying exempted goods or services, is there any tax implication in the invoice? No, sir. You cannot collect any tax. So you cannot give tax invoice. So you are giving bill of supply. Not only that, sir. Sir, I am registered under GST, sir, but I am under composition scheme, sir. If you are under composition scheme, you cannot collect tax from the customer, correct? Because you cannot collect tax from the customer, you cannot raise a tax invoice. So obviously we are issuing bill of supply. So bill of supply will come in two situations. Number one, sir, first of all, fundamentally you are registered. One, you are making exempt supplies, or you are under composition scheme. In these two cases, you will issue a document called bill of supply. So bill of supply doesn't contain rate of tax and amount of tax, obvious, and there are contents of bill of supply they have given. So whatever the value we have mentioning in the bill of supply is not a taxable value. Tax itself is not there, sir. Where taxable value will come into picture. So that is what all about bill of supply. Next one is receipt voucher. Sir, what is this receipt voucher? Nothing but, sir, whenever you are giving any advance for supply of value, supply of goods or services, that advance to acknowledge, I am giving a document called a receipt voucher. And while taking the advance, if you are not sure about whether this supply is going to be intrastate supply or interstate supply, in worst case, if you are not able to identify or determine, then, sir, it will be treated as interstate transaction, and you are not sure about the tax rate also, take 18% as tax rate. That is what the concept. Am I clear? So receipt voucher, I repeat, to acknowledge the receipt of advance, we are issuing receipt voucher. And if you are not sure at the time of taking the advance whether it is intrastate supply or interstate supply, treat it like interstate supply. And if you are also not sure about the tax rate, then take 18% as GST rate. Later on we can adjust the things. That is what all about receipt voucher. Sir, the next one is regarding refund voucher. What is refund voucher? Sir, you have received the advance, but supply is not done, invoice is not issued, and we are refunding the advance amount. Then what is the document we are going to issue now? Sir, we are going to issue refund voucher. So I repeat that if advance is received and supply not made, and without raising invoice, we are refunding the money. So we will give refund voucher. Clear? Now you may get a doubt. Sir, what if I have raised invoice, sir? Then you will issue a credit note and give it to him instead of going with refund voucher. So that is what all about refund voucher. The next one is invoice and payment voucher. Guys, simple, understand. I'll tell you in simple terms what is this payment voucher, all that stuff. First of all, if it is an RCM transaction, recipient should give payment voucher to the supplier. Simple. Recipient should give payment voucher to the supplier. And now the recipient will give payment voucher to the supplier. If supplier is registered, what supplier will do? Supplier will give tax invoice. Hey, this is RCM tax invoice, you go and pay tax under RCM, like that. Supplier will give tax invoice, recipient will go and pay GST under RCM. But sir, if supplier is unregistered, recipient should give payment voucher, recipient should raise tax invoice on himself, and he should pay GST on that. So simple, I repeat, sir, RCM supply, recipient will give payment voucher for sure. Whether supplier is registered or unregistered, recipient will give payment voucher to supplier. If supplier is registered, supplier return, he will give tax invoice. If supplier is unregistered, recipient only will raise tax invoice on himself. That is what we call as self invoice. We have already seen that during 16 subsection 2 discussion. Okay, so that is with respect to that particular invoice and payment voucher. The next one, invoice cum bill of supply. Sir, what is this invoice cum bill of supply? Sir, where you are making both taxable as well as exempted supplies to an unregistered person. That is important. To an unregistered person, you can give a document called invoice cum bill of supply. Am I clear? So hybrid invoice, we can say both taxable as well as exempt things are covered, and that too, I repeat, recipient should be unregistered. That is what very important. So if you see the next one, sir, certain people, certain suppliers may issue tax invoice, but they are also permitted to issue any other document in lieu of tax invoice. Here in this topic we are going to see, sir, certain people they got some relaxation with respect to contents of tax invoice. If you see, sir, insurance company, banking company, financial institutions and NBFCs, for them they need not have serial number and address of the recipient in the tax invoice, so that is optional for them. And other particulars whatever we have discussed in rule 46, all those particulars are of course mandatory except serial number and address of the recipient. And one more thing is that they can raise a consolidated tax invoice at the end of the month for all the supplies made during the month. At the end of the month, either physically or electronically, they can raise the consolidated tax invoice. That is another point for them. Now coming to the next one, sir, GTA. For GTA there is no relaxation given. One extra additional obligation is given, that is consignment note. Sir, they have to give consignment note along with the tax invoice. And if you remember, GTA definition itself is what? Has one point, extra point. If at all they are issuing consignment note only, we are calling them as GTA, right? So for them no optional information, only one extra obligation, that is consignment note, and all other things as per rule 46 they have to follow. And supplier of passenger transportation services, for them also, sir, serial number and address of the recipient is not required in the invoice, and other information whatever is there in rule 46 that has to be followed. And of course, as we have already discussed, sir, here just like multiplex screens, all that, sir, here also whatever the tax invoice they are issuing, sir, the ticket itself what they are issuing itself can be treated as tax invoice. No need to separately give ticket and no need to give separately a tax invoice. Sir, ticket itself, if it is containing all the particulars of rule 46, then that itself will be treated as tax invoice. Next, one more thing is nothing but as we have discussed already this point regarding multiplex screens, right? Okay, next, sir, delivery challan. What is the next document? The next document we are going to see is delivery challan. Sir, when this document will come into picture, simply understand, sir, this document will come into picture when you cannot raise a tax invoice. Sir, for raising the e-way bill, we need a supporting document called tax invoice generally. But whenever we cannot raise a tax invoice, we will raise a delivery challan, and with the help of delivery challan, we will issue the e-way bill. We will raise the e-way bill. So that is the main purpose of delivery challan. Now, see, what are the cases here, sir? When I am supplying the liquid gas, where the quantity of the liquid gas is not known at the time of removal, or when I am transporting the goods for job work, I am not making a supply, I am not making any supply actually as such. And here what is happening, sir, I cannot raise a tax invoice on my job worker. In that case, I can raise a delivery challan. I am transporting the goods for any reasons other than by way of supply, maybe line sales, etc., etc., or such other notified supplies, sir, you can raise a delivery challan. And delivery challan, what they can do at the time of removal of the goods, it may be removed on delivery challan. Invoice can be issued after the delivery of the goods also, and it is also should be serially numbered, not exceeding 16 characters, same story. And the contents of delivery challan, it should be raised in triplicate copy, all that. So you can just go through that procedure, not that greatly relevant, nothing to worry. Now, sir, registered jewelry suppliers. Sir, this is regarding a clarification regarding registered jewelry suppliers, and this is equally applicable for everybody. Sir, what they are doing now here, sir, registered jewelry suppliers, they will take the jewelry what they have manufactured, like goldsmiths, all these people, sir, they will manufacture jewelry and they will travel to different states, and there they will go to jewelry shops and show their work. And if the jewelry shop owner likes that work, and he will purchase that jewelry. So till somebody buys that, they are not sure about whether this jewelry will be sold or not. Now they are taking jewelry along with them, right? So when they are taking jewelry along with them, they cannot raise a tax invoice and they cannot raise e-way bill on that. Sir, first of all, of course, for jewelry the e-way bill is exempted, that is not a big deal. Now coming to the point, sir, they cannot raise a tax invoice when they are moving the goods because there is no supply actually. So what the department has clarified here, sir, let them travel without raising the tax invoice, but an invoice book along with them. So whenever the supply is made there, they should raise the tax invoice. That is what the point they have told. Sir, may need to travel to other states for sale on approval. So they have to carry the goods for supply. If approved, they will issue tax invoice at the time of supply. Otherwise, they will not raise. So they cannot register themselves as casual taxable person, as they cannot ascertain their supplies beforehand, and they cannot make an advance deposit of tax. Just now we have discussed in registration chapter also, sir, advance deposit of tax also they cannot ascertain because of these things. Sir, we cannot call them as casual taxable person also. We cannot make them to register as casual taxable person also. So as per rule 55, sir, which allows the goods to be taken on sale on approval basis, they can move that to another location within or outside the state by giving a delivery challan and an e-way bill. So the person carrying the goods can carry the invoice book to issue it once the supply is fulfilled. Okay, so that way, as I told you, carry the bill book, and once the supply is confirmed, then raise the invoice. Otherwise, you can just have a delivery challan and move the goods. Okay, sir, the same logic is applicable even for the artists supplying their artwork to different states. Yes or no? Yes, artwork can be moved within or outside the state on a delivery challan along with the e-way bill. That is what the concept. So with this we are done with the documents where relaxation is given and also the delivery challan concept. So the next one, if you see, the next one is nothing but credit note and debit note. Sir, when credit note is issued, when debit note is issued, you know, normally, sir, when, see, in GST, this is not accounting. In GST, what happens? Supplier will raise a tax invoice and supplier himself will raise a debit note. When supplier will raise a tax invoice, when there is supply happen. Sir, now, with respect to that, he wants to reduce the value of supply. Then he will go with credit note. Or he wants to reduce the tax liability of supply. Then he will issue credit note. Or when there is sales returns, then he will issue credit note. Or when there is goods or services supplied are found to be deficient, then he will issue credit note. So those are the cases here, sir. We will issue credit note in these cases, correct? And same way, sir, when debit note will be issued, sir, debit note will be issued when we want to increase the value of the supply or when we want to increase the tax liability. So in such cases, the debit note will be issued. So credit note will decrease the liability, debit note will increase the liability. So when the liability decreases, opposite party, obviously ITC also will decrease. When the liability increases, automatically for opposite party also liability, ITC will increase. So that is the logic we have to remember. Okay, fine, sir. Now, when credit note is issued, when debit note is issued, we are clear. And as I told you, in GST, sir, supplier only will issue credit note, supplier only will issue debit note to adjust the value of supply and other things. Okay, now, sir, when I am issuing the credit note or debit note, sir, multiple invoices are there. For that, I should give multiple credit notes or debit notes. Imagine that way. Sir, instead of giving multiple credit notes or debit notes, the law is also giving an option to you. You can go with issuing a consolidated credit note or a consolidated debit note, where covering all the multiple invoices, giving reference to all such invoices in one consolidated credit note or debit note. You issue the document. 10 invoices are there. No need of giving 10 credit notes or 10 debit notes. You can give a consolidated credit note or a consolidated debit note, but that is optional. It is not mandatory. Don't worry. No, sir, for me, giving them separate itself is comfortable or convenient for accounting. Na? Do that, no issues. So that is with respect to consolidated credit note and debit note. So now here, please understand. Let me just finish this credit note, debit note details. In middle, something else has happened. No. Listen, so now the point is, see, as we have already discussed, sir, supplier will raise tax invoice, credit note and debit note. Sir, supplier has the responsibility to give those tax invoice, credit note and debit note details in GSTR1. So in GSTR1, what the supplier has to do, he has to give his tax invoice details, debit note details and credit note details. Now, sir, credit note details, if I forget to give, then what is that I have to do, sir? Give it in the next month. That means next month also I forgot this, sir. That next month also I forgot. That next month, that next month also I forgot. That next month, then also you forgot. Then what should I do, sir? There is a deadline for that, sir. For giving credit note details in the return, sir, the deadline is 30th November of the succeeding financial year or actual date of filing annual return, whichever is earlier of the relevant financial year. So same section 16 subsection 4 time limit. But the interesting point here is, sir, for the debit note declaring in the returns, there is no such time limit mentioned. Okay, so that is the interesting thing here. So that is what all about the credit notes and debit notes. So the next concept, if you see, the next concept is E-invoice actually in this chapter. Sir, E-invoice provisions are applicable to whom? First of all, sir, E-invoice provisions are applicable to a person whose aggregate turnover in any preceding financial year is exceeding 5 crore rupees. That means, if, for example, sir, 17-18 4 crores, 18-19 6 crores, 19-20 4 crores, again 20-21 1 crore, 3 crore, 4 crore. Now for 24-25 financial year, for me, whether E-invoice provisions are applicable? Yes, it is applicable, because in any one financial year, in any one preceding financial year from 17-18, if the aggregate turnover has exceeded 5 crores, for you E-invoice provisions are applicable. Hope it is clear, right? Now, this is applicable only for B2B supplies, not for B2C. And anybody who is like willing to, sir, I want to voluntarily follow E-invoice provisions, sir, my aggregate turnover is not exceeding 5 crores, sir, still I will do it, sir, na? Please get lost, there is no space here, okay, in the website. So for you, it is not available. Optionally, you cannot follow this. Am I clear? Next, if it is 5 crores, then mandatory you have to follow. Next, sir, in the E-invoice, invoices, credit notes, debit notes, all are covered, but only B2B, not B2C. And also exports for this purpose should be considered as B2B or B2C, because in GST, B2B means both are registered. Suppose you are exporting something to North Korea, sir, can you call it as B2B because that fellow, North Korea fellow, has registered under Indian GST law? No. So the point is, sir, what should I do? Then the law says that exports are also to be treated as B2B supplies and raise E-invoice, even though that fellow is not registered under GST. Okay. Then e-invoice is not applicable when, sir, if it is for input service distributor, where it is recipient is liable to pay GST, importation of goods, B2C supplies, exempt supplies. For these things, sir, e-invoice provisions are not applicable. Okay, sir, in e-invoice, what we will do, sir, generally nothing, sir. You will first generate an invoice from your accounting software, and generating the invoice in your accounting software, you should be doing it using the standard format, invoice format given by the government, GST INV01. So using that format, you generate the invoice. That invoice you will download in JSON format, and that file, from JSON file, you will come to a website, invoice registration portal. In that website, you log in and upload that JSON file, and once you upload the JSON file, the system will process it and give a document to you called e-invoice. And in that, what will happen, 3 extra new items will be added in that. Number 1, IRN, invoice reference number, without which the e-invoice is not a valid invoice. QR code, quick response code will be there, and digital signature of the proper officer. If you remember, in particulars of tax invoice, we have seen digital signature is not required. Digital signature or signature of supplier is not required, but in the e-invoice, digital signature of proper officer will be there. So 3 things. One is invoice reference number, the other is QR code, the other is digital signature of the proper officer will be there in the e-invoice. And now download that e-invoice and give it to the customer. That means simple. Before giving the invoice to the customer, give it to the government. Government will take the record of that details, and then will give you the invoice with 3 additional details, and that you give to your customer. So that we are trying to stop this fake invoices. Okay. Now coming to the point, what are the advantages? As I was telling, sir, fake invoices can be reduced, and whatever the information you are giving in e-invoices, that will be used in GSTR1 also, and Eway Bill generation also. Eway Bill generation also, that will be used. That means whatever the information you are giving, that will be automatically shifted to those websites. Automatically that information will be shared with those websites. Information will be shared with those websites, and for you, return filing, etc., will be easy also. Those are the advantages of e-invoice. Now coming to one interesting and important point here, sir, e-invoice provisions are not applicable for SCZ units. Please understand, SCZ units. We are not talking about developers. Sir, e-invoice provisions are applicable to SCZ developers, but for SCZ units, e-invoice provisions are not applicable. And also for insurance company, banking company, financial institutions, NBFCs, e-invoice provisions are not applicable. GTA is not applicable. Passenger transportation services not applicable. Multiplex screens not applicable. Government department and local authorities not applicable. Sir, for these people, e-invoice provisions are not applicable, even though the aggregate turnover is exceeding 5 crores in any preceding financial year from 17-18. Okay, and this relaxation is given for the entity as a whole, entire entity. This is not limited only to any particular nature of supply that has done. So this is applicable for the entity as a whole. Okay, and these people, what they have to do, because for them e-invoice provisions are not applicable, no, they should mention, they should give a declaration here. One second. They should give a declaration here. What is the declaration? Sir, they should give a declaration saying that, sir, even though e-invoice provisions are applicable for us, sorry, even though our aggregate turnover is exceeding 5 crores, for us e-invoice provisions are not applicable. Like that, they should give a declaration in the invoice that they are enjoying the relaxation from raising the e-invoice, like that. Okay, fine, that is one thing. And another interesting part here is, sir, generally when, no, we know that government departments, all the stuff we have seen here, they need not raise e-invoice. But sir, the doubt is, to them, when we are making a supply to government departments or local authorities who got registered under GST for the purpose of TDS compliance, section 51, they are not making any business, they are not doing any business, or they are not making actually any supplies, but they got registered under GST just to comply section 51 provisions. For such people, if you are sending any, making any supplies, should I consider it as B2B transaction, and should I raise e-invoice? Then the law says, yes, sir, they are also registered, no matter for what purpose, but they are registered under GST. Yes, to comply section 51 provisions only, but they are registered under GST. So if you make a supply to them, it is a B2B transaction. So yes, you should raise the e-invoice. Okay, so that is what the concept. You should raise e-invoice for them also. Okay, there is an example here. You can just go through that. And invoice registration portal. So there are these websites available for e-invoice registration portal. As I told you already, e-invoice will be valid only with a valid IRN. So invoice reference number. Invoice reference number is different. Invoice number is different. Don't misunderstand. Invoice number you will give. You will maintain the serial number. Invoice reference number the portal will give. Okay. And the QR code generated will be having all these things like what GST of the supplier, recipient, invoice number, date of generation, all that nonsense, normal things. Leave it. Next, Sir, there is no requirement to carry the physical copy of tax invoice, sir, if there is e-invoice generated. Okay, very good advantage. So you are reducing my weight to carry. So next, anything else? As I told you already, sir, invoice registration portal will send the data whatever has been given in e-invoices, so that it will be used for auto population of data in GSTR1 and GSTR2A for the respective receivers also, 2B whatever it is. Next, seller can cancel IRN of an invoice. By reporting it in invoice registration portal within 24 hours of time, and amendment of invoice already uploaded on invoice registration portal will be done only while filing GSTR1. Otherwise, through invoice registration portal you cannot amend e-invoices. You can only cancel the invoice, but you cannot amend the invoice. Anything details which you want to amend in e-invoice, that you should do only in filing GSTR1. Okay, as I told you, there is a standard format for e-invoice, GST INV01. Next, so remaining things I told you, downloading it in JSON file, all that stuff, and uploading it. Yes, that's all, guys. That is what all about e-invoice. Nothing but anything else. Like we have already discussed all the key points. You can just go through the textbook content. So yes, e-invoice is done and dusted. And the last concept of this particular chapter, dynamic QR code. So when we are coming to last concept, whether you are excited or not, I am getting excited, because Abba Swami, like chapter is over, like that I am getting the feeling. Okay, so dynamic QR code. So dynamic QR code. So dynamic QR code is provision same like e-invoice, but there aggregate turnover exceeding 5 crores. But here aggregate turnover exceeding 500 crore in any preceding financial year from 17-18, and this is applicable only for B2C invoices. B2B invoices, dynamic QR code is not applicable. Dynamic QR code is nothing but, see, not that when we go to Pani Puri Anna, he will show some dynamic QR code, no, like, sorry, he will show some QR code, no, scan code, scan and pay 20 rupees, 50 rupees, all that. That is not the dynamic QR code, that is static QR code. Dynamic QR code means when you are going for shopping in some places, you are scanning the QR code and automatically the amount is reflecting all that. That means for that particular transaction only that QR code was generated. So that is dynamic QR code. This is mandatory for people whose aggregate turnover is exceeding 500 crores. Others can follow optional. Happily they can follow. This is not e-invoice. This is dynamic QR code. You can happily follow this optionally also, voluntarily also. That is what the concept of dynamic QR code is all about. Okay. Now, sir, if I am raising invoice to person holding unique identity number, should I follow dynamic QR code provisions? Then the law says, sir, even though a person is holding unique identity number, that is not a registration under GST, so treat him as a B2C supply, and for that dynamic QR code provisions are applicable. So that is what the concept. Now the interesting part, sir, dynamic QR code is not applicable for whom? Sir, dynamic QR code is not applicable for insurance company, banking company, financial institutions, NBFCs and GTAs, and passenger transportation services, and cinematographic multiplex screens, supplier of OIDR services, and for exports, because you know exports are treated as B2B supplies. Dynamic QR code is only for B2C. So for exports also, this dynamic QR code provisions are not applicable. So what are the contents of dynamic QR code? All that they have given here. Now there are some small points here regarding some nonsense clarification, but still, sir, deemed compliance with dynamic QR code. There is a doubt that, sir, I am displaying dynamic QR code, but the customer is using any UPI credit card or debit card or any online banking or cash or combination also, sir. What should I do? Sir, am I violating the law? Like that, suppliers are getting the doubt. Then the department is clarifying, no, it is deemed that you have complied with dynamic QR code provisions. The only thing, you cross reference in the invoice, like this, I have given dynamic QR code option. That fellow made a payment only by cash or only by credit card, debit card, like that. So that is why when you go for shopping, first they will ask you what is the mode of payment. If you see in the invoice, there will be something like mode of payment, cash or UPI, like the debit card or etc, etc. Okay, so if you are displaying dynamic QR code, that means enough, you are safe. How that fellow is paying, it doesn't matter. Next, sir, supplier is using some electronic mode of payment like UPI collect, UPI intent or similar mode, sir. For example, you are going to any Apollo pharmacy, etc, etc. You tell them your phone pay number, automatically the request will come in phone pay, or through any other way. You are booking some tickets, maybe through IRCTC app, Book My Show app, all that. There will be phone pay option or phone pay, Google Pay, then automatically request will be routed to your application, phone pay, GPay, all that. So that way they are collecting the consideration. Are they violating the law? That is the doubt. Then the lawmakers, the department has clarified, sir, if you give cross reference in the invoice, like this, we have collected the payment, then that is more than sufficient. You are deemed to be complied with dynamic QR code provisions. Okay. Next, sir, what about prepaid invoices, sir? When I am going with prepaid invoices, sir, how can I display the dynamic QR code for them to make the payment? How can I print the dynamic QR code in the invoice, because it is already prepaid? Give cross reference on the invoice, don't worry. Sir, in case supplies are made through e-commerce operator, sir, the dynamic QR code displayed by the e-commerce operator will have his UPI ID, sir. Then, I am not giving my UPI ID. No, is it wrong, sir? Am I doing any mistake? Nothing to worry, that can be done. So dynamic QR code provisions are deemed to be complied with, even though it is displaying the QR code of the e-commerce operator. Next, sir, retail sales over the counter. Normally what will happen, sir, first we will get the order number, sir, order number, then after that we'll make the payment, sir. After getting the payment only we will generate the invoice, sir. That means before generating the invoice itself, first for generating the invoice itself, payment should be done, sir. In such case, how can I print dynamic QR code on the invoice, sir? Should I do that again? Then the law has clarified, no need to worry about that. Order ID, if it is given in the dynamic QR code, if it is capturing the order ID, that is more than sufficient. So like that, sir, part payment has been received, sir. Now dynamic QR code, should I show for the full payment? Not required. You give cross reference in the invoice. So like that, the details are there. So just nothing to worry, you just ignore it. So with this, we are done with dynamic QR code provisions also, and we are done with this chapter. Sir, now coming to Eway Bill, sir, you know that generally whenever there is movement of goods is happening, generation of Eway Bill is to be done. Sir, Eway Bill, how to generate Eway Bill? Sir, there are websites and mobile applications, SMS and bulk upload tool and application program interface for generating the Eway Bill. Same way, you can also cancel the Eway Bill using the same tools. Okay, fine, sir. But first of all, understand, to generate Eway Bill, you should be generally registered under GST, and also you should be registered in Eway Bill portal. Just like how do we have user ID, login, password in GST common portal, same way you will also have the user ID, password in Eway Bill portal. There you have to register yourself. And one more thing, sir, if you are an unregistered transporter, if you are a registered transporter, no problem, using that registration number, all that stuff, sir, you will register yourself in Eway Bill portal. If you are an unregistered transporter, what you have to do, it is mandatory for you to get enrolled in Eway Bill portal. Because of that, you will get a 15-digit unique transporter ID, which we call as TransIN, okay, for transporters. If they are registered, no problem. If they are not registered, they should enroll in Eway Bill portal, so they will get the transporter ID, you call it, or TransIN, you call it. Fine, okay, sir. Now, sir, when should I raise Eway Bill? Very important point, sir. Eway Bill should be raised when the movement of goods is happening and where the consignment value is exceeding 50,000. That means consignment value should be greater than 50,000. Very important point. Sir, what do you mean by consignment value, sir? Consignment value means, the important thing here is we should understand, consignment value means value under section 15 or whatever the value declared in invoice or challan, whatever it is as per the delivery challan, and it includes, please understand, it includes GST. So long in GST, wherever you have seen the limits excluding GST, but here you will see a scenario where it includes GST and excludes exempt supplies, value of exempt supplies if the invoice is raised for both taxable and exempt goods. So you can understand, that means only when you are transporting the taxable goods where consignment value is greater than 50,000, sir, Eway Bill is required. Consignment value means what? Both value plus GST. That is very important. Okay, sir, fine. Now here, sir, when I should raise the Eway Bill, sir? The reasons can be, yes, because there is supply, you are moving the goods, or sir, no, sir, there are some other reasons, maybe sending for job work, etc., etc., or it is a purchase from unregistered person. So in all these cases, what will happen? You will generate Eway Bill. Okay, so that is what the concept. I repeat, Eway Bill should be generated when there is movement. Maybe the reason is supply, or maybe other than supply also, or maybe even it is purchased from unregistered person also. You have to generate Eway Bill, and that will be mandatory if the consignment value is greater than 50,000. We have seen that. Now, sir, Eway Bill form, if you see GST EWB 01, sir, as a registered person, you should be giving the reason and the details regarding causing the movement of the goods before the commencement of the movement. In part A, Eway Bill form will be having two parts, part A and part B. Part A, you will be giving complete details of why are you transporting the goods, what is the reason, from whom to whom the goods are going on, consignor, consignee details, their registration details if they are registered, all the pin codes, etc., value of goods, what is the GST rate applicable on that, so what is the HSN code, all these details pin to pin will give in part A, and we will file the part A of the Eway Bill. And in Eway Bill, the part A, there will be something called transporter ID also. It is not mandatory, it is optional, and if you are giving the transporter ID in part A of the Eway Bill, the Eway Bill will be assigned to the transporter, so he can update part B details if he wants. Sir, what will be there in part B? In part B, there will be vehicle details if at all you are transporting the goods by road, or if it is through railways, railway receipt number, airways, airway bill number, all that stuff. Sir, these details will be given in part B. And if you are transporting goods by road, it is mandatory to have vehicle number in the e-way bill in part B. Okay, so while transporting the goods, if I don't know the vehicle number, only the transporter, until he transports, he doesn't know the vehicle number, you can assign the e-way bill to the transporter, and transporter will keep updating part B. You can update part B any number of times, sir. In middle there is any breakage of the vehicle, breakdown of the vehicle, we are changing the goods from one vehicle to another vehicle, all these cases, sir, any number of times you keep changing the e-way bill part B in the e-way bill, the vehicle number. The only thing is, when it is verified, that should match with the actual vehicle which is carrying. So when the GST department officer stops the vehicle and verifies the e-way bill, the vehicle number in e-way bill part B right now and the actual vehicle should be matching. That's all. That is more than sufficient. Okay, so that is what the concept is all about. Now sir, here should I generate e-way bill? Like, who should generate e-way bill? Sir, it is mandatory to generate e-way bill. Sir, it can be generated even by the consignor or consignee. Sir, no matter whether you are transporting here in your own conveyance or hired conveyance or public conveyance, that means you are taking it in your own car or you are taking it in a public transportation or any hired vehicle, all these cases, sir, you should generate e-way bill. There is no exception here. Okay, so e-way bill e-way bill will be e-way bill will be shall be raised by the transporter if the registered person is handing over the goods to the transporter without raising e-way bill. So consignor, consignee, and even transporter can raise the e-way bill. Okay, that is what the concept. Next, sir, as I already told you in tax invoice chapter, if you remember, if the goods are being moved for any reason other than supply, sir, there won't be any tax invoice there. In such cases, what we should do, sir, in such cases, you will raise e-way bill with the help of delivery challan. Am I clear? Right, so that is what the point. Next, sir, as we have already seen, this is important one. As we have already seen, e-way bill will come into picture only when, sir, when consignment value is exceeding 50,000. But sir, in two cases, consignment value, even though it is not exceeding 50,000, e-way bill will come into picture. Okay, so what are the two cases? That means e-way bill is mandatory even though the value of supply is not exceeding 50,000. So e-way bill shall be raised even though the consignment value does not exceed 50,000. Sir, what are those two cases? Number one, sir, interstate transfer of goods, sir. Interstate transfer of goods from principal to job worker. That means principal is located in one state, job worker is located in another state. For example, Vishnuvardhan is the principal. He is from Tirupati, Andhra Pradesh. What he is doing? He is transporting the goods to Mr. Leo in Chennai. Sir, my job worker. Sir, consignment value is 40,000 only, sir. Value plus GST. If you see, I am not selling the goods. I am just sending the goods for job work. And I am in Andhra Pradesh and my job worker is in Tamil Nadu. So what should I do? Should I raise e-way bill? Yes, it is mandatory for you to raise e-way bill even though consignment value is not exceeding 50,000, because it is interstate supply between interstate transaction between principal and job worker. That is mandatory. Next, second one, we have already seen in registration chapter, sir. If you are dealing with notified handicraft goods or any other notified goods, I am giving you relaxation from GST registration even though you are making interstate supplies, or if you are a casual taxable person dealing with notified handicraft goods and notified goods. Okay, so in these cases, sir, what should be done? For you people, we have seen I am giving relaxation in registration, but you should obtain a PAN card and generate e-way bill. That is mandatory for you. You cannot ask for relaxation, sir. Consignment value is there, no sir, not exceeding 50,000 and all. You should not talk. Okay, that is the next one. Next, sir, in case of bill to ship to model, what should I do, sir? There are two supplies. We have already discussed this again. So now, for example, Vishnu is making a sale to Vamsi. Vishnuvardhan is making a sale to Vamsi Krishna VK. Vamsi Krishna is making a sale to Kasi. So now please understand, or let us take here, Vamsi is making a sale to Vishwanath. Am I clear? So Vishnu is making sale to Vamsi, Vamsi is making sale to Vishwanath, but Vamsi is asking, Re Vishnu, you directly deliver the goods to Vishwanath. Like that he is asking, so I am delivering. Sir, there are two sales here. One is Vishnu to Vamsi, Vamsi to Vishwanath. Two sales happen. But goods are moving only from Vishnu to Vishwanath, Vishnu to Vishwanath. So what should be done here? Sir, here one e-way bill is sufficient, sir. Two sales are there, no sir. Should I raise two e-way bills? Not required. Sir, bill to ship to model. See here, movement is only one, no. It is moving only from one fellow to another fellow. So automatically one e-way bill is sufficient. That is what the concept. Okay. So in case of bill to ship to model, there are three persons but two supplies involved. But movement happens only from one person to another person, so hence one e-way bill shall be sufficient. And as I told you already about the contents of e-way bill part A and part B, as I already discussed with you, sir, these are the contents. Okay, So along with the pin code, that is mandatory. If you give pin code in Eway Bill, based on the pin code of consignor and consignee, the system itself will calculate the distance and it will calculate the validity of the Eway Bill. Now, who shall raise the Eway Bill? Sir, Eway Bill shall be raised by transporter. Like when the goods are transported by registered person, consignor or consignee, as we have already discussed, the consignor or consignee or even the transporter can raise the Eway Bill. Okay. But if the goods are transported by railways, air and vessel, sir, e-way bill shall be generated by only the registered person, that is the supplier or the recipient, not the transporter. They will not generate e-way bills for you. Okay. Next key points. Sir, if you see the key points here, sir, if the goods are transported through railways, e-way bill is not required to be carried by the railways, sir. They will not carry the e-way bill, but they will give you the goods delivery only when you submit the e-way bill. Okay, when you are taking the goods delivery, then they will take the e-way bill and then only will give you the delivery of the goods. So I repeat, generally when you are transporting the goods, sir, you should carry invoice and e-way bill, or you should carry delivery challan and e-way bill, as the case may be. But if it is transported by Indian Railways, railways will not carry any e-way bill with them, but they will give you delivery of the goods only if you submit the e-way bill. Okay, next. Sir, this relaxation is only for Indian Railways actually transporting, not for any private agencies who has been like taking the parcel spaces in railways on lease. For them, this provision is not applicable. If they are transporting, they should carry e-way bill along with them. Okay, next. Sir, as I already told you, e-way bill you should fill part B, the vehicle details, correct? But sir, if that e-way bill is not filled with part B details, that e-way bill is not valid. So understand, e-way bill is valid only if the part B details are filled. But here one interesting case is, sir, details of conveyance not required if the goods are transported within 50-kilometer radius within the state or union territory from the place of business of the consignor to the place of business of the transporter for further transportation, and place of business of the transporter to place of business of the consignee. What does it mean? Sir, from your godown, you should take the goods. You are taking the goods in a lorry, in a vehicle. Okay. To the transporter location. For that movement, in part B, you would have raised party of the e-way bill, and you can raise party of the e-way bill and move the goods. In part B, vehicle details are not required. Okay. And so now from transporter location to another, like consignor, let us assume I am transporting the goods from Chennai to Hyderabad. Chennai to Hyderabad, when the goods are being transported by the transporter, he will fill part B and he will give the vehicle numbers, everything, and he will proceed. Now, when the goods are reaching Hyderabad, sir, they should deliver in the godown of mine in Hyderabad, my godown in Hyderabad. So, from their location in Hyderabad to consignee location in Hyderabad, this movement is happening, Nora. Again, this movement, vehicle number is optional. I repeat, sir, in Chennai, from my godown, I am taking the goods to transporter's godown. That time, vehicle number is not required, optional. If the distance is less than or equal to 50 kilometers and it is within the state, and the goods are going from consignor from my city to Chennai to Hyderabad city. Okay. Now, in Hyderabad, it is reaching transporter's location only. From that location, again, they should deliver it in consignee's address. So now, from transporter location to consignee address, the vehicle is moving. No, that time also vehicle number is optional. It need not be there in the e-way bill. That is what they are trying to tell. Okay. Mainly when you are transporting the goods from one city to another city, one state to another state, one place to another place, during that movement only, sir, we need the vehicle numbers are in part B. From consignor location to transporter location, or transporter location to again consignee location in that particular same area within 50-kilometer radius within the same state, part B, if it is not filled also, not a problem, it is sufficient. Next, let me see, understand here, from Chennai to Hyderabad, the goods are reached in lorry, and again they are unloading from lorry and they are just transporting it in some share auto or some auto like Tata Ace, all that stuff will be there. No, so in such type of autos, etc., they are transporting. That vehicle number is not required in part B. That is what they are trying to tell here. Okay. Next, sir, once you generate the e-way bill, a unique e-way bill number shall be generated. Okay. So that is their obvious. Next, transfer of goods from one conveyance to another conveyance. As I already told you, sir, you can transfer the goods from one conveyance to another conveyance any number of times, but when they are verifying it, it should match with the e-way bill. Okay, it can be updated any number of times, but it should match with the actual vehicle number carrying. Okay. Next, so as I told you, sir, when part B details of e-way bill number, that is the vehicle number has to be updated, you update the vehicle number, no need to generate new E-way bill. Okay, so that is what the concept. And supplier, recipient, transporter who has generated the E-way bill shall update the details in part B. And as I told you, you can use the transporter ID and assign the E-way bill to a transporter. But if transporter A has assigned the E-way bill to another transporter, for example, here I am transporting goods from Chennai to Gujarat. My customer is in Gujarat. So what I am doing, I am assigning this E-way bill to a transporter called Mr. A. That fellow is transporting the goods till Hyderabad. And from Hyderabad, another transporter B, is taking care of transporting the goods from Hyderabad to Gujarat. In that case, sir, this transporter A is assigning the E-way bill to transporter B. Now, the transporter B, what will do, sir? He can update any part B details in future if he wants. Transporter A cannot make any updates now. Simple E-way bill I am assigning to a transporter. This transporter assigning to another transporter. So, when it is already assigned to a new transporter, the old transporter cannot make any changes to the E-way bill. Obvious, common. Next, as I told you already, sir, the person in charge of the conveyance has to carry what? Has to carry invoice and E-way bill, or delivery challan and E-way bill, that they have to carry. And they can carry the E-way bill either in the physical form or in the electronic form, or it can be even mapped to a radio frequency identification device, just like a FASTag kind of technology, where you are mapping the E-way bills to the radio frequency identification device, and that will be embedded on the vehicle. And the moment the vehicle crosses the RFID readers installed by the commissioner at specified places, so the moment vehicle passes on, what will happen? Automatically that RFID will be scanned, and the information of all the E-way bills mapped to that vehicle will be captured by the system. Okay, so that is the whole idea all about. Next, sir, in case of goods are transported through e-commerce operator or courier agency, the part A of the E-way bill may be furnished by them itself, no issues. Next, the details provided in part A of the E-way bill will be automatically reflected in GSTR1. It will be useful for you to file GSTR1. So the data duplication will be avoided, the time will be saved. That is the point. Next, sir, as I already told you, sir, when E-way bill is generated, you can also cancel the E-way bill, but E-way bill shall be cancelled only within 24 hours from the time of generation of the E-way bill. But understand, sir, while transporting the goods, already that E-way bill got verified now, you cannot cancel it. So it is not possible if it is already verified in the transit. And once the E-way bill is generated, especially, sir, as I told you, part A and part B, two details are there. Part B, you should give the vehicle details. Sir, I don't know part B vehicle details. First, I will raise part A, sir. I will fill part A and I will wait for part B, sir. Whenever I am transporting the goods, then I will cross check and I will fill the part B details, sir. Yes, you can do that. Generate part A alone and raise the E-way bill, but it is not valid until you finish part B. Okay, so E-way bill will now wait for you to finish part B details. How long? For 15 days, that will be there. So, and after within 15 days, what you should do? You should finish part B details and generate the E-way bill. Okay, so this is only after filling part A. For part B, E-way bill will wait for 15 days. That is the validity. We are not talking about actual validity of the E-way bill. You know, actual validity of E-way bill depends upon the distance, 200 kilometers, 20 kilometers, that we will see in some time. Okay, hope it is clear for you. Next, once E-way bill is generated, it cannot be edited for any mistake. The only option left for you is it can be cancelled only within 24 hours. That is what we have seen already. Okay, coming to the next topic, consolidated E-way bill. Sir, what is this consolidated E-way bill? Sir, the consolidated E-way bill is nothing but, sir, instead of carrying multiple E-way bills with me, the transporter, what he can do, the transporter can consolidate all the E-way bills and generate a E-way bill called consolidated E-way bill. Okay, so we are consolidating all the E-way bills. Please don't misunderstand. We are not consolidating the invoices. We are consolidating the E-way bills. Sir, multiple consignments I am transporting, sir. For that multiple consignments, whatever I am transporting, sir, there are E-way bills with me, sir. All those E-way bills I am consolidating and giving a consolidated E-way bill, sir. So as I was telling, so please understand, consolidated E-way bill will be generated. And I repeat, sir, for multiple invoices, you should raise multiple E-way bills, and all those multiple E-way bills can be consolidated, and a consolidated E-way bill can be generated. But all multiple invoices you cannot consolidate and raise one single E-way bill. You cannot call it as a consolidated E-way bill. Okay, for multiple invoices are there, raise multiple E-way bills and consolidate them. That is what the concept. Now, as I told you already, sir, consolidated E-way bill as such will not have any validity, and it will not affect the individual validity of E-way bills. Let us assume 100 E-way bills are consolidated. 100 E-way bills will have their 100 validities, different validities. It will not have any impact on like consolidated E-way bill. Consolidated E-way bill as such will not have any validity. That is what the concept. Okay, fine, sir. Then what is the validity of E-way bills, sir? Generally, as you know, E-way bill validity is generally, sir, if you are transporting them through other than over-dimensional cargo or multimodal shipment in which at least one leg involves transportation by ship. Sorry. Yes. Here please understand, sir, if it is over-dimensional cargo or multimodal shipment in which at least one leg involves ship, then 20 kilometers one day and every part of 20 kilometers you will get one additional day. Other than this, other than over-dimensional cargo, other than multimodal transport where one leg involves ship, that means over-dimensional cargo or ship is involved now 20 kilometers per day. No sir, it is not involved sir. In that case, what will happen? The 200 kilometers one day sir, and for every extra 200 kilometers or part thereof you will get one additional day. And as I told you already, you have to give pin code of the consignor and consignee, correct? Pin code of consignor and consignee. Sir, in such cases what will happen, sir, when you are supposed to give consignor or consignee details, there are pin codes you should be giving, and based on the pin code, system will automatically calculate the distance, and based on the distance automatically the validity will be determined. Imagine I am transporting, just imagine I am transporting goods from Chennai to Bengaluru. The distance is 404 kilometers. Now, how many 200 kilometers are there? Suppose if it is other than over-dimensional cargo or other than multimodal transportation where one leg involves ship. Sir, in such cases, every 200 kilometers one day validity. Sir, here how many 200 kilometers are part thereof are there? 3. Sir, it is 2.02 something, correct? In such case, sir, what is happening here? What is happening here? In such cases, sir, you will get 3 days validity here, because every 200 kilometer or part thereof you will get 1 day. Sir, here you will get 3 days validity. Imagine I have raised e-way bill on the auspicious day 14th Feb. So it is valid till when? 15, 16 and 17. Clear? That is what the concept. Okay. Now over-dimensional cargo means nothing but the cargoes which you are seeing, the lorries etc. The lengthy lorries and all will be seeing on the road when we are traveling. They are called as over-dimensional cargo. Simple. Next. So I have given here the explanation regarding the validity, all that you can just go through that. And sir, suppose if there are any natural calamities or any law and order issues or any transshipment delays or accident of conveyances etc., sir, due to various reasons I am not able to deliver the consignment within the time limit of the e-way bill, sir, then what we can do, sir, the e-way bill validity can be extended by the transporter, but he should do that within 8 hours from the expiry of e-way bill validity. Okay, so that is what the concept. And one more thing, sir, e-way bill generated in one state or union territory, it will be valid across India. For each and every state whatever we are crossing, we need not generate e-way bill. Okay, so that is what the point there. So the next one is acceptance or rejection of e-way bill. See, when you are generating e-way bill, you are using my GST number and raising e-way bill on me. That means let us assume you are located in Mumbai and I am located in Chennai. Sir, you are transporting the goods, and consignee, who is the consignee, like that, or who is the consigner, like that, when you are generating the e-way bill, you are using my GST number. So both the parties are there here, two parties, from one fellow to another fellow when movement is happening. Any fellow raising the e-way bill and opposite fellow's GST number, if it is given, sir, it will get reflected to him. So now for example you are raising e-way bill on me and I will get a message that like this e-way bill number has been generated in your GST number. Sir, if I have really purchased, then fine, I will keep quiet. Or if I have not purchased, what should I do? You may use just like that my GST number and transport the goods, correct? So the point is, the system is giving me the option, sir, within 72 hours from the details available in the common portal or time of delivery, whichever is earlier, either I should accept it or reject it. If I reject it, no problem, fine. If I leave it as such, then it is deemed to be accepted. That means here silence is acceptance. Am I clear? Anybody on whom e-way bill is raised, that fellow will get a message either to accept it or reject it. Sir, if he is accepting it, fine, or if he is rejecting it, fine, but he should do that within 72 hours, which is available in the portal, or time of delivery of the goods, whichever is earlier. Otherwise, sir, that will be deemed to be accepted. Right. Next, sir, e-way bill is not required in following cases. Please remember any 4 easy points from this. Suppose in worst case, if they are asking you straight theory question, what are, write down any 4 circumstances where e-way bill generation is not required. So you should be very careful there. So please make sure you are remembering any 4 easy points. And finally, one more thing, understand, sir, when you are transporting jewelry, goldsmith, silversmith wares and other articles, you need not generate e-way bill. But there was a doubt, sir, even imitation jewelry, can I take this benefit now? Then the department has clarified, except imitation jewelry. So imitation jewelry, sir, you should definitely take e-way bill. Okay, so that was the concept. Next, invoice reference number, all these things we have seen in even e-invoice. rule 138b, 138c, 138d, if you see verification by the proper officer, proper officer, what he can do, sir, he can verify the e-way bill or he can verify the conveyances. Okay, so the verification of e-way bill, as we were discussing, and conveyances by the proper officer. So simple here, nothing but, sir, commissioner or any proper authorized officer can verify the e-way bill physically or electronically, that we can understand. Not only that, I told you, sir, RFID readers will be installed at the specified locations by the commissioner, and the moment the vehicle passes also, they will scan the information and get the e-way bill details. Okay, now here, whenever the inspection is done, inspection of this goods in transit is done, sir, for that the proper officer who is doing this inspection should upload a report, a summary report within 24 hours in part A, okay, to the higher officials in online portal for them. And the balance part B, he has time limit of 3 days from such inspection. Suppose if the time limit is not sufficient for him, sir, let us assume he has done the duty somewhere in the midnight of winter season, all that, he is feeling cold or fever, suffering from fever, so he is not happy with the time limit, then it can be extended for further period of not exceeding 3 days. But once physical verification, this is important, once physical verification of the goods are done at any place, then there is no further verification again at any point of time across India, unless there is a specific information regarding tax evasion with respect to such goods. Okay, so that is important. Now coming to the next one, sir, the same way they can also verify the conveyances if they feel like, if they have specific information regarding the tax evasion, all that stuff. Then here one interesting point is, sir, if your vehicle has been intercepted and detained for a period of more than 30 minutes, then the transporter can upload the said information even in the common portal. That is another interesting point. Okay, sir, fine. Next, the very important topic is blocking the generation of e-way bill. Blocking the generation of e-way bill, just like similar to little bit of Suo Moto cancellation of registration. Sir, here the person who is defaulting, the defaulting supplier, his e-way bill generation shall be blocked. That means, understand, when his e-way bill generation shall be blocked, na, please understand, sir, when he is a person who is paying tax under composition scheme and not furnished the statement for payment of tax for 2 consecutive quarters, that means quarterly, you know, composition dealer has to pay tax, sir, continuously for 2 quarters he has not filed their CMP 08, then his e-way bill generation shall be blocked. No, sir, he is not a composition dealer, he is under a normal scheme and he has not filed consecutively for 2 tax periods, his GSTR 2B. Not only that, sir, otherwise, sir, if he is under normal scheme, sir, he has not filed his GSTR 1 continuously for 2 tax periods, that is months or quarters, whatever it is, or his GST registration has been suspended, sir. In these cases, sir, his e-way bill generation is blocked. Now, the very important thing, please understand, when we talk about e-way bill generation is blocked, that means for any person, if the e-way bill generation is blocked, understand, sir, his e-way bill generation on outward supplies is blocked, not on inward supplies. So GSTIN of the person whose e-way bill generation is blocked cannot be entered in supplier's GSTIN column, can be entered in recipient GSTIN column. Now understand here, suppose if you look at the example here, see, Vishnu has not filed his GST returns, GSTR 3B, let us assume, continuously for 3 months. So, e-way bill generation is blocked. Now, Vishnu is making a purchase from MSD. Sir, MSD is supplying goods worth 7 lakhs to me. Can I generate e-way bill on that? Yes, I can happily generate e-way bill on that, because that is my purchase, not my sale. Sir, in e-way bill, when I am generating this e-way bill, sir, my GST number will be entered in recipients column, not on suppliers column. So I can generate e-way bill happily. Yes, I can also generate, because this is inward supply. I told you already, when my e-way bill generation is blocked, sir, it is on my outward supplies, not on my inward supplies. Okay, sir, same way, suppose if I am selling goods to Virat, now my e-way bill generation is blocked, correct? Sir, 18 lakh worth goods. Okay, now Virat wants to generate e-way bill here. Can he do that? No, sir, he cannot do that. Why? Because even if Virat is generating the e-way bill in supplier GST IN column, my GST number only should be given, correct? So Virat also cannot generate e-way bill here, because my GST IN cannot be entered in supplier column, because my outward supplies cannot go with e-way bill. That is what the concept. Okay, so hope this is clear for you, right? So with this, we are done with e-way bill chapter. So you know that, sir, in this chapter, payment of tax, actually, please understand, payment of tax, see, when you are making the payment of tax, tax payment can be done through 2 methods. I mean, First, for paying the tax, you may use your credit ledger balance, or if that is not sufficient, you can use your cash ledger balance. Credit ledger balance, how do you utilize? Utilization of ITC balance rules we have already discussed in ITC chapter. So that is done. Now we are going through cash ledger. And if you see cash ledger, see nothing but when you have 10,000 rupees GST liability, you have ITC balance of 8,000, you need 2,000 more extra amount to pay the GST liability. That 2,000 will get through cash ledger. So that 2,000 rupees into the e-cash ledger, you can either upload through online method or you can make the payment through offline methods. The online methods, you know, there is internet banking, UPI, IMPS without any limit, credit card, debit card also available. Offline methods, there is NEFT and RTGS without any limit, but over the counter, that means directly you are going to the bank, the counter, and making the payment. Sir, in such case, there is a limit of 10,000 per challan per tax period. So more than 10,000 per challan per tax period, you cannot make any tax payments over the counter. That is the restriction. But understand, the interesting part is, sir, this 10,000 per challan per tax period is not applicable. Is not applicable in certain cases. What are the cases? Sir, if it is government department or notified persons, for them this 10,000 challan limit is not applicable, so they can make the over the payment counter how much ever they want. Next, sir, any proper officer who is authorized for recovering any outstanding dues. So who is authorized to do the recovery of tax dues pending? That officer is recovering by selling the movable property, whatever it is. Sir, he is recovering the tax dues, and the recovered amount he has to deposit in the government account, so that he can deposit without any limit. So over the counter 10,000 limit is not applicable for these people. Okay. Next, finally, any proper officer who is authorized to collect the amount by way of check or DD or whatever it is during any investigation or enforcement activities, those officers also can happily make the over the counter deposits without that 10,000 limit applicability. So that is with respect to the methods of payment, and 10,000 limit is not applicable to these people. So if you see here, for making the payment, actually first we should generate the challan, whether it is an online payment or offline payment. Sir, we should generate the challan, and the challan form is nothing but GST PMT06, and whatever the amount you have uploaded in challan, that will be like payment is made. Once you get the generate the challan, there will be something called CPIN, common portal identification number generated, which is a 14-digit code, and once you make the payment, CPIN will become CIN, challan identification number, which is nothing but a 17-digit code. The 14 digits CPIN plus 3 digits bank code will be taken as PIN. So challan identification number. In some cases, the bank code may be 4 digits also. This is for your general knowledge. Now, sir, the e-cash ledger, whatever the amount, the payment you have made, that will go and reflect in e-cash ledger, and e-cash ledger is maintained in form GST PMT05. Once you generate the challan will be valid for 15 days for making the payment. So within 15 days, you can make the payment. Next, there are various other small points, all that you can just ignore or just go through once. And obviously, see, now in GST there are no physical challans, only online challans. Whatever the amount you have to pay, whether you have to pay CGST tax, IGST tax, CGST penalty, SGST penalty, late fees, whatever it is. So no physical challans, only online challans, and all the multiple payments, will be covered under single challan, no matter whatever you have to pay. Sir, I should pay tax, I should pay late fees, I should pay penalty, I should pay interest, or any other payments you can pay using one single challan. That is what the concept. Right. So that is with respect to generating the challan, making the payment, depositing the cash, all that. Sir, how do I utilize e-cash ledger balance? You know, e-cash ledger balance, if you see e-cash ledger format, if you see, sir, e-cash ledger has 4 major heads: CGST, SGST, IGST, GST compensations. In case of SGST, there can be a scenario where it can be UTGST also. Okay. Sir, each major head will have 5 minor heads. One is tax, interest, late fee, penalty, and others. These amounts, whatever are there in these heads, see, we call as major heads and minor heads. Suppose you have liability in CGST tax 100, but you have money in IGST tax 500. Sir, we cannot use that IGST tax amount to CGST tax. You understand, this is not e-credit ledger, this is e-cash ledger, and you all know, sir, if you have liability in CGST tax, you should also have the cash balance only in CGST tax, then only you can set off that. If you don't have the balance, or you have balance somewhere in different head, that balance you can transfer to the required head. That means I have money in IGST tax, but liability is in CGST tax, or liability is in IGST late fees, anything. So first, wherever I have money, from that account I can transfer the money to any major head, any minor head. Okay, I can say from one minor head of major head, the balance can be transferred to any minor head of any major head. So straight away set off is not available. So what we can do, we can transfer the money first to the required balance, and then we can go for the set off. So I repeat, intra-head adjustment, inter-head adjustment is not allowed here. But sir, money from any required head you can transfer to any required head so that the liabilities can be set off. That is what the concept. Simple. So first, what we should do? First, we should transfer the funds to the required head. Then we should go for the set off. So for transferring the funds, for transferring the balance, we can use the form GST PMT 09. That is what the concept. GST PMT 09. We can use that particular form. Okay. So that is one thing. And one more interesting point is here, as I told you, sir, balance in e-cash ledger can be transferred from one head to any another head. But also here, what we can do is, sir, balance from e-cash ledger of one distinct person, you can transfer it to another e-cash ledger of that same distinct person. For example, I have registration in Tamil Nadu and Karnataka. Sir, I have two registrations, Tamil Nadu registration and Karnataka registration. In Tamil Nadu e-cash ledger balance, I can transfer to Karnataka e-cash ledger balance. But from this Tamil Nadu e-cash ledger balance, I can transfer to Karnataka IGST or CGST heads only. I can transfer it. So, if you want to transfer to Karnataka SGST head, you cannot directly transfer. But once the money from Tamil Nadu e-cash ledger, it goes to Karnataka e-cash ledger. Again, within Karnataka e-cash ledger, you can transfer the money from any head to any head. That means direct bus is not there to Karnataka SGST balance. But I can first go to CGST or IGST accounts, and from there internally I can transfer again to SGST. So I repeat, sir, one e-cash ledger balance of a person can be transferred to e-cash ledger balance of the same person of a different registration. But the only condition is in this e-cash ledger, that means from Tamil Nadu to Karnataka I am transferring. Sir, in Tamil Nadu I should not have any liability. So after closing all my liabilities, I can do this transfer. Okay, that is what another point. So can be transferred to major heads IGST and CGST of another e-cash ledger of the distinct person. And for doing this, there should be zero liability in this particular e-cash ledger in this particular state. Okay, so that is what the point. And as I already told you, we can transfer only to IGST and CGST, and once you go there internally, you can transfer it from anywhere to anywhere. That is what the point with respect to transferring cash ledger balance. So that is with respect to e-cash ledger. Okay, so this is what the concept which we have discussed. So the next one, if you see the e-credit ledger, as we already know, when you file your monthly 3B returns, automatically the e-credit ledger balance will, the ITC balance will come and reflect in your e-credit ledger, and that is nothing but used only for making tax payments only, not for any other payments. That means you cannot use it for paying interest, late fee, penalty, all these things. You can use it only for making tax payments, not any other payments. That we have already discussed. How do you discharge the tax liability using ITC balance? Now, there are some clarifications asking here, sir, whether e-credit ledger balance can be used for making payment of any tax. See, you can use e-credit ledger balance for paying any tax, but other than the tax liability under reverse charge mechanism. So the tax liability under reverse charge mechanism, you cannot pay through e-credit ledger balance. You know, you should be paying it only in cash. Sir, can the amount available in e-credit ledger, can I use it for making payment of any liability other than tax? Just now we have discussed, sir, it can be used only for making output tax payments, and you cannot use it for paying interest, penalty, late fees, or erroneous refund sanctioned in cash. All these things should be paid only in cash. You cannot use e-credit ledger balance. Next, amount available in e-cash ledger. E-cash ledger can I use for making payment of any liability? Of course, cash ledger is just like money, sir. You can use it for anything: tax, interest, late fee, penalty, erroneous refund, whatever it is. Anything you can use e-cash ledger. That is what with respect to certain small clarifications there. Next, e-liability register. If you see e-liability register, sir, how do we discharge the liabilities? What is the order of discharging the liabilities? Now, the first thing, we should discharge the previous tax period liabilities. Next, current tax period liabilities. Then any liability under section 73 or 74 is there, then you can discharge those. That means if there is any demand notice under section 73 or 74, you cannot discharge those liabilities without discharging your previous tax period liabilities. So first, that means, for example, without discharging Jan month liability, you cannot discharge Feb month liability. Okay, without discharging all the till date tax liabilities dues, you cannot discharge any liability which is given as demand under section 73 or 74. That is with respect to e-liability register. And parallelly, there are benefits of new payment system, all that stuff. You can just go through this. No more queues, no more waiting for making the payments, because payments can be made 24/7. Immediate online receipt. Even if you buy something in Amazon, Flipkart also, online receipt immediately will be given. Single challan for making all the multiple taxes. No need to pay, like generate separate challan for CGST taxes, GST tax, interest, late fee, all that stuff. For all the taxes, one single challan will be sufficient. Tax consultants can make payments on behalf of the clients. Earlier also we were only doing, now also we are only doing. Greater transparency. Online payment made after 8 p.m. will be credited to the taxpayer's account on the same day. That is only for some banks. All the banks, they are not providing that. And one important advantage is quick revenue to the government treasury. That is what the benefits. Okay, right. Here very important point, one very important point which I have missed out in the book, as given as notes here. See, there is what are the payments which you should definitely pay only in cash under GST? Sir, one is RCM liability, the other is interest, late fee, penalty and others. Next, erroneous refund you have taken in cash, that you should again give back to the government only in cash, because you have already received the refund. You applied refund wrongly, they also granted wrongly, and they are asking you the money, so you should return that refund the refund to the government in cash only. Next, composition tax, TDS and TCS payments. Sir, these things only to be paid in cash. See, now the next one is very important topic, interest calculation under section 50. You know, interest calculation, if you see, there are three different cases here. Sir, interest calculation number one, you are paying late the taxes, and because of that interest will come into picture. Here, when you are paying the taxes late, please understand, why are you paying the tax late? Sir, delay in payment of tax is happening because of delay in filing the return. Sir, I am filing the return late, because of that my tax payment is being late. Now I am paying interest. And you know, sir, for example, August month return I have to file by 20th September. I am filing it on 25th September. So 5 days delay. For that 5 days delay, interest will come. And you know, the interest will come on net liability. There is one small amendment here, one important amendment here. That is, sir, for example, listen carefully, very important point. Sir, you have 10,000 liability, and this is August month liability, and you have to file the return by September 20th, and you should be paying the taxes. Now imagine you are filing this on 20th November. When you are filing this on 20th November, you should pay interest for this particular period, September 20th to like September 21st. Let us assume we have 10 more days left in September. Next, October 31 days, and November 20 days. So 161 days. Sir, for 61 days you should pay interest. Okay, for 61 days you have to pay interest. Okay, September 20th, leave 20 days, due date is still September 20th. From 21st you calculate, 10 days are still remaining in September, 31 days in October, November 20 days. November 20th I am filing, sir. 61 days interest will come. But 61 days interest will not come on 10,000, but 61 days interest will come on the net tax liability, as you already know. So that means gross liability minus ITC balance. One more twist here is in the story. Imagine, sir, I have already a balance of 500 in my e-cash ledger. From when to when? From the due date of filing this August month return. That means from 20th September till actual date of payment 20th November. So e-cash ledger balance is 500 rupees till November 20th, and e-credit ledger balance is 2500. Okay, now sir, gross liability 10,000 is there. 10,000 minus, you know, 2500, that is already the provision which we know. And also, sir, now we are going to reduce 10,000 minus, we are going to reduce 10,000 minus 2500, you know. But the new thing is, sir, even the cash balance whatever is there in e-cash ledger from the due date of filing that August month return. Here August month liability only, no, we are discharging. Sir, August month return, the due date 20th September. From 20th September till the date of payment, whatever is the amount lying in e-cash ledger, imagine 500 is lying, that also you reduce, and on balance amount you pay. On balance amount you pay, that is 7,000 into 18% into 61 divided by 365. So 211 rupees will be the interest. Hope you are understanding that. That means, sir, because of delay in payment of delay in filing the return, there is delay in payment of tax. Then the interest will come on gross liability minus e-credit ledger balance minus e-cash ledger balance, whatever is there from the due date of filing that particular return till the actual date of filing the return. There is still the payment of tax, all that. Sir, whatever is there on that e-cash ledger also we will be removing, and balance amount whatever is there, that alone will be subjected to interest. Okay, so that is what the concept, that is the new amendment there. And of course, you know, sir, if at all any other case, why delay in payment of tax? Any other case, sir, not because of delay in filing the return, sir, any other case, you forgot to give the invoice in that particular return, all that stuff. So like that, any other reason, but not for delay in filing the return. In that case, you know, sir, GST liability, the interest will be on gross liability, not on net liability. You know that. You can just go through this example here. So this is the example 121. So you can just go through this, and this example I have improvised and I have shown you, just discussed right now. This is the answer. So you can just pause the video and take a screenshot and check that, or whatever it is. And the same question I have improvised to teach the amendment also. So we have discussed amendment also with the help of this particular example. Hope it is clear for you. Now, the last case, sir, ITC. Sir, ITC wrongly availed and utilized. For that, what is the interest, sir? ITC wrongly availed and utilized. What is the interest for that? ITC wrongly availed and utilized. The interest will be only when the ITC is utilized. Sir, when we can say ITC balance has been utilized now, we have to check the closing e-credit ledger balance, and if the closing e-credit ledger balance falls below the wrongly availed ITC amount, then that month in which the closing balance has fallen below, we can understand wrongly availed ITC has been utilized. So, when the wrongly availed ITC has been utilized by filing one particular 3B, so let us assume June month closing balance has fallen below the wrongly availed ITC. Imagine, sir, I have taken 50,000 ITC wrongly. 50,000 ITC wrongly. Sir, now if you see in this particular month, the closing e-credit ledger balance is falling below 30,000, 50,000, sorry, below 50,000. Which month closing balance is that, sir? That is June month closing balance, sir. June month closing balance means in June month only you have utilized that wrongly availed ITC. So let us assume here 50,000, as I told you, wrongly I have availed ITC. 30,000 is the closing balance, means what? 20,000 wrongly availed ITC has been utilized. Balance 30,000 is still lying in e-credit ledger. So this shortfall is happening in the month of June. How it will happen in the month of June? By filing the June month GSTR 3B. By filing the June month GSTR 3B. When you are filing June month GSTR 3B, you please check that. And what is the due date for filing that 3B? You check that also. Whichever is earlier, that will be the date of utilization. From that, interest will start calculating till the date of payment. Till the date of payment. So June month return, imagine I am filing on 15th July. 15th July or 20th July is the due date, whichever is earlier. 15th July is earlier. Till the date of payment, sir, till the date of payment, I am paying this on somewhere 18th September in August month 3B return, imagine. Then, sir, till that 15th July is no, from next day we will start calculating the interest. So, 16th July till 18th September, interest will be calculated and it will be paid. And understand, when wrongly availed ITC has been reversed, you can reverse wrongly availed ITC either in ITC balance if it is there, or can be reversed in cash. But if you are reversing the wrongly availed ITC and if it has been utilized, how much ever has been utilized, on that utilized amount, interest will be paid, to be paid only in cash. So interest amount, to be discharged only in cash only. So wrongly availed ITC you can reverse either using ITC balance if you have that, or cash balance. No need to worry about that. Okay, so that is what the point. Let us see one small exam question here. If you see, Mr. Broker is wrongly availing 1,25,000 ITC at the time of furnishing the return under section 39, that is GSTR 3B of October month. October month he is wrongly taking 1,25,000 ITC. Okay. Not utilized that for output liability for the month of October. That means that is not used in October. Okay. He utilized 75,000 from the wrongly availed ITC of 1,25,000. So out of 1,25,000 he is using 75,000 in the month of November. So what we should do now? We should check this November month 3B is filed on what? Because that November month 3B due date is 20th December. Okay. So the broker has paid amount of wrongly utilized 75,000 on 10th March. That means interest will come till 10th March and reverse the unutilized 50,000 on 20th March. If you see, sir, out of 1,25,000, he has taken 75,000 and used it. 50,000 he has not used. That means only on this interest will come. Only on this interest will come. On this interest will not come. So on 75,000 interest will come till 10th March. From when? From November month 3B filing date or due date, whichever is earlier. Okay. We know that interest will come on 75,000 till 10th March. That we know. On 50,000 there is no interest, please understand. They are asking calculate the total interest payable, rounding off to the nearest rupee. If broker files 3B of October on 18th November, 3B of October when he is filing, is it relevant for us? No, because in October month he did not utilize wrongly availed ITC. Please understand that. So for us it is completely irrelevant. For us it is completely irrelevant. Okay. So This is not required. 3B of November, we know in November only utilization is happening. That is done on 25th December. That means November month return actually being filed on 25th December, but due date is 20th November, sorry, 20th December, and they told clearly there is no extension of due date also. That means, sir, I can understand from 20th December till 10th March, we have to calculate interest. 20th December, if you see, that means in December total 31 days. 20th December means 20 days gone. Sir, I have still 11 days in December. Jan 31 days. Feb, this is 28 days. March 31 days. You should check whether this is a leap year also or not. And this is financial year 22-23. That means it is not a leap year. Sorry, March 31 days will not come. March only 10 days will come. Okay, 8, 9, 10, 0, 1, 2, 5, 7, 8. 80 days we should calculate interest. Yes, if you calculate interest for 80 days, 75,000 into 80 divided by 365 into 18%, you will get 2959 as interest amount. This should be paid only in cash. That is what the concept. This should be paid only in cash. Hope it is clear for you. Okay, this is like past exam questions, CA final November 2023. So you can just pause the video and check, or go through the question if you want one more time peacefully. So with this we are clear with interest calculation also, and there are some small clarifications here. Sir, while calculating this wrongly availed ITC, whether we have utilized or not, with respect to IGST, the wrongly availed IGST, I can say I have utilized it only the combined ITC balance of CGST, SGST and IGST, all these things, CGST, SGST, IGST, all these things put together, if that is falling below the wrongly availed IGST amount. Suppose for example I have wrongly availed 10,000 IGST, and in that, sir, when I can say that I have used that amount wrongly availed 10,000, when I can say that has been utilized, when all the ITC balance of all the ITC balances of CGST, SGST, IGST put together falls below 10,000, then only you can say it has been utilized. Otherwise we cannot say that has been utilized. Clear? So that is what one clarification. So the next concept is TDS, TCS. We understand TDS, TCS are two sections, section 51 and 52. TDS, first one, coming to section 51. The TDS rate, because it is 51, percentage is 2%. Remember that way. Section 52 is TCS. Earlier it was 1%. Now they made it 0.5%. So it is 0.25% plus 0.25% TCS rate. I repeat, TDS rate is 2%, TCS rate is 0.5%. Okay, please be careful with that. Now we are discussing TDS concept. Let us complete this TDS concept. Sir, first, TDS is applicable for whom, sir? This is applicable for government departments or establishments, local authorities or governmental agencies, or the new fellow added here is registered person buying metal scrap from another registered person. Okay, metal scrap dealers both are registered, then TDS provisions will come into picture. Government boards, authorities or bodies, societies, government societies and public sector undertakings, for these people section 51 TDS provisions are applicable. So when they are making the payment, where the contract value, I repeat, not the invoice values, are the contract value, if the single contract value is exceeding 2,50,000, so understand, for them if the single contract value is exceeding 2,50,000, even if it is equal to 2,50,000, it is not applicable, sir. It is single contract value, it is greater than 2,50,000, then only TDS provisions are applicable. So TDS provisions are applicable when the contract value is greater than 2,50,000. I repeat, if the invoice is just 10,000 also, no problem, TDS will come into picture. But contract value, single contract value should be greater than 2,50,000, then TDS provisions are applicable. And please understand, if the supply is happening, for example, so these people, for them TDS provisions are applicable means these people are the recipients, these people are not suppliers, these people are receiving something, and when they are making payment, while making payment they have to deduct TDS under section 51. Okay, now the concept is between themselves itself, if anything is happening, TDS provisions are not applicable, section 51 is not applicable, except for metal scrap dealer. We both are metal scrap dealers, we both are dealing with ourselves, section 51 TDS is applicable. But you are a public sector undertaking, I am a public sector undertaking, we are transacting with each other, even if it is greater than 2,50,000, TDS provisions are not applicable. But I repeat, if we both are metal scrap dealers and we are registered under GST, we are dealing with each other greater than 2,50,000, we should follow TDS provisions. That is what the concept. Okay. Now, sir, for them, persons not liable to TDS, we have discussed. And when TDS shall be deducted, as I told you, sir, single contract value exceeding 2,50,000. Okay, rate of deduction is what? 2% on the payments what we are making. And please understand, TDS is not applicable for exempt supplies, and TDS is not applicable for unregistered suppliers. When the supplier is unregistered or when the supply itself is exempt, TDS provisions will not come into picture. Not only that, sir, TDS provisions will not come into picture when location of the supplier, this is important point, location of the supplier and place of supply both are falling in the same state, but recipient is registered in a different state. Okay, in such case TDS provisions are not applicable. As I was given, as I have given example here, supplier and place of supply are in Tamil Nadu, but recipient is registered in Karnataka. TDS provisions are not applicable. TDS provisions are not applicable. That is what the concept. Okay, so if you see the TDS provisions, the TDS I should deduct on what amount? You should deduct on the value other than GST. Excluding GST, you should deduct the TDS on the value, and that whatever has been deducted should be deposited to the GST department by 10th of the next month by filing a return called GSTR 7. Okay, so these are the details. Next, if I give you an example here, see, sir, there is a contractor who got the contract to construct or repair the roads with the local authority, and the contract value is 10 lakhs. Sir, this is an interstate supply. Imagine GST rate 18%. Imagine. Now that local authority is making a payment of 1 lakh. So I repeat here, contract value should be greater than 2,50,000. Invoice value can be anything. So invoice amount, like let us assume they have given 1 lakh and the payment is due. And when the payment is due, when they are making that payment, sir, they should deduct TDS. So now what the local authority will do? The local authority will pay to the contractor, sir, 98,000. That means reducing 2% on the value, that is 1 lakh. So 98,000, and they will also pay the CGST 9%, SGST 9% to the contractor. And now what the contractor will do? Contractor will file his GSTR1, file his GSTR3B. We know all these things. He will pay his tax liabilities, everything, and he close that. If the local authority is registered, yes, of course, local authority is registered, that will get reflected in local authorities GSTR2B. Now the concept is all about local authority. What they should do? Local authority, as a person deducting the TDS, they should take the 2,000 rupees and give it to the government by filing GSTR 7 by next month 10th, and that amount whatever has been deducted as TDS and deposited by local authority with the GST department, that will come and reflect in the e-cash ledger of the contractor. So whatever the TDS has been deducted by local authorities, all these people from the contractor, will be deposited to the GST department. GST department will give the same amount to the e-cash ledger of that particular contractor. Okay, so that is what the concept. As I already told you, BSNL, a public sector undertaking providing some services to Greater Chennai Corporation Local Authority. For both of them, Section 51 provisions are applicable. So anything happening between them, TDS provisions will not come into picture. No matter what is the value, as I told you, it is greater than 2,50,000, still TDS provisions will not come into picture. Sir, suppose Vishnu is a registered metal scrap dealer, and also SSME Private Limited is again a registered metal scrap dealer. Sir, sale of metal scrap for 4 lakhs plus GST, we are doing that, greater than 2,50,000, but still TDS provisions are applicable here. I cannot say we both are like subjected to Section 51. Between us anything is happening, TDS between you anything is happening. For that purpose itself, we have got Section 51 into picture. That is what the concept. Okay. So this is the amended part. Be careful. And there is here, if you see one more small example, a comprehensive question regarding this. So here, if you see this question, there are particulars and there is total contract value given here. The total contract value including GST, but the payment due here is excluding taxes, my dear friends. Accordingly, just go through this question. Actually, a very good question covering all the adjustments. Just pause the video, just go through this. A very good question actually. Spend some 5 minutes time and you will understand. You will cover all the concepts here in this particular question. So with this, we are done with TDS chapter. TDS topic, sorry. Okay, with this, we are done with TDS topic. So you know TCS, first of all, so TCS is under section 52, and TCS is applicable when? The TCS is applicable to e-commerce operator on the transactions which are supplied through it. Okay, so in such cases, TCS has to be deducted at a rate of 0.5%, not 1% anymore. So it should be at 0.5%, that is 0.25% and 0.25%, as I already told you, that it is 0.5%. This is the amendment. Please be careful with this. So 0.25% and 0.25%, sir, they have to collect TCS and pay to the government. And just like similar to TDS concept, here also TCS people has to collect tax or source from the suppliers who are supplying the goods or services through the e-commerce operator. What? Through the e-commerce operator. So e-commerce operator has to collect tax or source under section 52.5% and should pay to the GST department on monthly basis by filing a return called GSTR 8 on or before 10th of every month. Same story, TCS also will get reflected in the supplier's e-cash ledger, just like the contract. Okay. Now, sir, one interesting thing is here when you are calculating the TCS, the TCS is not like TDS, sir. Here monetary limits are not applicable. No matter what is the contract value, no matter what is the transaction value, all that stuff, TCS is applicable. TCS is applicable, and the TCS 0.5%, 0.5% has to be collected on the net taxable supplies supplied through that month, during that month. That means whatever the supplies made during that month, aggregate value, and also minus returns, supply returns, so sales returns we can say, that you can just take, and on the TCS will come into picture. But TCS will not come into picture, please understand, in case if it is an exempt supply, in case of the supply which are made through the own website and where consideration is collected directly from the supplier, or where the supplies are covered under 9 subsection 5. That means e-commerce operator itself is liable to pay GST. Now then we will not make TCS obligation here, or supplies covered under reverse charge mechanism, or in case of importation of goods and services, or where the supplier is unregistered. Sir, these 7 cases, remember carefully, in these cases TCS concept will not come into picture. Hope I am clear with that. So as I told you, monthly you have to file GSTR 8 on or before 10th of the next month. Okay, so that is what the point. Next, sir, any errors or mistakes what you have committed that you can rectify before 30th November of the succeeding financial year, or actual date of filing annual return of the relevant financial year, whichever is earlier, just like section 16 subsection 4 time limit. And the late fees also given here, 200 rupees per day or 10,000, whichever is less. That means 200 per day means 100 plus 100, or 10,000 means 5,000, whichever is less. So that is what the concept here, and there is a comprehensive example here. So please understand TCS applicability. First of all, sir, if it is a 9 subsection 5 supplies where e-commerce operator is liable to pay GST, TAR services, if you remember, transportation of passengers, housekeeping, accommodation, restaurant services, all that stuff. In such cases, e-commerce operator is liable to pay GST, no TCS. But in all those cases, there are exceptions where supplier is liable to pay GST. In that case, TCS will come into picture. Okay, sir, all other supplies other than TAR, in such cases, supplier is liable to pay GST. Hence, TCS provisions will come into picture. Hope it is clear for you. Okay. Next, I have given a comprehensive example here. So imagine Mr. Vishnu is making supplies through Amazon, selling watches. So in the month of June, what I did, I have supplied 5 lakh worth supply watches, 5 lakh worth watches, and there are some returns worth 40,000. In that case, what to be done? Sir, first of all, understand, only when Amazon, when the e-commerce operator is collecting consideration on behalf of me, then only TCS will come into picture. If the consideration is directly collected by the supplier, then TCS will not come into picture. And one more thing, please understand, sir, if e-commerce operator is acting as agent of supplier, acting as agent of supplier, then this will not come into picture. Okay, so please remember this. Now, sir, in such case, so what is happening? E-commerce operator is receiving consideration and they have to pay me that 4,60,000 plus GST. Okay, sales minus sales returns. So what the e-commerce operator will do, sir? E-commerce operator, when they are making the payment, sir, sir, they will make me 4,60,000 payment and they should collect TCS from me. The TCS half percent they should collect. TCS at half percent they should collect. So what they will do, while making the payment 4,60,000, they will take just the TCS amount, whatever is it, 2,300. So they have to pay me that 4,60,000. From that, what they will do, they will collect that TCS 2,300 and they will pay me the balance. They will pay me the balance. How much? 4,57,700, I guess. Okay. So they will pay me 4,57,700 plus they will pay me GST on 4,60,000. So as a supplier, what I will do, I will pay that GST. I will file my GSTR1, I will file my GSTR3B, and I will file all my returns. If my customers who has purchased through Amazon, please understand, I can have the customers, two types of customers, B2B, B2C. If my customers are registered under GST, they will get it in their 2B, otherwise nothing. Okay, you know that. From my end, what will happen, you know that. Sir, now what the e-commerce operator Amazon should do? Sir, Amazon should deposit the 2300 with the department on or before 10th of the next month, that is July, by filing GSTR rate. That 2300 will get reflected in my e-cash ledger. Okay, so that is what the concept of TCS. So this is a comprehensive example talking about TCS. Just look at this, go through this once. If you want to pause the video for 2 minutes. Just go through the example on your own for 2 minutes sincerely. And now if you see here, since GSTR rate for every tax period is not mandatory, e-commerce operator is required to file GSTR4 only when he has like goods supplied through him, when he has collected some tax, all the stuff. Otherwise, no need to file GSTR rate. Nil return is not required here. Okay, so that is one thing. Next, composition taxpayers who are opting services cannot supply through e-commerce operator, but who are composition dealers dealing with goods can go with e-commerce operators, right? So that is what the point. And anytime officer can ask for any information from the e-commerce operator, e-commerce operator has to furnish the information within 15 working days. Otherwise, in case of failure, he will be liable for making a penalty of up to 25,000. Penal action can be taken on. And you know, in returns chapters are already like this chapter is nothing but no concepts, nothing involved. It is purely about what is the return, what is the due date for filing such return. So that is what we are going to see. Without wasting time, let us go with this GST returns. And here, see, first of all, GSTR 1 and 3B, you know, so GSTR 1 and 3B generally for normal people who are not opting QRMP scheme. Sir, who are not opting for QRMP scheme, the life is very easy, simple. Every month on 11th of the next month, every month GSTR 1, they should file GSTR 1 11th of the next month. So June month return, they should file 11th July. July month return, they should file August 11th. So that way, every month first what I will do, the month is over, 11th of the month, I will file GSTR 1, and that month 2B will be generated on 14th, and I will check the 2B, and I will file my GSTR 3B on 20th of that next month. So I will close the transaction. So I will close that month. For example, June month, what I will do, June month over, July 11th I will file GSTR 1 for June month, and July 14th GSTR 2B is generated, and July 20th, by that time I will pay my taxes and close it. So this is what generally people who have not opted QRMP scheme will do. But here what we are doing, the government thought for small people, for small taxpayers. What do you mean by small taxpayers? Whose aggregate turnover is not exceeding 5 crores in the preceding financial year. For them, they are coming up with a scheme called QRMP scheme. What do you mean by that? Quarterly return and monthly payment scheme. That means they have to file the returns quarterly, but they have to pay the taxes monthly. That is what the concept. Now, sir, if you take a quarter, but actually what has happened, you know, by now you would have been understood, QRMP scheme has actually made the life miserable. They thought to simplify the activities or simplify the responsibilities, complaints, burdens for the small taxpayers, but they have obviously made it same, or they have increased the burden actually. So in the quarter, what they will do, sir, suppose you take the quarter of Jan to March. Sir, Jan to March quarter, if you take, what they have to do, Jan month, Feb month, and March month. Okay, for these 3 months, if you see, sir, this Jan month is over. Once Jan month is over, sir, 13th Feb, they will be filing something called IFF. You know that. Feb month over, 13th March, they will be filing something called IFF. Okay. So for these 2 months, they have to file IFF and giving all the B2B details only, which are less than or equal to 50 lakhs. If it is greater than 50 lakh B2B invoices are there, they should be given only in GSTR 1. You don't have any other option. So first month and second month, they have to file IFF. That too only B2B invoices. That too maximum 50 lakhs is the limit. That much worth invoices only they can upload in IFF. Okay. Once this March month is also over, sir, for the entire quarter, of Jan to March, they will file a return called GSTR 1 on 13th of April. So once the quarter is over, the next 13th they will file GSTR 1. This is with respect to GSTR 1 details under QRMP scheme. And sir, coming to payment, coming to monthly payment, sir, monthly what they have to do? Monthly, sir, 25th of Feb. See, for example, 25th of the next month. For the first 2 months, 25th of March here. For first 2 months in the quarter, 25th of the next month, they will make the tax payment. And sir, when they are making the tax payment, whatever the tax payment they are making, that will go and reflect in e-cash ledger. That will go and reflect in e-cash ledger. And once March month is over, that means for entire quarter, what they will do for Jan to March, they have to file GSTR 3B. The due date of GSTR 3B is 22nd or 24th, based upon which state you are residing. Sir, if you are residing in these states, Chhattisgarh, Madhya Pradesh, Gujarat, Maharashtra, mostly like south western states, you can say that way. So for all these states, if you are residing there, 22nd of the next month will be the due date. Once the quarter is over, you should file GSTR 3B. Once the quarter is over, next month 22nd. And same way, once quarter is over, if you are staying in these states, the 24th of the next month you have to file GSTR 3B. That is what the situation. Okay. Now, sir, that means what I am trying to tell, first month and second month you file IFF. Once the third month is over, you file GSTR1. This is with respect to giving sales information. And first month and second month, you will pay taxes on or before 25th of the next month. And once quarter is over, you will file 3B on or before 22nd or 24th, based upon which state you are located. That is what the duty of all these people. Okay. So this is, if you have to follow QRMP scheme, this is the point. Now, sir, understand again here, if you are paying taxes here on 25th, so if you are paying taxes here on 25th of the next month, first 2 months, sir, you have two methods for paying the amounts. Sir, for paying the taxes, you have two methods. One is called SAM, that is self-assessment method. The other is called fixed sum method. Okay. Sir, what is this self-assessment method? Self-assessment method means actually. Self-assessment method means actually you should take your output tax for that month minus input tax and pay that. You assess your taxes by your sales, your ITC in 2B, and set off them, and you go with the payment. Self-assessment method, first 2 months. After the third month is over, quarter is over, you can go with GSTR 3B. Okay. Next, fixed sum method. The fixed sum method means the system will tell you how much you have to pay. System will calculate and automatically will tell you how much you have to pay. So how system will tell how much you have to pay means that is based upon your previous tax period payments. Now, sir, you are in Jan to March quarter, correct? Sir, Jan to March quarter, if you see, preceding to this, you are paying taxes on monthly basis, imagine, or you are paying taxes on quarterly basis. If you are paying taxes preceding to Jan to March, so you are paying taxes suppose on monthly basis. The system will assume whatever your December month liability. December month you would have discharged GST liability. December month you imagine 40 rupees is your GST liability. System will assume, sir, Jan month also your liability will be 40. Feb month also your liability will be 40. So system will ask you to pay that 40. See, December month you have paid in cash 40 rupees. System will assume even in this quarter, monthly your liability will be like that. So first 2 months you will be paying on like rough estimation basis. So system will say, okay, December also you have paid 40 rupees cash. So this Jan month and Feb month also you pay 40 cash. After March is over, actual liability. Sir, actual liability is 90 rupees, sir. 10 rupees shortfall is there. Pay that 10 rupees and file the return. That means extra 10 rupees you have to deposit and file the return. Whatever you have deposited in the first month, 40 rupees and 40 rupees, that will be lying in e-cash ledger, that you cannot use it for any other purpose. Okay. So now, sir, March quarter is over. Now, if the liability is 90 rupees, what you should do, balance whatever 10 rupees is there, that you will upload to cash ledger and you close it. No, sir, actual liability is only 70 rupees. That means 10 rupees you have deposited extra in e-cash ledger that you can use for any purpose. You can claim refund also. That is one situation. So if preceding tax period is a month, 100% of that month liability, whatever is there, that you pay in the first and second month. After the third month is over, quarter is over, you will understand what is your actual liability and close the transaction. Okay. Next, sir, if it is quarter, preceding tax period is quarter, that means previously also I am in QRMP scheme only, sir. Jan to March, before that October to December also I was paying tax on quarterly basis, the QRMP scheme only. Then what the system will see for that entire quarter how much you have paid in cash. If you have paid in cash, whatever it is, let us assume you have paid 100 rupees in cash. That means 100% of your liability in that quarter. Okay. System will see how much you have paid in the last quarter. 100 rupees if you have paid. System will assume this quarter, Jan to March quarter also, the liability will be same. That means system will ask you first month pay 35 rupees. Generally you should know 33.33% will be monthly liability, correct? If for the entire quarter, if the liability is 100 rupees, then monthly 33.33 rupees. System will say like let us round it off. So for 35 rupees, system will ask you to pay 35 rupees cash. and month 2 again 35 rupees cash. Month 3 it is over. That means for entire quarter you should file 3B GSTR 3B. So the quarter is over, 3B you will file, and you will see actual, sir, actual liability is 90 rupees again. You have 20 rupees shortfall. So 20 rupees you add to cash ledger and pay the liability. No sir, actual liability is only 60 rupees. You have 10 rupees extra in e-cash ledger, claim that as refund or use it for any other purpose. So simple. The system in fixed sum method, it will see what is your liability in the previous tax period. Previously, if you are paying on monthly basis, the same liability you pay first month also, second month also. After quarter is over, see the actuals and pay the difference. Sir, previously also I was paying quarterly also, sir. Now also I am in quarterly QRMP scheme only, no, sir. So for first month and second month, whatever your previous tax period, that previous quarter liability, 100% liability, out of that 35% you pay in the first month, 35% you pay in the second month, and system will automatically show that to you in the portal. You have to pay. Once quarter is over, you know the actuals. If you have paid extra, cash ledger balance can be carried forward, or you can use it for any purpose or refund. No sir, if I have paid less, then again upload balance shortfall cash and you close the return, finish the liability. So that is what. So that means, understand, sir, QRMP scheme. See, generally if I am not under QRMP scheme, my life will be so easy here. Okay, only monthly I will check my GST return, GSTR1 I will file, and 3B I will file and close it. I will check 2B and I will close this. But if you are going with QRMP scheme, you have to follow all these things. Okay, sir, monthly you should be paying tax. Monthly you are also supposed to file IFF. That too only B2B invoices. All the B2C invoices I should take only to GSTR1. Okay, that is how you have to proceed. When you are paying taxes on monthly here under QRMP scheme, you should use a form called PMT06. Okay, so that is what all about this particular thing. You can take a screenshot of this if you want. I will just, yes, now you can take a screenshot of this if you want. Right. So that is what complete overview about QRMP scheme, GSTR1, due dates 1 and 3B, all that. So let us just quickly go through this, like what theory part, what and all the due dates, etc., etc. First of all, section 37, sir, GSTR1. You know GSTR1 is all about giving you a outward supply details, B2B, B2C, all that. Here one interesting point is, see, understand, there is an amendment here with respect to reporting the invoices in your GST return. You know, invoices in GST return are divided into B2B, B2C large and B2C others, correct? Sir, you know, B2B details invoice wise will be giving in the returns, whether it is in intrastate supply or interstate supply. B2C invoices, we will divide them into B2C large and B2C others. B2C large means, sir, interstate supplies where the value is greater than 1 lakh. Okay, I repeat, B2C large, interstate supply value is greater than 1 lakh, then only we call it as B2C large. B2C large also you should report invoice wise separately. All other B2C invoices are B2C others, and we have to report them in the GST return. Consolidated number enough, and consolidated figure state wise, rate wise. For example, Tamil Nadu 5% sales, Tamil Nadu 12% sales, Tamil Nadu 18% sales. Same way, Karnataka 18% sales, Karnataka 5% sales, Karnataka 12% sales. Like that, state wise, rate wise, consolidated figure if you give, that is more than sufficient. I repeat, sir, invoices in GSTR1, B2B you should report invoice wise. B2C large you should report invoice wise. B2C large means interstate B2C supplies value greater than 1 lakh. B2C others, consolidated state wise, rate wise you should give. Okay, that is what the concept. Clear? Now, okay, coming back to the point, sir, for whom GSTR1 is applicable? You know, GSTR1 is applicable for every registered person, including casual taxable person, but other than non-resident taxable person, because non-resident taxable person, you know, GSTR5, composition dealer GSTR5, input service distributor GSTR6, that is only for CA final, person deducting tax resource GSTR7, and person collecting tax resource GSTR8, and supplier of OID services, again this is only for CA final, GSTR5A. Okay, sir, these people will follow those normal returns whatever I have given here, but others will go with GSTR1, including casual taxable person. Okay, next. Sir, when you are supposed to file GSTR1, you cannot file GSTR1 before the completion of that particular month. So June month return, if you want to file, June month should be over, then only you can file. No sir, I want to file even before June month. There are two cases where June month, before completion of that particular tax period, return can be filed. Number one, you are cancelling your registration, or number two, you are a casual taxable person whose registration certificate validity is getting expired. For these people, even before the completion of that particular tax period, they can file GSTR1. Okay, so there is this concept all about. Next, Invoices you can keep on uploading in GSTR1 any number of times at any time, but only submission of return will be taken after the tax period is over. Uploaded invoices can be modified any number of times till the return is submitted. Next, how the invoices should be disclosed, all that we have discussed. Should I upload scanned copy of invoices? Not required. Sir, how many digits of HSN code should be given? As we have seen, relaxation with respect to HSN code in tax invoice chapter itself, the same thing applies. Due date for GSTR1, as I already discussed, if it is QRMP schemes, are 13th of the next month. In other cases, it is 11th of that next month. What is QRMP scheme? I already discussed about this. What is QRMP scheme? This is to ease the complaints burden for people whose aggregate turnover is not exceeding 5 crores. QRMP scheme has been brought into picture, but they have complicated their life. So those details I have told you already. File GSTR1 at the end of the quarter, but first 2 months file IFF, and also first 2 months pay the taxes. Okay. Next, so I have explained all the details clearly. It is a scheme where returns GSTR1 and 3B are filed quarterly, but payments are made on monthly basis, and this scheme is available GSTIN wise. So that means few GSTINs can go for QRMP schemes and few GSTINs need not go for QRMP scheme. That means I have multiple registrations in Tamil Nadu, Karnataka, Kerala, Andhra Pradesh, Telangana, like that. Then what I can do, sir, I can happily, for certain registrations I can go for QRMP schemes, for certain registrations I cannot follow, I need not follow QRMP scheme, I can happily go with monthly filing. So the only thing you should remember is this is not composition scheme. In composition scheme, everybody should go for either composition scheme or normal scheme. But here that is not the case, sir. Everybody need not go for QRMP scheme. Some registrations can go with QRMP, some registration need not go for QRMP. And sir, the facility to select and deselect this QRMP scheme option is also available for every quarter. That means this quarter you can go with QRMP, next quarter you can go for monthly filing, that next quarter you can go with QRMP, that next quarter you can go with monthly filing. So that way, sir, you can be shifting from QRMP out of QRMP, QRMP out of QRMP, like that you can keep on shifting. But this option to shift will be available to you only from first day of the second month of the preceding quarter till the last day of the first month of the relevant quarter. Sir, what is this, sir? That means simple here, please understand. Jan to March quarter, whether you want QRMP scheme or not, that purely depends. That window will open when? That window will open, sir, that window will open on the first day of the second month of the preceding quarter. The preceding quarter is November 1st. Okay, from November 1st it will open till the last day of the first month of the relevant quarter. Relevant quarter is Jan to March. So till Jan 31st. That means Jan to March, I want for that quarter QRMP or I don't want to be under QRMP. I can decide between November to January. Please understand, if you are under QRMP scheme, unless you deselect that option, it will be continued under QRMP. If you are under monthly scheme, unless you disturb that, it will be going on monthly only. Okay, so if you want to shift from monthly to quarterly, yes, you shift it, or if you want to shift from quarterly to monthly, you shift it, but unless you do something, it will not get changed. Okay, so that is what the point. So now January to March, as I told you, November to Jan. Sir, for example, April to June, the option will be open when? The option will be open from Feb to April, so on. Okay, so that way, if you are watching this, you just comment me in the chat box, or what is the window opening period for October to December quarter. If you want to go with QRMP scheme, or you come out of QRMP scheme for October to December, what is the time period when the window will be open? You just tell me. Next. So as I told you, once the option is exited, that shall remain valid for future periods also, unless you change it or you become ineligible for QRMP scheme. Understand, sir, when your aggregate turnover exceeds 5 crores in the current financial year, you will automatically become ineligible for QRMP scheme. That means QRMP option you can follow till your aggregate turnover is touching 5 crores. Okay, once your aggregate turnover crosses 5 crores, you cannot go with QRMP scheme. So that is what the point. And what is IFF? I told you already what is IFF. First 2 months you will be filing that only B2B invoices, that too not exceeding 50 lakhs. Okay, right. Next. So whatever the details you give in IFF, then automatically that will get reflected in opposite fellows 2B. Okay, that is there. This is important point for you. The registered person, when he is ineligible to file GSTR1 or IFF, sir, he is ineligible to file GSTR1 or IFF when he has not furnished. Okay, when he has not furnished spelling is wrong. So not furnished is GSTR1 or 3B. Not furnished his GSTR1 or not furnished is GSTR 1 or 3B of the previous tax period. Is GSTR 1 and 3B is like a chain. If you don't file 1, you cannot go with 3B. If you don't file that 3B, again you cannot go for the next month 1. So 1 3B, 1 3B, 1 3B, like that you should be keep on going like the chain. So if you don't file one thing, then you cannot go with the next one. Next one is what? He has not deposited the amount specified in Rule 88C and Rule 88D. See, simple. Rule 88C and 88D, if you remember, the Rule 88C is nothing but whatever the sales you are showing, in GSTR 1, sales in GSTR 1 are greater than sales in GSTR 3B. That means in GSTR 1 you are showing 100 lakh supplies, but in 3B you are showing only 10 lakhs. Further, they'll give you the notice, they will ask for the explanation. You give the explanation, proper explanation, satisfactory to the proper officer. Or if you understand, no sir, my mistake, I did the mistake. So actual liability is for 100 lakhs only. See, this is the difference, I am paying like that. You make the payments, all that, and give the challan copy, everything, and reply to the notice, then it is fine. Otherwise, either you are not giving reply, or you are giving a reply is not satisfactory, or you are becoming liable to pay tax but you have not paid tax. In such cases, sir, that people like department will stop you from filing further upcoming returns, that is GSTR 1 IFF and followingly automatically GSTR 3B. Same story for 88D also. What is 88D? Sir, whatever is there your ITC in 2B, sir, that ITC whatever you have claimed in 2B is less than, sorry, is greater than what you have claimed in 3B. So ITC what you claimed in 3B is greater than what is available in 3B. In 2B it is available. ITC whatever you have taken in 3B is greater than what is available in 2B. Sir, in 2B it is showing only 1 lakh. You have taken ITC of 10 lakhs. For that again they will give you notice, they will ask you explanation. If you have genuine reasons, give explanation. Even if you have given explanation, they are not happy, or sir, you don't have genuine reasons, actually you did a mistake there, then you make the payment of tax. If you are not making payment of tax, then they will not allow you to file the subsequent returns. Next, last one is you are not furnished your bank account details in GST in the GST portal following Rule 10A. Then also your GST return filings will be blocked, the 1 or IFF, and subsequently automatically 3B also will be blocked. Okay. And you know, obviously, sir, if any mistakes are done, in filing GSTR1, sir, we cannot revise GSTR1. We cannot file a GST revised return because this is not income tax. Please understand. We cannot file the revised return, but you can rectify the mistakes whatever has been done in the subsequent returns. That means April month, if I have done any mistakes, I can rectify them in May month return. So May month I have done any mistakes, I can rectify that in June month return. Every return will be having amendment tables within that. So whatever the mistakes you have done in the returns, that can be amended in the subsequent returns. So I repeat here, no revision of return, only rectification. For that rectification also, you have a due date here, just nothing but same like section 16 subsection due date. Okay. For any GSTR1 mistakes, you can rectify by subsequent year 30th November or actual date of filing annual return of the relevant financial year, whichever is earlier. Hope it is clear for you. Just like 16 subsection for time limit. And if you see here, sir, there are certain key points. Sir, if I am not doing any business, should I file nil return? Yes, nil return you should definitely file. That is mandatory. Okay. But if you have any outward supplies, you have any inward supplies covered under RCM, or you have any prior period amendments, or you have any credit notes or debit notes, okay, in such cases to be declared, then you cannot file the nil return. Yes, obvious. So all these things are there. Yes, next, GSTR1 invoice value, taxable value, tax amount should be rounded off to 2 decimal digits, and 3B self-assessed tax liability will be rounded off to nearest 2P. Okay. And when you are asking for cancellation of GST registration, you should file GSTR1 at least for the active period for sure. Okay, that is what the concept. And now with respect to GSTR1A, there is an amendment video. I'm just attaching to this, just watch it. The next one is with respect to returns chapter, the another amendment here, the GSTR1A. Actually, the agenda of this GSTR1A, you know, sir, how many returns are 1A, 2B, 3B, what is this? So don't feel like that. GSTR1 is all about, sir, if at all you have done any mistakes in GSTR1, that if you want to rectify, not waiting till the next GSTR1, now itself you can rectify before filing GSTR3B, so that the mistake, if at all it has an impact of reducing or increasing your liability, that can be auto populated in 3B, and accordingly for the immediate tax period 3B itself, all the mistakes will be closed. So that is the whole idea. Now that means what? To amend the details in GSTR1, you should have filed GSTR1. Without filing GSTR1, you cannot file GSTR1A. Okay. So Not only that, sir, add or amend the details, but also you can report the missed out invoices, including whatever is declared in IFF. If at all anything missed out, you can just give in GSTR 1A. Okay. Now coming to the point. Sir, this is an optional facility. First of all, we should understand this is something optional and once for a return period. See, understand, you cannot keep on filing 1A, 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 keep on doing mistakes, keep on rectifying all that. Only once you can file GSTR 1A. Okay. And this is to amend the details of GSTR 1 of the current tax period only. So whatever the mistakes you did in June month GSTR 1, that mistakes can be rectified or amended through GSTR 1A of June month. May month, April month, all that stuff you cannot do that in 1A. You can do it only in GSTR 1. Okay, that is next one. Next, the changes made through GSTR 1A will be reflected in the liability of GSTR 3B immediately for the same tax period. As I told you, in the same tax period itself, we can close the issue. Next, the ITC for the supplies declared or amended through GSTR 1A, this will be available to the customer when in the next month 2B, not in the same tax period 2B. That means June month 1 I made mistakes and I filed 1A. The details given in 1A will be available to the customer not in June 2B, it will be available in July 2B. Okay, so that is what the point. Is there any due date for filing GSTR 1A, sir? No, there is no due date at all, but this will be available for the taxpayers for filing only when the GSTR 1 on monthly basis is being filed, and from when it will open, from the due date of filing GSTR 1 or the actual date of filing, whichever is later. That means even if you have filed it before the due date also GSTR 1, only after due date of GSTR 1, that is 11th or 13th as the case may be, this will open. No, sir, I am filing the GSTR 1 itself on 15th, 16th. Then GSTR 1A will open only after the 15th or 16th. So whichever is later, due date of 1 or actual date of filing, whichever is later, from that it will get open. Okay. And it will be available till when? It will be available till the date of filing the corresponding 3B of the same tax period. Okay. And as I told, liability will be auto populated in 3B. Simple one, no complications, nothing. If you are a quarterly return and monthly payment filer, taxpayer that is under QRMP scheme, if you are under QRMP scheme, also the same thing, sir. After filing GSTR 1 quarterly basis or the due date, whichever is later, this will be open, sir, till the actual date of 3B, sir. Whatever the details reported in GSTR 1 as well as first and second month IFF also can be amended through GSTR 1A, sir. No issues at all. Next. Sir, the only drawback here is, please understand the important point. If the recipient GST number should be changed, that cannot be done through GSTR 1A. Sir, that shall be reported only through GSTR 1 of the subsequent tax period. Okay. So change in recipient's GST IN can be done only through subsequent period GSTR 1. You cannot do that by filing GSTR 1A. Okay. Fine. So this point heading, actually this should come here. Sir, how do we report invoices? Reporting of invoices. Reporting of invoices in GSTR 1A. Let us do some coloring for this. Yes. Okay, so reporting of invoices in GSTR 1A. How do you do that? Sir, it is purely whether it is B2B supply. If it is B2B supply, you know invoice wise will give. Sir, if it is B2C supply, again interstate na, sorry, intrastate na, consolidated figure you can give, just like we have seen GSTR 1 filing, same way. But intrastate, if it is intrastate, consolidated you can give. If it is interstate, like in GSTR 1 you have seen B2C large invoices 2.5 lakhs, all that. So here, if it is greater than 1 lakh, if it is greater than 1 lakh itself, what you have to do? You should give invoice wise details. If it is less than or equal to 1 lakh, then consolidated, state wise, rate wise, if you are giving, more than sufficient. Just like GSTR 1, but there B2C large concept we have 2.5 lakhs. Instead of that 2.5 lakhs, here we are having 1 lakh. Hope it is clear for you. So that is with respect to GSTR 1A. And the last amendment here is with respect to GSTR 4 due date. A very simple one. Due date of GSTR 4 is extended to, or sorry, modified to 30th June of succeeding financial year. Earlier it was 30th April. Earlier, if you remember, it was 30th April. Now they made it to 30th June. So that is another amendment, a simple one. So with this we are done with the amendments related to returns chapter. The next one, section 38, and regarding that we have already seen in ITC chapter also, like regarding GSTR 2B, whatever ITC is reflected, that can be taken as ITC, but government has the power to restrict that if you are purchasing it from person who are newly registered, or if a person who is like your seller who has not filed his GSTR 1 properly or GSTR 3B properly, taken ITC more than what is there in 2B, giving wrong information in GSTR 1 and 3B, all these things, sir, we have seen. That means the mistakes done by the supplier, you will be ineligible for taking ITC. Those provisions are not yet effective, nothing to worry, but still. So we have discussed about this in ITC chapter also. So nothing but whatever is reflected in GSTR 2B, you can happily take it as ITC. Just remember that way, that is sufficient. 2A 2B difference, let us not worry about that, not required for you. Next, GSTR 3B, section 39, we have already discussed about the due dates. So generally GSTR 3B, the due date is what? Nothing but 20th of the next month. And if at all you are under QRMP scheme, then 22nd or 24th, based upon which state you are located. All the stuff we have already discussed. And of course you have to mandatorily file nil return for GSTR 3B even if there is no business, and nil return cannot be filed if there are any outward supplies, if there are any inward supplies under RCM, or if you want to take any ITC, then you cannot file nil return. Okay, so all the stuff, yes, we have discussed. So that is GSTR 3. And options to pay tax under QRMP scheme, fixed sum method or self assessment method, as I already discussed to you. And next, interest on delay in payment of tax, that already we have discussed in that chapter. Here that is not that greatly relevant, don't worry. Here examples are there from ICA study material I have lifted. Just you can go with these examples. Just pause the video and just go with the example for 2 minutes, and then you can proceed. Already we have discussed it, nothing to worry. Right. Next, rule 88C, as I already discussed, sir, if there is any difference between GSTR 1 and 3B, GSTR 1 you are showing more sales, but GSTR 3B you are giving less sales, then there will be notice served to you. You should explain the details, all that, as I already told you while discussing GSTR 1 or IFF not allowed to be filed. That concept I have discussed with. So the basic structure, same thing applicable for rule 88D also. Here ITC reflected in 2B is less than what you have taken in 3B. Okay, so you have taken more ITC than what is there in 2B. Okay, so the same story here, what we have discussed already. Next, due dates for payment of taxes. As you all know, due date for payment of tax is also nothing but, sir, if you are not in QRMP scheme, it is linked to GSTR 3B, 20th of the next month, correct? No, suppose you are opting for QRMP scheme, first 2 months PMT 06, 25th of the next month, and then you will file 3B after the quarter is over. 22nd or 24th will be the due date. Sir, if you are a composition taxpayer, GST CMP 08, 18th of the next month after the quarter. This is very important, sir. You know, composition taxpayer will pay tax on quarterly basis. Once the quarter is over, after that 18th will be the due date after that quarter. For NRTPs, due date is linked to GSTR 5. GSTR 5, this alone little bit different one. Actually, due date we have seen only one date every case, but here NRTPs are the due date to pay taxes. That is nothing but due date to file GSTR 5 also. 20th of the next month, or 7 days. 7 days after the expiry of registration, whichever is earlier. For example, your registration is expiring on March 10th. What you should do, sir, for March 1st to 10th also you should file GSTR 5. That when you have to file, generally March GSTR 5 I should file on April 20th, but here April 20th or 7 days from the expiry of due date. 7 days from the expiry of due date is 17th March. So 20th April or 17th March, whichever is earlier. 17th March is earlier, so that will be the case. Next, tax deductor also you have already seen, GSTR 7, all that stuff, 10th of the next month, everything. Next, sir, GSTR 3B also are all the returns here under section 39, whatever we have discussed here. So all these returns, sir, no revision, only rectification is allowed. Any errors you have committed, sir, during scrutiny, audit or inspection or enforcement, you cannot say, sir, I will rectify the mistakes in the next return. Okay, like that you cannot say. You have to rectify it on your own, then only the amendment tables can be used. But if the department is identifying, then you should be like facing the consequences. But what is the time limit for rectifying the mistakes whatever there in GSTR 3B? Same like 16 subsection 4, or same like GSTR 1, whatever we have seen. Sir, 30th November of the succeeding financial year or actual date of filing annual return of the relevant financial year, whichever is earlier. Okay, so the due dates, everything given in table form here. So So if you see this table, nothing but, sir, GSTR1 due dates we have already discussed, 3B due dates we have already discussed, GSTR4 is yearly to be filed by actually composition dealer. And you know, see, first of all, there is one small difference here, or small change. Due date for GSTR for composition dealer is 30th April earlier. Now they made it 30th June of the succeeding financial year. So here alone you please be very careful. So this GSTR 4 due date is 30th June now. And GST CMP 8 we have discussed quarterly, 18th of the succeeding month after the quarter is over. GSTR 5 we discussed for NRTPs, all that the due date is already discussed. And GSTR 5A we have not seen yet. Sir, this is monthly return which has to be filed by person who is supplying online money gaming from a place outside India to place to a person in India. This is important for you, so please remember this carefully. Okay, and so that means example, online money gaming, let us assume Rummy Circle from outside India to a person in India, or supplier of OIDR services from a place outside India to a person who is not this non-taxable online recipient or any registered person. So from outside India to NTO or any registered person. So OIDR service provider. For them 20th of the next month. GSTR 5A we have not yet seen due date anywhere else. So this is the due date. Next, input service distributor every month 13th of the next month, and nil return is also mandatory in case of you are an input service distributor. GSTR 8 we have seen TDS and TCS people 10th of the next month. GSTR 9 annual return. So annual return whatever has to be filed. See, every person to whom GSTR 1 and 3B is applicable, for them GSTR 9 is also applicable, except casual taxable person. Except casual taxable person. For casual taxable person, GSTR 1 and 3B are applicable, but not GSTR 9. Due date will be 31st December of the succeeding financial year. Okay. Next, GSTR 9A, same 31st December of the succeeding financial year for composition dealer. GSTR 9C on yearly basis reconciliation statement whose aggregate turnover is exceeding 5 crores. And here, yes, one point please understand, GSTR 9, if it is aggregate turnover is less than or equal to 2 crores now, then it is optional. But if it is greater than 2 crores, now it is mandatory. Okay, so that is what the point here. Okay, fine. So GSTR 9C, that is reconciliation statement whose aggregate turnover is exceeding 5 crores, for them only this is applicable. So for whose aggregate turnover is exceeding 5 crores, they should file GSTR 9 and 9C both. Okay, so that is what the concept. Okay, next, so GSTR 9C will be self-certified. Okay, this is not applicable for GSTR 9C is not applicable for central, state government departments or local authorities which are audited by Comptroller and Auditor General of India or auditors appointed under any law. For them, this 9C is not applicable. Next, GSTR 10 is nothing but final return whose registration is being cancelled or surrendered should file the return, final return GSTR 10 within 3 months from the date of cancellation or order of cancellation, whichever is later. For example, let us assume on 10th December you are getting the order of cancellation. This is the order, but effective date is 1st September effective. So which is later 10th December. From this you should take 3 months. Okay, within that GSTR 10 has to be filed. Next, GSTR 11 is nothing but refund claim for people who are holding UIN and all the stuff. So they can use the form GSTR 11 whenever they want to have this refund. They can apply through GSTR 11 and get the refund. Next, first return. If you remember, first return is a concept where you are giving the revised tax invoices. If you remember, from the effective date of registration till the date of grant of registration certificate, whatever the supplies are made, for those supplies you can give the revised tax invoices, and those revised tax invoices will be given in first return. That is what the concept. Okay. Next, if you are defaulting in return filing all the stuff, so there are late fees here. So GSTR 1 and 3B, if you see the latest late fees are nothing but based on aggregate turnover. Sir, if your aggregate turnover is 0 to 1.5 crores, 50 rupees per day, and that means 25 CGST, 25 SGST, or 2000, 1000 plus 1000, whichever is less. Here daily fees is same. Okay, daily fees is same no matter your aggregate turnover is 0 to 1.5 crores or 1.5 crores to 5 crores or greater than 5 crores. Daily fees is same, only the late fees is changing, 2000, 5000 and 10,000 like that. But if it is altogether a nil return, so see, understand, if altogether it is a nil return, sir, it is 20 rupees per day. Daily late fees also will change and maximum late fees will be 500, whichever is less. Okay, so that is what the concept. So I repeat, daily late fees if nil return 20 rupees per day or 500, whichever is less. Okay, 20 rupees means 10 plus 10, 500 means 250 plus 250. Here also 50 rupees per day. Daily limits are same no matter your aggregate turnover is 0 to 1.5, 1.5 to 5 crore or greater than 5 crore, but maximum late fees is changing, 2000, 5000 and 10,000. And imagine same thing for GSTR 4. GSTR 4 means composition dealer whose aggregate turnover does not exceed 1.5 crores. So this provision and this provision will be applicable for composition dealer. These 2 points will not apply. Okay, so that is what the concept. So for GSTR 4, hope you are clear with the late fees. Here it is there in the next page. You can just go through this. Okay, so GSTR 4, sir, obviously his aggregate turnover is not exceeding 1.5 crores. So per day you can understand 50 rupees or 2000, whichever is less. But sir, if it is a nil return, what will happen? 20 rupees per day or 500, whichever is less, as we have already discussed. Next, sir, maximum late fees with respect to annual return filing. Sir, annual return filing GSTR 9 we are talking about. Sir, GSTR 9 the late fees is, please understand, if your aggregate turnover is up to 5 crores, that means 0 to 5 crores or 5 to 20 crores, here greater than 20 crores. Okay, in that case if you understand, sir, in that case, sir, daily limit if you see 50 rupees, 100 rupees, 200 rupees, it is increasing, correct? And maximum late fees if you see 0.04%, 0.04%, 0.5% of the turnover in the state. That is very important here. It is not aggregate turnover, turnover in the state, because I have Tamil Nadu registration, Karnataka registration, Andhra registration also. Andhra, Karnataka I filed it on time, but Tamil Nadu I am filing it late. So on Tamil Nadu turnover only I will calculate maximum late fees, correct? Why will I consider aggregate turnover? So that is what the concept. So I repeat here, based on aggregate turnover, the daily late fees is also changing and maximum late fees also changing. Okay, so please be careful with that. 0.04%, 0.04%, 0.5%. So comparing all these things. So the late fees are, obviously you should remember, there is no other choice. GSTR 7 late fees also has been given here, sir, other than nil return, because if it is nil return, that late fees can be waived off. So 50 rupees per day, 25 plus 25, and 2000 rupees, 1000 plus 1000, whichever is less. GSTR 8 late fees we have seen already in e-commerce transaction. What chapter? E-commerce transactions chapter. If you want, here also in the book you can just write down GSTR late fees, GSTR 8 late fees. Next, the last concept, the theoretical concept, GST practitioner. Sir, how can become a GST practitioner? All the stuff you can just go through that once. Nothing important or greatly relevant here. You should be an Indian citizen to get the certificate, and you should be a sound mind, not adjudicated as an insolvent, or not convicted by any competent court. And there are additional conditions, just like your residential status. You see basic conditions and additional conditions. Here there are additional conditions, like you should be a retired commercial tax officer or a CBIC officer who has worked for at least 2 years under Group B as a Group B gazetted officer, or you should be enrolled as a sales tax practitioner earlier before GST for 5 years, or a service tax return preparer, okay, for not less than 5 years. Sir, no sir, I am a Gen Z kid, sir, recently born, sir. Then you should have at least acquired any prescribed qualifications mentioned below, any graduation course which is recognized by Indian universities or foreign universities, okay, and any other examination which is recommended by the GST Council and notified by the government, and or at least, sir, CA or CMA or CS final examination. If you are clear, then for you this GST practitioner certificate will be given. And if GST practitioner certificate has been given, like, you can undertake all these things. You can act as an authorized representative for the client till the tribunal level. This is one advantage what I feel as a GST practitioner. Sir, you can represent the client till the tribunal level, where even chartered accountants can go and represent the client only till the tribunal level. You are able to do that, okay. And obvious remaining things are obvious, sir. You can file his returns, file refund application, file the registration application, surrender the registration, what not, everything you can do, okay. So that is obvious. Okay, so there are other points you can just go through, and there is a procedure also, not that great one. And information written, sir, there is something called information written which has to be furnished by the prescribed people, the authorities who are required to furnish information written alone. You remember, taxable persons, state government authorities which are responsible for collecting the taxes, central government authorities which are responsible for collecting the excise duty, all that, income tax authority, banking company, electricity boards, registrar, local authorities registered within the meaning of Companies Act, and registration authority with respect to motor vehicles. All this, these people has to give information written to GST department. If they are not doing that, what will happen, sir? These people also has to give the information written. If they are not doing that, there is a penalty, 100 rupees per day if there is delay in filing that return, or 5000 rupees, whichever is less. So that will be the penalty, okay. So this is the story of returns chapter. So friends, hope you have enjoyed watching this marathon part 2, and please understand, yes, you are going through so much of stress for your exams, all this stuff, but please understand, you should definitely have belief in yourself. You should have faith in yourself, no matter what others are speaking. So trust your talent, believe in yourself, always be positive. Wishing you all the very best for your exams. This is your Mr. GST signing off. Jai Hind.